Thanks, welcome back. Friends, by this 1st of July, our ICI Institute of Chartered Accountants is entering the 75th year of existence. And the legacy we have, we can't comparable to any other institute. That kind of proud we all have. We have 167 branches, 44 overseas chapters, 34 outside representative offices, and more than 8 lakh students. And we are almost now around 4 lakh CA numbers. And the responsibility on our shoulder is also huge. So to understand all of these and to improve the quality among the stakeholders, today we are discussing very specifically about the audit of insurance company. This year, after taking the charge at WIC under the we have decided to sector-specific program more in compared to so we can have value addition amongst all our members. So in this series, and today we are very fortunate, we have presence of chairman with us. So I like to welcome him for his address. Welcome address. Good morning, everyone. Warm welcome to beautiful conference today, beautiful event today. Why am I saying this beautiful is we've all come out of bank audit season, so you must have had a hard time or a tough time doing all of these quick certifications, quick audits, and everything that you have, under whatever pressure, high deadlines, and everything that you've done. I think that really augments the performance. And now that we are out, now we are exploring some wonderful opportunity. I think one of the sectors that demands that needs a lot of attention. Unfortunately, we've not been able to do that. Is this sector called insurance? And today, I'm really, it feels amazing and privileged to have Rajive Kumaraswami with us, a chartered accountant, who is also an MD and CEO of professionally run organization, Magma General Insurance. I think you know of us for Rajive. Thank you for taking our time. I'm very pleased with every interaction that I've had with him over this period. There's only one and only one thing that comes out is we are not really aware of opportunities that are live, unripe in insurance sector. Today, when he tells me that there is an IIT center who has done, who's been talking like no one has ever done before, I think we are undermining the opportunities, we are undermining the potential of this sector for us as chartered accountants. And therefore, this is just the start. I think for the first time we're having this kind of event, but this is just the start of this. We would like to host more and more. And with people like Rajive here, people throughout the year, we've got a wonderful lineup of speakers today, CFOs, CROs, the Chief Risk Compliance Officers, also technical officers, people who really decide what can be the premium, while how all of this will be structured. I think we have a wonderful all-round idea about insurance as a sector, and then we also have an actuarial who will also tell us that hey, look, there is a big gap, and let us as chartered accountants do something about it. So I think with all of this, we'll have a wonderful day today. I'm sure we'll have a great time. People who are joining us virtually, We would let me tell you, sir, from as per the new CP guidelines, there are no CPRs for virtual attendance. But yes, since this was a very, very important CP, based on the feedback and request that we've got, we rolled out this virtual setup so that you all can hear these programs across the state, not across the country, people are joining us. So really thankful to each one of you. But yes, let me make an appeal. By CI and must wonderfully networking zone in it. A lot of requests have come in just 2 days. We've received a lot of requests for a lot of partnership, a lot of strategic tie-ups, networks, and requirement of people in specialized in a particular sector. Please look at it, see if it makes sense to you, reach out to them and connect with them, see if there can be a synergy. And if you are someone who needs anything, please write back to us. We'll be happy to list them in this zone or networking zone. Very soon we'll be evolving them into a portal so that all of us can really get the best out of this networking zone in this entire region, the Western India regional council. Thank you very much. Have a great day.
Thank you, Chairman, sir. Now it's time to introduce our guest of this program for his keynote address also, CA Rajive Kumaraswami, sir. It's my proud to introduce such a great personality, a fellow member of the Institute of Chartered Accountants of India and associate member of the Institute of Post Accountants of India. Rajiv sir has a total work of experience of 28 years in the financial service sector. Since the opening of the insurance sector for private players, Rajiv sir has been an integral part of the industry, discharging various roles. Before joining Magma SBI General Insurance Company Limited in 2016 as Managing Director and CEO, Rajiv sir was one of the founder members of the ICICI Lombard General Insurance, where he was the head of the corporate sector and chief risk officer. He has also been the chief representative of Core SE India License Office from 2012 to 2016. Rajiv sir started his career with ICICI Limited in the project financing division in 1995. I request to have a big round of applause. So I request Chairman of WRC to present the memento to our guests, CA Rajive Kumaraswami.
Good morning to you all. Thank you, Kartikey, and to Saurabh for inviting me. It's a matter of great honor that after close to 28 years of qualifying, I'm getting an opportunity to speak at the Institute. A small way of coming back and giving back. But before I start on insurance, what I'd like to share is, I think this is a profession, a grounding, which provides such all-round grooming of a profession, whether it's the technical understanding of a vast number of subjects, whether it's accounting, taxation, law, operations, and I don't know what the current curriculum is, because when I qualified, we had 4 papers, 2 groups for intermediate, 2 groups for final. The grounding that you get doing audits, the responsibility that you have, dealing with CFOs at such an early age, the power that you get, but the humility that you need to have to understand that you need to wield that power responsibly. And we used to joke about it, and I don't know how many of you know, we had these 3 degrees, ICWA, CS, and CA. And it was such a difficult, program. And I was asking Arpit as we were walking up, what's the pass percentage now? He said it's now in double digit. And when I passed out, we used to be in probably less than 5 to maybe 7% when we had a good year. So we used to say ICWA is invited to come and write again. CS used to become soon and CA used to become again. So that was the fear psychosis with which, we used to approach these exams. But I think on a serious note, what this does is teaches resilience. To study so hard, and unfortunately, if you don't get to roll up your sleeve and again study while you're doing audit courses, I think it creates huge amount of resilience. The humility that you are filing papers, indexing it, putting separators, keeps you grounded. And I think as you grow as professionals, I think those are learnings that you should ingrain in your foundation because there is no substitute for one, right? And what Saurabh mentioned in terms of my background, and I'm saying this with all humility, I have not done a single course on insurance. There is a AAA institute who offer fellow programs, etc., etc. It is all on the ground learning that I had. For 7 years, I was doing project financing. I did NPA resolution when the NCLT was not there and we used to go and attend VFR hearings, and those hearings used to take so long and it was so boring to get any resolution. I said insurance is opening up in 2000. The ICSI group said let's start Prudential for life and Lombard for non-life. When I got into the non-life sector, I started doing sales. I was doing corporate sales in the Delhi regional office, going to corporate customers, trying to understand their insurance needs, providing solutions. 2004, I got transferred from Delhi to Bombay, and from selling insurance, I was given the responsibility of reinsurance. I mean, you don't understand the eye of insurance, and then they are told to do reinsurance. And reinsurance is such a complex subject. And again, no courses, you roll up your sleeve, you talk to people, you interact, and it's these kind of forums where you exchange ideas, you talk to brokers, you talk to reinsurers, you read a lot, and that's the way you enhance your knowledge. In ICSI Lombard, I did underwriting, I did claims, I was the designated chief risk officer. I finally left as the head of the corporate center in 2012. 2012 to 2016, I helped Scott set up the foreign reinsurance branch. As you might know that a lot of the foreign reinsurers and foreign banks have the ability to set up branch offices, so I helped them set up their license. But like you typically are used to empowerment, I somehow felt the empowerment working for a foreign institution was not as much as I would have liked. So that's when I joined Magma, which is a group promoted by Magma, which is an NBFC and ACI, which is Germany's third largest group. Today, as a company, we are backed by the Poonawalla Group. They are holding the majority stake. I'm in my 7th year here as the MD CEO. And there is so much excitement in the sector because it's a very, very happening sector. Right? So, to the young people, to the not so young, I think there is no substitute to hard work. I think the foundation that the CA program provides through training and through education, I think you put your mind and heart to it, there is nothing which is not achievable. Right? Coming to insurance, very, very interesting sector. If you look at last fiscal, and I'll be focusing more on the general insurance or what is called the non-life sector. I'm not covering the life insurance sector, which is a much bigger sector in India. Whereas in the other parts of the world, the general insurance sector tends to be much bigger than the life insurance sector. If you look at the general insurance sector in India, last fiscal we closed the year with about 2,57,000 crores of premium. An industry which grew at about 16.5% growth. Just to give you a perspective, the industry today is 4 government-owned companies, 2 specialized insurers, one who writes only crop, one which only has export credit insurance. We have today 21 private sector companies, either 100% owned or with foreign partners. A sector which allows 74% FDI. It was 26%, which moved up to 49% when the insurance bill passed, and more recently the sector now allows 74% FDI. We also have an interesting play of what are called standalone health insurers. So we have 5 standalone health insurance companies also in this industry. As we speak, we have a regulator who feels that the number of players are not enough. And we are looking at 20 more players in different stages of licensing coming into the industry. We recently had two companies, actually three who got licenses. One entity called Magma, who got into general insurance, and two on the life insurance, credit access, and ACO, who had a general insurance license, who's now also coming to life insurance. Now, if you look at the total capital that this industry deploys, we have slightly less than about 1 lakh crores, maybe 97,000 crores of capital infused in this industry. And investment book, my sense is close to about 5 trillion. So 5 lakh crores of investments that we make, and investments from a sector regulator are clearly earmarked. So where you can invest as a sector is clearly defined by the regulator, because you are not only dealing with, say, shareholders' capital, but most importantly, you are dealing with policyholders' funds. So the regulator is very clear that you need to deploy these funds responsibly. So if you look at some of the aspects in terms of what we do as a sector in terms of nation building, I would say out of that 5 trillion of investments, to my mind, almost 2.5 lakh crores would be deployed in government securities and state development loans. So we are, investing in a huge amount in government securities, because we want to make sure that, long duration, or depending on where we are on the interest rate cycle, policyholders' funds are deployed in a responsible manner. Now, what does this sector do? And unfortunately, I think we as an industry have not done enough in terms of talking about what service we provide to the consumer, whether it's a retail consumer, whether it's a corporate customer. I think we are here for unfortunate events that happen in your life, whether it's your car which is getting damaged, whether it's a home which gets destroyed, whether it's a health event which happens, you lose, unfortunately, a near or dear one, insurance steps in. So when we come in and we contract, it's a promise to deliver a service on the happening of an event. Right? Now, if you look at what has happened, maybe in the last decade or 15 years, the industry has paid claims when the Gujarat earthquake happened. The industry has paid massive amount of claims when the Mumbai floods happened. When the Kerala floods happened, we had the Tamil Nadu floods, and we are talking about all these events having claim payouts of close to 5,000, 7,000 crores. So we are not talking about small sums of money. And what you need to understand is that in a flood event, paying the claim is not easy, which means that our claim surveyors need to go in the back and beyond in deep waters, trying to assess what the damage is. There tends to be in catastrophic events a paucity of surveyors. So how do you ensure that the policyholder is put back to their own, the same position before the loss event happens? Some of the other anecdotes which maybe many of you may not be aware of is how the industry has responded in extreme events, right? When the World Trade Center event happened in America, most of the foreign reinsurers decided to withdraw reinsurance capacity for terrorism risks in the Indian market. So how did the industry respond? GIC, which is classified as a national reinsurer, along with the entire industry, put together a capacity of 200 crores per risk. And over the years, we've been able to create capacity in the Indian market to provide terrorism cover for all Indian risks, whether it's residential homes, whether it's industrial properties, whether it's hotels, whether it's commercial complexes. And through this pooling mechanism of the industry, today the terrorism pool capacity that exists is about 2,000 crores per risk. So we've, over the years, created self-reliance as an industry to make sure that we respond to the needs of the industry. If you look at what happened most recently, the Russia-Ukraine crisis, right? We had sanctions issued by a lot of the European and the American entities on Russian shipments. Now, if we look at large shipments, which are the marine shipments that happen, most insurance companies do not have capacity which is there in their own balance sheet to cover these shipments. So we rely on foreign reinsurance capacity. Now, typically, if you look at most of the large reinsurers, I mean, if you look at the top five, you've got Munich, Swiss, Scott, Gentry, these are all European and American capacity. So all of them pulled back the capacity. And again, the Indian market, with the support of GIC and the Indian market, came and created a 500 crore four bottom limit capacity for all fertilizer shipments, all pharmacy shipments that the industry needed. So these are things which don't come out in the public domain. We do a lot as an industry, but unfortunately, it's that one-off claim which gets repudiated, some fraud that has happened, which unfortunately gets highlighted. Similarly, there is a pool which is there for nuclear risk in the Indian. I don't know how many of you knew about these. This is again something which is under the aegis of GIC and the Indian market. Again, companies putting 5 crores, 10 crores, pooling capacity and ensuring that nuclear plants in the country have cover to the extent of certain capacity. And these pooling solutions over a period of time actually help create self-resilience in the Indian market. I think one aspect which I would definitely want to talk about is what humanity went through and what India went through during the COVID crisis. The insurance industry, especially on health claims, over the 2-3 cycles of COVID, second wave, first wave, second wave, we have paid 29,000 crores of claims on account of hospitalizations that are happening on account of COVID. We had a crisis where there were no beds available. The regulator stepped in with the industry and said, you need to make sure that you give approvals for treatment on a cashless basis within 2 hours. Because we need to make sure that the beds are made available to people who are waiting outside in general wards or need, immediate care. So again, I think the fault lies with us as an industry that we don't talk about a lot of these things that we do. We are here to serve, and I think we do an excellent job. The total complaints, whether on policies or claims, are 65,000, which means that we have 0.02 complaints per policy that we issue, per 100,000 policies. So I think we need to talk more as an industry about the good work that we do as an industry. But I thought this is a good platform to reach out to people who see those people who are attending online to understand that we are here to put you back to the same position in the event after, say, an unfortunate event happens. So what is the sector actually comprised of? I mean, we try and simplify it as a company into 4 broad product segments. So health is the largest segment, which is very interesting. I think before COVID, motor used to be the largest segment. I think the COVID event has clearly taught each one of us, and I'd urge all of you to actually look at buying your own health insurance. People feel that you need to cover yourself because when an event happens, I think the way the medical inflation is growing, even a 5 lakh cover to my mind is inadequate. So please, even if you are covered by your employer, please understand that once you superannuate, you are 58, you are 60, it's highly unlikely that you will get a health insurance from someone at that age. Buy a parallel and keep it going when you're young and you're healthy, because that's the time you will find insurers wanting to come into cover. So coming back, health close to about 97,500 crore, split into government schemes, group health schemes, and retail schemes. Motor, roughly about 80,000 crores. If you look at the commercial business, which is the factory insurances, the liability insurances, the transit, the engineering risk, that would be about another 46,000 crores. And then there is the government scheme, which is the Pradhan Mantri Fasal Bima Yojana, which is another 32,000 crores. Now that tends to go up, go down, because sometimes we find that state governments feel that they would like to run it under the trust scheme. They don't want to go through the internal, so there tends to be some bit of volatility. So a huge segment, and as I said, in the last year, the industry grown by about 16.5%. And even in the COVID period, this was an industry, mind you, that did not reach out to the industry and to the government and say that give me SOPs. Because we knew that you had banks, you had various industries going out and saying we need subsidies, we need reliefs, our back is broken. Despite paying 29,000 crores of claim, though we had some benefit on motor because there were fewer cars running on the road, but we did not, go and ask the government that we need reliefs, and consequent to that, the industry as a whole made a loss in the year 2022. This year's numbers are still to be announced. What we are going through is a very interesting phase. If you look at the overall distribution, the level of digitization that is happening is exponential. I think the new millennium want to experience less friction when they are buying a policy. When they get claims, they want instant gratification. So from a distribution point of view, you've got agents, you've got OEM partners where you've got dealerships who sell insurance. You've got banks who provide bank insurance and they offer products to you. You've got a lot of web aggregators where you can go and buy policies online. It could be Turtlement, it could be Policy Bazaar. Interestingly, one segment which is focused both from a banking perspective, which is the SME sector, but we are finding of late many digital players coming, creating broking and digital platforms to cater to the needs of insurance for the SMEs. So you've got Pascare, you've got Plum, you've got Loop. You have a lot of these digital players who are coming in, and these players have the ability to attract private equity, venture capital investments. So there's a very interesting play that is happening. Today, if you look at the industry, I would say there are about 600 odd brokers. About 20 So if you look at the initial years from an IRDA point of view, to ensure that policyholders' protection was topmost in their mind, their focus was more on regulation for an orderly growth of the market to make sure that policyholders' interests are not compromised. We have very strict solvency norms which are operating in India, which is equivalent to say, since we talked about bank audits, things like capital adequacy that you have in banks. In insurance, we have a concept of solvency. Right? So how much capital do you hold for the business that you underwrite in a particular sector? We've been blessed now with a new chairman who's taken over as the IRDA chairman, and rightly so, his focus now from regulation is focusing more on development. So his vision for the industry, and he's been chasing, the entire industry captains to say that his vision is 2047 insurance for all, which means that every Indian should have a health insurance, a home insurance, a term insurance, and a personal accident insurance. So he has, unveiled a huge number of reforms for the sector, whether it is on product liberalization, because earlier we had a concept that before you launch a product, you need to wait for the regulator to approve it. So it was a whole concept of use and file. Now they are saying you just file the product and you can go ahead and use it, right? So the onus on the sector to ensure that we file products which are responsible, which cater to the policyholders, and we are not taking the customers for the ride. The onus on us is huge, and that's the fate that the regulator has played on us. On distribution, huge amount of liberalization. Earlier, one bank could have 3 general, 3 life, and 3 health partners. He has expanded that to 9. You had the whole concept of insurance marketing firms where each insurance IMF could have 3 insurance partners. He's expanded that to 9. If you look at some of the reforms that have happened on the capital side, insurance companies like banks who raise perpetual debt, we can also raise subordinated debt. Earlier, this was a limit which was kept at about 25% of capital and free reserves, or 25% of net, subject to a limit of 50% of net worth. He's expanded that to 50% because his focus is on driving growth, which means he understands that the industry would need capital. So he's easing the capital regulations to make sure that the industry is able to attract far more capital. If you look at the registration regulation, earlier what used to happen is any shareholder who was holding 10% in an equity of an insurance company used to be classified as a promoter, and there were a lot of private equity and foreign investors who did not want to take on a promoter obligation but wanted to come in as an investor. He's liberalized those norms and said that the limit will now be aligned with what SEBI provides, where up to 25% you get classified as an investor. So the ability of, say, private equity investors to come and pump in capital, and we've seen it, you might have read it, you have a huge number of private equity investors investing in health insurance and a lot of the digital players. We've got people like Acco, GoDigit. We also had some interest with private equity investors coming in investing. So the journey that the industry will go through is attracting private capital in an unlisted space. As we generate scale, listing will happen. So if you look at today, the listed space on the general insurance side, we've only got New India, which is the market leader at 16%, which is owned by government, and ICICI, which is the largest private sector company who's listed, and then you've got GIC, who's the national insurer. Well, on the life side, I think you've got more companies like HDFC, ICICI, SBI Life. So I think as the industry evolves and grows and companies generate scale, there would be need to get in at least another 2 trillion or 2 lakh crores of capital, which means that the investment book that the industry would have would be close to 10 lakh to 12 lakh crores. So I think there is an explosion waiting to happen. And if you look at, in our internal nomination and remuneration committee, which discusses people-related issues, what is the topmost thing? It is the war on talent. And it's this fraternity and the other fraternity which is there to fill up. And I was telling Arpit that I find it extremely difficult to, attract chartered accountants into the company. And anecdotally, when Arpit invited me saying, Rajive, why don't you come and speak at the institute? I said, okay, I asked my HR function, can you tell me how many qualified chartered accountants do we have in the company? Because at my position, I'm only looking at competence, right? The degree over a period of time, blurs. It's the experience, it's the foundation and it's the experience that you gain over a period of time. I was personally surprised that we have between 30 to 35 chartered accountants. Only a very base of less than 2,000 people, right? And you would know that in a sales-led organization with 80% of our business coming from retail distribution, we have more field executives who are not likely to be chartered accountants. So if you look at aspects and without demeaning, say a distribution function, the intellectual quotient that is required, I would say 30 chartered accountants on a base of 2000 is quite meaningful. I went in deeper and said, which are the functions where I have chartered accountants? And then it resonated to me that when we had conversations with some private equity investors and the senior leadership team is introducing themselves, my technical officer normally jokes and says, my name is Amit Bhandari, but I'm not a chartered accountant. Right? Because I'm a CA, my deputy CEO is a CA, my CFO is a CA, my head of internal audit is a CA, my reinsurance head is a CA, my head of central operations is a chartered accountant. I have people in the actuarial function, as Kartikey was mentioning, not my head of not the appointed actuary, but I have team members who are there in the actuarial function, who are qualified actuaries and chartered accountants. I have people in the underwriting function. So I think the role that a chartered accountant can play with the grounding, the understanding of numbers, the understanding of balance sheet, and the pure common sense that we have, I think there is no role in an insurance company that we can understand. I mean, to my mind, one, the sheer growth the sector provides, some of the regulatory changes which are on the anvil, right? And Kartik would know about this, that we've got an IFRS implementation round the corner. We've got a risk-based solvency implementation which is round the corner. We have a risk-based supervision regulation which is round the corner. So I think the opportunities for chartered accountants, I mean, audit is a small part, right? I mean, you look at the investment books, the opportunities to be on the investment scene is massive. It could be underwriting, it could be claims, it could be MIs. I mean, my colleague who helps me run the CEO's office, she's a chartered accountant. My FP&A head is a chartered accountant. So I think the role, I think it's incumbent on us that we put in the effort. I mean, keep reading, maybe enroll on courses. While I didn't enroll on any course, I mean, I'm sure some technical understanding on subjects will definitely help. I call myself a practitioner. I mean, I don't profess that I'm an expert in insurance. I'm a practitioner. I learn on the job. I learn through case studies. I learn through examples of what other insurance companies do. But what I'll summarize is, I think it's an exciting sector. There's lots happening. There is tremendous growth. We will attract capital. It's not just the insurance companies, it's the entire ecosystem, whether it's the brokers, whether it's surveyors. There are immense opportunities for chartered accountants. So I would, I have promised Arpit that we will engage as a company and try and do as much as we could to elevate the sector and bring it to where it, to my mind, rightfully deserves. I've been a banker. As I said, I think this is a far more complex subject. And we need to get more intellect into the industry to get this to its rightful place. So thank you so much for giving this opportunity.
What a wonderful session we have with Rajive sir. Let's have a big round of applause from. Anyone have any question? Please raise your hand and you can ask that. I think sir have covered in a very smooth way, so we do not have any question. Friends, we have one announcement. We have virtual audience also with us. So we have received more than 70 plus vacancy in the insurance sector for chartered accountants. So anyone want to apply over there, they can directly share their CV at wrc.connect@ici.in. We'll share to the industry immediately. And going towards the vote of thanks, sir, really is honor and privilege me to propose a well-deserved vote of thanks for such a wonderful session where you have discussed the future of insurance sector and ecosystem of insurance and role of CA over there. Really a highly insightful and great in terms of knowledge sharing. Big round of applause for sir. So moving towards now our first technical session, that is overview of audit in insurance sector. I like to welcome our speaker, CA Jayesh Parmar sir. On the dais. I request CA Vishal Rathi to introduce our speaker, Jayesh.
Good morning, all. So it's my privilege to introduce Mr. Jayesh Parmar. Jayesh Parmar. So Jayesh is partner in the audit and assurance practice for 6 years, with more than 2 decades of audit experience in Deloitte and its network firms. He has over 15 years of audit experience of life and general insurance companies in India. He is a fellow member of Institute of Chartered Accountants of India. Jayesh has led and managed engagement covering housing finance, mutual fund, insurance companies, asset management, professional clearing member, other financial intermediaries, and medium-sized service entities. He has extensive experience in statutory audit and tax audits. He has also worked on many due diligence assignments in addition to the all these activities. Jayesh was on deputation to the USA and Canadian Deloitte practice, where he was involved with audit of service sector clients. Jayesh has been handling audits of IFRS assignment and group reporting for Deloitte member firms. He has also assisted in annual technical evaluation on annual report of life and general insurance companies of ICAI. Among the entities he has audited in the financial sector are HDFC Limited, SBI Life Insurance, Aditya Birla Sun Life Insurance, HDFC Standard Life, Max Life, Tata AIA, Tata AIG General, HDFC Ergo, Tata Securities, Tata Motor Broking and Advisory Services, HDFC Mutual Fund, and list goes on. So it's our privilege to have Jayesh over here to share his experience with us. Please welcome him. Thank you, sir.
Now I request Rajive sir to present memento to Jayesh Parmar sir, and I request chairman to join this.
Friends, let me tell you, in just 2 days short notice, he has been actually Sandeep Pilgaonkar sir was supposed to be here. He's traveling for some urgent work, and only a small call we made, and I think he's made himself available. And a huge round of applause for thank you very much, sir.
The time is going to presentation, and we'd like to understand if there's anybody from insurance company or doing insurance audits. You are from the audit firm, doing the audit of insurance. Okay, that's great. And please, then you are, I can connect with you because otherwise, first time understanding insurance is a little bit complicated. Because there are a lot of technical things that we need to have understanding of. But my presentation tries to be a little bit more generic so that people understand it better. So lastly, I covered the part connected to the audits of the insurance companies in India. As you mentioned, the sector has actually been growing, especially after the privatization that started somewhere in 2000. Where we had less than 10 entities earlier, but now at least more than 50 entities are there in the insurance sector. Maybe 50% in life, 50% in non-life. So at least the sector is been growing, and we see much more entities coming to the sector now. And as also mentioned that there's a lot of emphasis in terms of penetration. There are a lot of targets, and I understand that each insurance company a life as well as a non-life insurance company is given a target to manage a state. And in that state, they'll do activities connected with making people aware of the insurance and which will help the penetration. So all the companies in India, insurance companies, they've been given one state, one life and one non-life, will be managing one state in India. So for example, my understanding from Maharashtra is Tata AIG and one more life insurance company is taking care of Maharashtra. So they'll be actually driving or at least doing some initiatives around maybe people getting more understanding and then the number of people taking the covers of the insurance, maybe life as well as non-life, we could see much more increase. So as he said that there is a lot of emphasis by the new chairman of the IIT. I mean, there are lot many changes that we are currently seeing, and we probably expect much more changes. One of the large changes that has been happening in the current period is around also on the expense of management, where there were rules related to the caps the company can incur expense. So those caps are there, but there were caps around the commissions also, so how much commission the company can pay to the agent, brokers and all that. So those limits on the commissions have been removed. The company does not have a separate limit for commission and expense of management. So now expense of management limit will take care of the commission. So there is no sub limit for the commissions. So far as company has made a board policy and how it's going to be paying the agents and the brokers and those individuals. So I mean, we're seeing a lot of changes coming up in the current regulatory environment to facilitate this particular more penetration in the sector. So as my experience largely into the audits and more in terms of the statutory audits, maybe I'll have more coverage around that matter in my audits because the subject is little quite vast and maybe an hour may not be sufficient enough to go into the depths, but I'll try and cover at least more generic things around getting the basic understanding of the audits of the insurance company. So lastly, the presentation I covered the regulatory framework that is applicable. And now mostly people doing the audits, they may be more connected with the company side or maybe the rules around the company side. But while we do the audit of insurance companies, it's a whole huge sort of regulatory understanding that maybe as an auditor or as a company, we need to have about the regulations that are applicable. So there's the Insurance Act 1938, which has been updated till 2021. So that's the act. Plus there are Insurance ID Act also 1999, which has been updated. But ID Act is more on terms of the functioning of the IRDA, not so relevant for us in terms of the audit of insurance companies. There are a whole set of regulations which keep coming on a regular basis from the IRDA. So these regulations are required that we are aware of those regulations. Plus there are notifications, guidelines, orders. These are issued over a period of time by the IRDA, and good thing is, if you go to the IRDA website, you can get all of these at a single place, so we don't have to worry about going to different places to understand what are the regulatory requirements that one needs to be aware of. So what I'm trying to say is there are a lot of regulations that we need to be aware of, and after working for more than 15 years also, I still have to go back to the IRDA website to understand whether any changes are there or any amendments are there. So, I mean, one has to be connected on a more regular basis. The other thing that we'll cover is on the financial statement. Looking at a financial statement of the insurance company and any other company, will see a great amount of difference. And first of all, people may have difficulty understanding as to what items are what in the insurance companies. There are formats specified by the regulator. There's a separate format for a life insurance company, separate format for a non-life insurance company. So those will touch upon in the finance sector because there are accounting standards also which are applicable to normal companies, but there are certain accounting standards which are not applicable to the insurance company. And there are specific guidelines around the accounting policies which are to be followed and the accounting standards which are required to be applied for the insurance company. And there are some deviations. And as we are moving now to IFRS 17 also, at the moment, we still await more guidelines on the applicability date for the local regulator. But globally, as we say, it's already applicable for first of January 2023. So globally, it's already applicable, but locally, we are still awaiting the date when that will be implemented in India. And then we touch on some key business processes, because these key business processes are something unique for an insurance company. First, you need to understand the operations, so that you understand as to how you get the understanding those operations and how and what risks are attached to that key process, so that you can understand as to what the relevant audit process that we need to do in terms of those processes. And we deep dive into certain key areas also, and then as to what the normal procedures that are expected in terms of the audit that we carry out in those key audit procedures. And as insurance company, I mean, there is a lot of data. I mean, it's a huge volume of data that the insurance companies have. It's not possible for us to do the testing manually. There's a lot of testing required to be done on the IT system. And that's where we have to understand as to the IT systems what needs to be done. So it's going to be a brief understanding of the IT systems testing what we try and cover as part of the IT systems audit. Because specifically in an insurance company, I might have one financial reporting system, but there are a lot many other systems surrounding that which are connected with the financial reporting system. Because for each area like investment or premiums, there are separate systems. Mostly the companies are. We have integrated with the financial reporting system, and hence it becomes very important. And there are not many data in terms of the insurance company handling. Typically, companies which I have done, maybe there are 20-30 lakhs of maybe policies or more than that also. So it's difficult for us to manage and look at the data. And hence, understanding of the IT system plays important role in that. And a lot of audit we have to use data into procedures. It's not typically the sample testing that we do. I mean, one of the tests that we carry out needs to be done on a total population. And hence, those analytical tools help us and carry out these processes more effectively. So there will be I'll cover that in my presentation. So largely in terms of regulatory framework, I mean, these are the regulations which are typically applicable, which we need to understand it. As I said, in 1938, the Insurance Act was there, but largely a lot of changes came in once the privatization or the basically the IRDA was set up and the private entities were allowed to carry out insurance business. So since 1999 and 2000, there is a lot of change in the regulation that has come up. And earlier than that, we had largely the government companies in terms of LIC and the NIC and Oriental and all that, which were provided as a privatization. But in terms of Insurance Act, I mean, we need to look at, because there are specific criteria given for what the capital requirement. Because specifically for insurance company, there's a requirement that you need to have at least 100 crores to start with the insurance company. A life insurance company cannot do a non-life business. They cannot do the insurance. There are restrictions. So I mean, it's more focused on the life or non-life. And there are guidelines or acts specified at least the amounts which the company needs to start with them. So there are regulations around that. Other regulations which I say are around the bookkeeping, and money is here are of the policy holders. So there are a lot of regulations around how policy holders' monies are protected. And we keep track of those policy holders' monies such that these are separately earmarked and those are actually invested in accordance with the Insurance Act. So those are covered in the Insurance Act. Plus, there are a lot many guidances around the investments, especially investments is also a very regulated area where how much I need to invest in what type of securities. There are guidelines as to what is the minimum, what is the maximum that a company can invest. So there are separate guidelines on the life insurance companies and non-life insurance companies as to what is the maximum, minimum, and what type of securities they can invest in. I mean, much of their investments are largely in the central government and state government securities, which may be around 10 to 50%, depending upon life and non-life. But I mean, flexibility of around increasing that coverage is not there because regulatory requirements bind the company to follow those particular limits which are there in terms of how much can be invested. And a lot of I mean, investments are there in the infrastructure as well as the social structure, so that as earlier sir said that there are a lot of development activities, so there are minimum amounts in those sectors also where the investments are required to carry required to be made by the insurance company. So these are all given the Insurance Act 1938. And there are specific regulations as to how these are to be dealt with on a regular basis. There are guidelines which have been released, and there are specific regulation on specific matters which are there in the Act. And one of the other key area is on the section 64 of DD also, which talks about, I mean, basically the company has to receive the money, and without receiving the money, they cannot issue any insurance company. And so those sort of requirements are specified in the Insurance Act 1938. The second one, which I talked about, IRDA 1999 Act, is largely on the relevant for the IRDA on its functioning. Not so much that I like to cover because it's more for the IRDA as to how we need to function in order, and it's more of the roles and responsibilities that IRDA is supposed to be having. Companies Act, anyways, we are required to also ensure the compliance with Companies Act, and SEBI Act and SEBI regulations are relevant because of late we have certain insurance companies which are listed on Indian stock exchanges, and for them there is a requirement that they comply with the SEBI requirements also, as sir said that for India we've got already ICICI, Prudential, Lombard, HDFC, Life, SBI Life, these are all listed entities. So there are filings and all that we are required, and there are compliances which the SEBI requirements also which they need to have. The IRDA regulations which I was talking about, that for each specific matter which are there in the regulations, for example, the registration. So every company before we are actually they come into existence, they are required to get the approval from the IRDA, and they are required to be registered with the IRDA. And earlier the process was every 3 years they were required to renew the certificate of registration. Although now that has been done away with, they are not required to do this every 3 years, but earlier that requirement was more stringent. There are specific regulations about registration, specific regulations on the investment regulation which I just referred. There is a lot of focus on the policies to be covered in the rural sectors and social sector. So there are regulations around that, and there are regulations on the preparation of financial statements also. So as I said, that with more heavy industry in terms of the regulation. For every matter, you will find there are some regulations, and after regulation, there are amendments also that happen. So over a period of time, we've seen a lot of amendments happening in the regulations that are applicable to the insurance companies. And hence our understanding has to be there on a regular basis, that we be connected with what are their requirements, because the requirements keep changing over a period of time. Because as I understand that the current IRDA chairman has a lot more changes coming up. So we see a lot of changes coming up in the regulatory environment also in that. And for us, for preparation of financial statements, the most important for us to look at, because that's where the guidance are there on how, what is the format, what are the policies, what are the disclosures required in the financial statement. This is one of the key important regulation which is there in terms of preparation of financial statements. And for auditors report also, auditors report is quite different in terms of the insurance company. You find a lot of things which are added in the insurance company audit, which are not there in the normal companies. So that also is driven by the regulations which are in the IRDA. So as I said, in terms of the financial statement, we normally have a balance sheet and P&L and a cash flow. Here we have two accounts for revenue or a P&L. Revenue accounts largely called also as a policyholder account for a life insurance company. Because when you see a life insurance company, you see two P&Ls. One is a revenue account, which they say, which is also called as a policyholder account, wherein all transactions of premium, claims, commission, the operating expenses connected with the insurance business, these are part of the revenue account. In addition to that, there is the P&L account, which is also called a shareholders account, in which there are expenses and income connected with the shareholders. Because a lot of investments are also earmarked for investment or another shareholders. So on that, whatever income you get, that goes to the shareholders account or a P&L account. So P&L is largely the shareholders account, because certain expenses are not connected with the insurance business. Like, for example, CSR expense. These are incurred, these are actually not connected with the insurance business, and hence those go to the P&L account because those are shareholders expenses. So similarly, there are very few expenses which are going to the shareholders. The format is separate, and in terms of the receipt and payment account, when you will see a receipt and payment account in a normal company under a indirect method or a direct method, but ideally specified that you have to only show as per the direct method the cash flow or the receipt and payment account. So receipt and payment account will not have any insurance company going by indirect method because that's not allowed. So that the format of financials largely we have got these four parts. And there are schedules attached to each and every part in the balance sheet and P&L. So for that there are schedules. Now there are notes to accounts and we more detail about each area in the balance sheet. If you look at the balance sheet of the insurance company, especially the life insurance company, you find on the asset side 80% or at least a large significant amount as investment. So largely the life insurance company, large part of the assets are investment. And when you go to the liability side, a large part of the liabilities are the policy liabilities, which are determined by the appointed actuary. And currently, as per the ICI rules and the IRDA rules, the auditors are not expected to do a detailed review of the appointed actuary's work. So hence, substantial part of the liability side, we do not audit in terms of the statutory audit because that's done by the appointed actuary, and as per the IRDA, we are allowed to rely on the work of the appointed actuary, and that's what we indicate in our audit report. That the auditors are relying on the appointed actuary's work, and we only done the work around the completeness of the data which is being used by appointed actuaries. And to some extent, we look at what are the changes, the assumptions which are being considered by the appointed actuary. My point is, for a life insurance part, the liability substantially is not actually reviewed or tested by the auditors. While we see a non-life balance sheet, there we don't have this particular policy liability, but there the appointed actuary works are only connected with the assessment of the claims related liability that has to be provided for. So for a non-life company, the actuary's work is largely only for assessing the claims outstanding, where the company has received the claims or the company has received the information. So on those claims as to what extent the company has to provide for the balance sheet and is covered by the appointed actuaries. So that amount is relatively lower, but for a life insurance company, it's relatively higher in terms of the amount which go to the balance sheet. And as I said, that format gives a schedule A and schedule B, which describes the format of the balance sheet, P&L, key finance statement for a life insurance company and a non-life insurance company. So typically, when we do a audit of general insurance, it has specifically been indicated in the regulation that the revenue account has to be broken up into three segments or three lines of business. One is the fire insurance, second is the marine insurance, and third is miscellaneous insurance. That's for a general insurance company, there's three lines of business, we have to break up the revenue account. When you see a revenue account, it means because this three and miscellaneous have further break down into motor policies, health policies, and other miscellaneous category of businesses. So the segments are already defined by the regulator, and hence when you see a revenue account of a non-life company, it will be broken up into these three segments. And hence we need to have the proper understanding of the regulations around how the finances are going to be made, because normally we would assess as per the EAs that what is the relevant segment, whether it's there or not, but here it's already defined. So even if the business is very small, we'll still have to make the marine insurance or fire insurance, although we may not have that material business those segments, but we still required to prepare a segment account or revenue accounts with basic plan. Any questions so far? Are we understanding? In addition to the finance statement that we audit, there are a lot of certification requirements also as part of the factory, because the requirements, some of the certificates that we issue are around solvency margin certificate. So as sir mentioned that we have a solvency margin requirement under section 64 of the Insurance Act 1938, wherein there's a requirement that the required solvency margin versus the actual solvency margin, the ratio has to be at least 1.5. My required solvency margin and the actual solvency margin, the ratio has to be 1.5 times, and that we have to also certify the year as to whether the company meets with that solvency requirement. It's up to their capital adequacy requirements also in the banking sector. So most of the companies do comply with that, and this is something that we are required to issue the certificate at the end of the year. For non-life companies, more of the working is done by the actuaries. So for for life, it is done more by the actuaries. So we do not give certificate for life, but we give the certificate for non-life because it is relatively less technical in terms of calculations. And there are expensive management because there are limits on the expensive management that the company can actually incur. And hence the certificate is required from the auditor at the end of the year that the company has met with those expensive management requirements. And also for a life insurance companies, you may have heard about the unit-linked policies. So unit-linked policies are where the auditors are required to issue a ALM certificate at the end of the year, because that's also a potential part of the financial statements of the company. And when we give the segmental reporting for a life insurance company, normally we'll have unit business, non-unit business, and non-unit business again further broken down whether it's a participating business or a non-participating business. So participating business is where the policy holders are entitled to participate in the profits. And as I said that the auditor's report is also very different. So there are a lot of things that we give in the auditor's report also. And one of the unique things here is that we give a review of management report. The management report is an additional sort of a report given by the management. And on that, we as part of the auditors, we put our review comments in the audit report. And further, we also have to verify cash and specify that in the final audit report. Plus, we have to also indicate that whether the company is not a trustee company or a trust, and the application and proper use of the policyholders' funds have been made in accordance with the investment regulations that also we are required to certify in terms of the audit report. There are some things that we attach to the annual audit report. There's a separate certification around that. I already covered that certain deviations are about the normal companies that AS3 are applicable in terms of, applicable in terms of it's only a credit matter which is allowed here. AS9 also, the accounting policy is different. Here we account for the first premium when it's actually received. Otherwise, we cannot account for the premium. There are certain exceptions where the regulators allow that you can account the premium if it is guaranteed. Otherwise, Otherwise, it cannot be accounted unless it is received. So when we issue a policy and when the monies are received, that's the point in time the premium income gets recorded. And subsequent renewal basis, every year or every quarter, on the due date, the amount gets reported as a premium income. So that may be received or that may not be received on a due date, but the accounting of the income happens on a due date basis. Specific requirements are there on the account for investment, so that's where it is changing in terms of normal ES 13 is not applicable. And ES 17 also, ID specifically defines as to what segments are required to be given the finance. So to that extent, there is a deviation from the account standards which are applicable, and as I say that in days 117 or IFRS 17, although globally it's already effective from 1st of January 23, so we'll have to give a comparative period finances also for 22. But the idea currently we've not yet finalized the date of actually the implementation for the Indian companies, and hence we have to wait for the idea guidance around what is the effective rate. At the moment, they are looking at the readiness of the companies, and companies are required to report to the IRDA on their readiness, and those updates are happening. So maybe once the IRDA has the understanding that maybe the industry has a required infrastructure and all that, maybe we understand that they give out as to whether applicability date for implementing something. But at least we'll have much more awareness and more guidance, because internationally we'll have finances available after December 23 year end gets over. Then we'll be able to see as to how different it went, because substantially it's going to change the finances. So currently when we account 100% of the premium, we will not be able to account that as a premium income or an income under the IFRS 70, because you will have to only account for the income related to the service, and the investment portion need not be accounted as an income. At the moment, we put the entire premium is toward a certain portion of service part also, and certain portion for the investment and certain portion for the expenses which are required to be borne by the company. So entire premium will have to be then split into the various aspects, and we'll have much more truncation in terms of the line items post IFRS 17, where the incomes will, I understand at least, will spring substantially from new regulatory requirement and example. So these are the key business processes that typically an insurance company has. Most of you may be aware of them, they are doing the insurance company that they receive premium. They might receive premium on an annual basis or a quarterly basis or a half-yearly basis for a life insurance company. And for a non-life insurance company, typically the policies are for an annual basis. But now the idea is allowed that the non-life companies can issue policies for a longer period also, especially third party, especially the two-wheelers and four-wheelers, where they are allowed that it could be more than 1 year. So that's where the guidance is around the how the premium income has to be accounted. So normally, for a life insurance company, once they receive, we are allowed to account for the income, and then on a due basis. Reinsurance is something that it's typical technical thing that normally the companies may not be having a appetite to assume all the risks based on the policy issued by the company, and that's where they want to pass on some risk to a reinsurance company, and hence the monies which they get as premium, they transfer straight to a reinsurance company, and then whenever their claim arises, they recover some part from the reinsurance companies towards those policies. And you find that lot of reinsurance is there and much more complicated in terms of the non-life business. Life business is relatively less, which the insurance gets here, but it's more serious in terms of the non-life business. So that's where there are lot many technicalities to be understood around how the reinsurance happens.
So all of us who know.
Okay. Sure. Okay. So I'll cover maybe some of the key areas. and what we did.
Point, but on the slides, it is pointed out and asked for is. Because I
Yeah.
think we are all waiting on something very exciting that to have the presentation.
Yeah, sure. So I mean, for premium, as I said, that we have to have the understanding the business process which the company has. In terms of understanding the underwriting for process, then the policy issuance process, and the accounting process. So these processes are required to be understood, and what sort of products are issued also, we need to have the understanding. Earlier, we had a filing rules requirement where we are required to have the ID approval before the product was launched, but now it is reviewed and filed. So you can actually launch the product and before the approval is received. And hence we need to have a proper walkthrough of the business process and to assess as to what the key is attached to the premium process and then what the controls are attached to that. And so these are the typical areas that from the premium testing point of view that we normally take care of. And there are a lot of compliance aspects to be taken care of, especially when we have policies around life insurance where the KYC and all this AML compliance are required for other companies. And also for Europe policies, they require to follow the proper LOBs which are required by the companies on a daily basis. In terms of claim settlement, this is a significant portion of the expenses which are incurred by the company. And largely is more technical in terms of the non-life insurance companies where we need to have the understanding the claims process and what sort of reinsurance we've already taken. And because that requires a lot of actually inputs also in terms of assessing the claims liabilities once the claims are accepted. And a lot of times there are surveys involved in terms of assessing whether the claims are genuine and what sort of expense of loss being incurred on those claims. So this is something where we find a lot of technicalities involved in terms of getting the proper understanding as to the basic claims and what sort of checks are there in the company to see that the valid claims are actually paid. Because a lot of claims the management perceives to be for the risk also there are attached to these claims because maybe the underlying claims may not be genuine and maybe those to be paid in terms of maybe we find a lot of such instances in the health motor policy where the claims may not be valid and the company will have to then see as to whether they have to reject those claims and all that, and hence they may refuse the claims. So understanding of the company's procedure, risk controls and all that is very essential for us to do a proper audit of the claims area. Investments is very regulated. That's where we have to have proper understanding the regulations. There are quarterly returns that are required to be filed by the companies. So we need to have the understanding that the company is filing those returns properly, because that will give also insights as to whether any NPAs are there or any investments there, where we need to have proper detailed understanding of whether any impairment or anything required to be put done. So those understanding we get from these returns also. But there are caps, there are laws or regulations on how each investment has to be valued, or the valuation norms are given by the IRDA and the investment regulations. So here we spend a lot of time because it's one of the significant part of the asset side of the balance sheet, and hence we need to have a proper understanding in terms of the regulatory requirements, because otherwise there might be possibility that we may incorrectly, maybe the investments are presented because how each investment has to be classified and all that, valued and all that, proper testing has to be carried out for the insurance company. This one area where policy liability is that is more applicable to the life insurance company where we rely upon the actuaries work, and we only concentrate on the completeness of the data which is used by the actuary. And we also understand from the actuary whether there was any change in the assumption during the current year, and what was the reason or rationale around that change in the assumption, so that we can understand as to whether that is appropriate, not appropriate, and get more insights around that. But that's the limited work we do on the policy liabilities. And for non-life, we have claims outstanding, which are we did the valuation done for the claims income was not reported and claims income was not reported. So these two items where we get the amounts assessed by the appointed actuaries and we display them, we rely upon the appointed actuaries work in terms of the claims which are incurred but not reported or incurred but not reported. So in terms of the IT testing, I mean, normally whatever audits that we do, I mean, we are having substantial usage of our internal IT teams. And the internal IT teams give us a better understanding in terms of what systems are getting used and what system interfaces are there between various systems which are actually there in the organization. Because I'm not seeing any insurance company where it is one system or two system. Typically, these are 7-8 systems, and each system then we are required to understand as to how these are connected and whether those independent systems are giving the proper data, correct data. So those things require us to have a proper specialist to be used on our insurance audit. And typically they do the testing around the general IT controls. So where I have pointed out as to they do the testing around the logical access controls. So user access controls are reviewed by the specialist whether the appropriate person are given the right to access the appropriate modules. So unauthorized access is not given to anybody. So the testing is around the proper controls around the access given is based on the roles and responsibilities of that person. There are proper checks that we carry out whether the change management controls are effective. So this is where any system changes are there. Those are backed by proper approvals. And those proper approvals were in place by the appropriate authorities in the organization. And then they were tested. So there are evidences which we cite that the approvals were there, the authorizations were there, and the changes were done based on that. The backup and recovery controls we understand because here the database is quite huge and they need to have proper backups on a daily basis. So mostly these are required to check by the insurance companies. The computer operation controls plus the physical security controls. So security of the servers, we understand that the servers are kept in a secure place and there are access restrictions for the access to the servers which are physically there. And the general IT administration and cybersecurity. So, I mean, cybersecurity rate has now been increased. We find a lot of instances where the risk is more on the cyber side. And hence we see that proper controls are there in the organization. That's to see that, I mean, the systems are having adequate features around their system getting protected against any cyber threat that is there. There's a lot of global players, not in insurance, but at least other companies see a lot of cyber related issues these days. And hence is one of the key aspects that we tested part of our data control. So this is where we, so I mean, a lot of specialists are involved in the audit. One of the specialists is the cybersecurity or I mean the IT specialist where we rely on the work and the results which are put out by the testing environment. Any questions? They follow. And as I said that typically insurance companies, there are lakhs and millions of transactions. It's not possible for us to see or get comfort on a sample basis. There is a lot of focus also on analytical procedures that we carry out on the total data. So typically they have these files, especially in life insurance, that they say as enforced file. The enforced file is a database of all the policies issued by the company so far. And that is the entire database giving details of each policy which is issued by the company so far till the end of the year. And that data is used by the appointed actuary for determining the policy liability. And that data also we use in terms of maybe our analytical procedures. So typically, I will give you an example. In terms of the premium income that we test, one of the areas where we have reviewed premium every year. So we get a comfort by performing this analytical procedure where we do an expectation basis the enforced file as to what should have been the renewal premium income. Because we know that last year, or historically, what policies we already sold, back from the data of the enforced file. So up to last year, whatever has been sold, we know that whether the policy income will come in the current year or not, because normally life insurance policies are long term. So based on the last year's policy already issued, we see what is the frequency of the premium income that is expected, either on a quarterly basis or a half yearly basis or an annual basis. So using that frequency, we try and estimate as to what should have been the expected renewal income in the current year, and try and see the actual income is somewhere close to the expected renewal income basis with analytic procedure. That gives us more comfort because that is done on overall database, and hence such analytical procedures give us a larger comfort on the total data, because at times, since these are huge millions of transactions, there's a possibility on certain set of transactions getting missed out, maybe because there's a bug in the system or the system when it was actually the product was issued and the system details were hidden. Certain aspects of the product were not captured properly. So we find this day one issue and day two issue. So day one issue is basically when the policy is affected or the policy is issued. On that day, if there are any issues in terms of recording the transaction, day two are subsequent issues after the policy is issued. So, I mean, at times, if we get certain gaps between our estimated amount and the actual amount, we can actually deep dive into that more to understand if there are any loopholes or any system issue that we need to address, because that gives us a more understanding. In terms of the claims also, we can do that exercise, because we have to read about when the policy was actually issued and whether the policy claims which have now come, whether the period of policy covered that particular date in the policy loss was incurred. So whether the loss was incurred in the policy period, that we try and cover up through this particular analytical procedure. So there are a lot of analytical procedures that will be developed over a period of time, which helps us in understanding this particular area more and get more comfort, because otherwise doing the audit on a sample basis will not give us adequate comfort. So there is a lot of emphasis around the analytical tools, and that's why certain tools that we use are the idea, data, analytical tool plus Power BI tool is also there, where we use dashboards. Audits and ClickView is also some of the analytical tools that we can use to get the proper understanding and the reports, and also the dashboard around certain queries that we run. So, I mean, it has taken us a substantial period of time to have the proper analytical procedures designed, because, I mean, first of all, this business is very technical, and to also design procedures around the analytical side and all that also, we need to have the proper understanding of how things work in the organization. And then only you'll be in a position to actually understand and make those queries that we can apply to the respective clients to get the output and do the testing basis that identify any system issues are there or any things that we need to take care of that. And a lot of, as I said, that in balance sheet, the significant portion relates to investment income. So on the investment side, we run tools around the evaluation of the entire portfolio and the income which is being recorded, the interest income or the profit and loss and sale. That also we run the analytical tool around the entire population to get the comfort that the total income has been recorded and the profit and loss also has been accurately recorded based on the underlying transactions that are happening. There are a lot of procedures that are, I mean, that we have over a period of time developed for each and every area, and which gives us more comfort around the specific audit areas that we tested. So to sum up, basically auditing an insurance company requires comprehensive understanding of the regulatory framework, because I mean, the framework is a very dynamic, and not these days it has been changing substantially. And we need to proper understanding the business operations also, because without that, we will not be able to audit these particular entities, because it is very technical. And normally it takes a long time to get the understanding, so you need to invest that time in terms of understanding how the company's processes are there around each and every process. And internal controls around whatever company is doing, that understanding we need to have to do a effective and proper audit. So these are the typical things that are required for us to do the effective insurance company audit that we have. Any questions? We have to address.
Question. Whether people have understood completely.
Yeah. But it's going.
Just need to ask some questions with the recent GST notice like thank you the insurance companies one day for 2,250 crores. As an auditor, like statutory auditor, how would you be dealing and what would be the treatment you would be giving to the financial statements for this year?
So it's a little preliminary response, because we have not yet closed the insurance company audit, but it depends upon a lot of companies are not receiving your notices. So where they receive, probably we have to understand the exposures involved and what amounts they already paid in case they have paid. And then we have to see whether the insurance companies have actually got the evidence around to prove whatever underlying transactions are having adequate backups around that. So all this evaluation we have to go and take our specialist tax team inputs also to around to see whether any exposures are required in terms of whether the company has an exposure on this front and whether any provision is required or not required. That assessment each and every company has to make. Basically, the underlying transactions they have got in the underlying supportings that they have actually got for those transactions, because those a lot of companies have actually submitted the data also. And we see that a lot of companies have not got any further response from the income tax authorities also. So depending on the each and every company's case, this has to be looked into more case to case specifically. So at the moment we don't have a specific answer, but the evaluation will depend on the company specific cases. But largely now, since that we are seeing that the caps are lower in the commission, these things will substantially not be there. The issues will not be there going forward.
Point is that most of the general insurance companies, they are not even disclosing because the company will get because they're saying that more. No, because there has been already coming to the insurance companies, not this year, it was the last year also. They got the GST notices last year also. They just only giving them no. Because the larger general insurance companies are giving that as a no. And other general insurance companies are following the suit to saying that it can come as a no and not as a contingent liability, because it's not admitted by the
Lot it is the actual notices or show cause notices are normally reported to the insurance company. A lot of time, I mean, one of our cases, it's only very many inquiries are there and certain data have been asked by the insurance company. And they have not yet come to the stage where show cause notices are being raised on the insurance company, and maybe that's the reason they just put a note rather than showing as a contingent liability. So depends upon what stage each company is.
this year they have paid certain amount all the insurance company and they put us. Now, what would be the state now in the budget? They have,
Yeah, so
paid it amount and the protest they have paid.
no, so I have certain cases where there are no notices on certain companies also, and certain companies, the amount paid is not that material also. So, I mean, it again depends upon each and every company's exposure, and then management and the auditors have to finalize as to whether a contingency or a provision is adequate to respond to that particular case.
Thank you very much, sir. So one thing, we all got enlightened with the financial audits of the insurance companies, how to conduct and all those things. And again, thank you because earlier it also has mentioned this sir has come on a very short notice for us. So thank you very much, sir. So now we have a tea break for 10 minutes. So we'll assemble after 10 minutes. कंपनी आईडी पे
Hello. Yeah, after a tea break, we have chartered accountant Sunder Krishnan sir with us. He has been awarded the best professional of the year by the Institute of Chartered Accountants of India. A huge round of applause for that. Of course, by education, he is chartered accountant, CISA, ISACA, CCSA, checkpoint, many educations, not like us, only chartered accountant. And he is a knowledgeable person with us today. And he is a chief risk officer in Reliance Nippon Life Insurance Company since 16th May 2016 till date. And sorry, 2006, not 2016. And his skill is very good, which I personally like very much when I was reading his CV. His skill is inspiring others. So he has come here to inspire us. So that's a very great thing because sir, we all need inspiration from seniors like you. And of course, he is chairman of GRAB ISACA India and president of ISACA Mumbai chapter. Sir, I will not take much time, and with this small introduction, let us welcome our speaker today, Sunder Krishnan sir, with a huge round of applause. As a token, we will present him a small memento before starting the presentation.
Gandhi is going to look for welcoming again. Yeah, so with a long journey, and of course, I did getting invitations from the institute to speak on various subjects, including audit, cyber audit, risk management, and many other similar subjects. This has been again a long journey with Reliance Nippon Life Insurance. I've survived 4 CEOs and lot many changes. I retired August actually, but they have been nice enough to give me extension for 2 more years. At retirement it was early 58, so I don't feel like I'm 58 anyway. So the age is now I guess 60, but I'm not sure about that. I said that, so at the CA, again, CA, the degree is a big thing, so I have a lot of respect for chartered economy. So reason being, it's a very hard fought third degree, and you have to go through a rigorous drill. And the best among that is the 3 years articleship. I spent it wisely. I did when I did articles in Deloitte actually 3 years. So it was very interesting experience, finalization of many big company accounts. I learned a lot. Then I practiced for about 4 years, 3-4 years. And then I joined the Ernst & Young as audit manager way back in NT. And then was there for 4.5 years, operating only financial services, banks, insurance companies, pension funds, and many other financial services companies. And then I decided to join one of the banks that I was working for. I was also to be consultant from Ernst & Young. It's not that I did only audit. I also worked at CISA, and so I did information systems consulting. And one of the banks that hired me as a part-time auditor, Indian auditor, American Express Bank. So I used to work for them actually on a targeted basis. It was a very interesting experience because working for a US person. And then on the receiver pass what he's trying to speak and then implement that, which is information system on audit of various banks and banks.
Then from banks, I have joined a bank, International Indonesia. And unfortunately, the Indonesian crisis broke out. And so it was a very interesting experience. The Indonesian rupiah went up to 80,000 rupiah so per dollar. And it was a nightmarish experience for me. I had to actually use my influence to borrow for the bank. Forget Audit. I survived 1 year there. They were reluctant to leave me go, but I said, please let me go. The people were nice. The bank was actually good. Sinarma's group, which is part of the very big filter industry. And very powerful people in the Asian world. But they had a sorry time in India and also, of course, the crisis. It took about 4 or 5 years for them to come out of the crisis. And then I joined Standard Chartered Middle East South Asia as an information system audit specialist and branch banking and credit card and retail banking side. Of course, but since I was an information system auditor, I also worked to audit treasury, corporate banking. I was hard-fought resource, like Middle East South Asia. I was only resource, so everybody really grabbed me. It was back-to-back flights, living out of suitcases. So I spent about 210 days in Dubai in one of the year. That's the kind of travel you'll have to do because of various. I also was part of credit card being floated by the Dubai bank. I was part of a project. I also was part of a car loan project in Standard Chartered. Then I joined Credit Lyonnais, French bank, reporting to Hong Kong and Paris. And of course, went to Paris, right? So very interesting experience again. Here I was more afraid of audit, risk, compliance for the Greek. And when I say risk, it was more integrated risk management, not market risk, corporate risk, which were separate functions in credit union. And then, of course, I was part of the leadership, so you get view of all the decisions. And of course, you have to also be independent because you're a job there. And it's tough. And then this time, lots of declarations for that in French and in English. And then, to say that even if I am part of the management committee, I will have right to question decisions taken when I was also part of the management team. And that's signed off by the group CEO and CEO and group auditor. So that's the kind of criteria they go through on independence and very, very interesting experience. And you're part of the vertical, audit vertical, so you report to Paris state. Now the translator kept in Paris only for me to translate French into English. Everybody else speaks French. Though of course the US colleague of mine who was learning French. And after credit union, I went to Gulf to do IT strategy consulting. I tied up with ICICI Infotech, now it's called 3M. And working for a bank there to float IDR, branch banking and middleware. Came back to India, joined ING, Bangalore, again to add all the functions as head of audit. Head of audit was somebody else for it. I was under maybe information system audit and also corporate banking, actually, with my experience the banks. Then from ING, I went to Merrill Lynch. Merrill Lynch, again, the ASP Merrill Lynch sold off its stake to Merrill Lynch when I was there. A lot of changes happened and then I got this stake in Reliance. Then it was called Reliance Life Insurance. And Reliance Capital was a very exciting company at both days with lots of controls and governance, at least on the financial services side. You'll find all the financial services companies doing well. Excepting, of course, capital itself. Capital lend a lot of money to group companies and landed in trouble. Because otherwise, a AAA company in 2016, 17. So we sold off 49% of the stake to the bond life insurance. 24 initially in 2011 and then 16, 14, the balance 24 or 25. 49 now to take up the bond life insurance. So we have a board of directors of 10. 2 is from the bond life insurance, 2 was from Reliance Capital, but since Reliance Capital is taken over by administrator of Reserve Bank of India, and the Reserve Bank of India has kept 2 directors in the board. And the remaining 5 are independent directors. And then we have the CEO with the executive directors. Very interesting experience for me because I used to handle secretarial also. Secretarial and legal and compliance and risk and information security and fraud prevention and investigation and information security use. And dealing with police and dealing with IIDA was all my part of my job description. Recently, I've given over my legal and secretarial very recently, 1 or 2 months ago. Because of the work pressure. So, but still I get involved in many activities, legal and secretarial. So that's the work. And so you have to plan the board meeting in advance. It has to be structured well. You have to discuss with directors beforehand if they have questions on the modules that you have. And that's very key in a governance environment. Because you don't have a nasty experience in the board meeting. Board meeting timing will go way off. One aspect is discussed for some 30-40 minutes. Unless, of course, all the directors understand extremely well each and every item in the board, which is what we try and do. We meet up individually each director before and brief them. I'm going to retire for the board meeting. So, all this, of course, is a team experience. My CEO is even more a risk manager than me. He's from Citibank and Max. CFO is also very tough. So, people are already risk oriented. The insurance company like mine. So, it's not run recklessly. And so every year our profits go up. I think this year will be more than 100 crore profit. So, although it was a tough year. Despite the fact that shareholding is being changed. Many things I learned from newspapers. Who's the new shareholder and who's fighting for the new shares. I'm not part of the sales team now. Peter was there before. Thankfully. Because it's again a lot of work. It means a lot of analysis, a lot of valuation, a lot of reserving, a lot of de-reserving, a lot of capital formation, etc. So what I learned is current and Induja are the 2 likely shareholders for the 51%, which is again a newspaper I think. It's been very Supreme Court now. So this is the company and the background. Whatever happens in the newspaper and whatever happens in the reputation side, we run very clean company. We don't have any stake in Reliance, not a single paise. So even if Reliance goes down, it's very down anyway. The capital part, we don't lose money. So credit risk is clean. That's how we run it in a very conservative way. We were always independently run, even in 2006 to 2016. Because it's highly regulated. The capital of the company is with the regulator. Regulator doesn't allow you to touch the capital until and unless the shareholding is clear. So we file returns regularly. I think we spoke about quarterly returns earlier. Actually, for us, it was monthly for some time. Now they made it quarterly. We have a lot of confidence now. So that's what is the background to the company. I'm taking you through what I do with risk management at the experience starting with. So nothing is clear here. And then, of course, we will come back to what are the opportunities for CA started economics. That's very important. One of the very important aspects is not in the slide. A lot of chartered accountants are now actuaries. In my company itself, I know many chartered accountants were actuaries. I think as a chartered accountant, if you're young, or you're not also young, I'm also planning to do actually course. I'm not going to stop at the courses that I've done, which is company secretary, LLB, and CA. And of course, the enterprise risk management at Manila. I'm also planning probably if I have time, to try and do actually. Actually, can work in 70, 80. There's no age limit. Not only that, it makes it more interesting to work. So the CA seem to be doing better than the other actually in the insurance world. So it's a good arena you should look at. And maybe CA should also tie up with the Institute of Actuary for courses for a family accountant. Recently in the IRDA circular, the previous speaker, it was very interesting to hear his presentation. A lot of insights, despite The slides looking general, it's not. And he kept saying it's technical. So one of the insight also is that very recently in the actuarial circular, they said that the actuary can be a chief risk officer, but cannot be an appointed actuary. Appointed actuary is the one who signs off the actuarial calculations, valuations, reserving, etc. Pricing. But he can't be then a chief risk officer. But now they have said a chief risk officer can preferably, actually can be preferably a chief risk officer. Something like that. It's not very mandatory yet. The CA Institute president is part of the board of IIDs. So we should take care, maybe give a message to him, or SSC Perculus Nickel Rain. Please take care of the CA profession. And it's just a request to the president. So, one of the problems is the independence. Now, somebody who prices, somebody who reserves, somebody who values, starts doing risk management work also. I'm not sure how good the independence would be. It is still, of course, they are professionals, and like CAs, they are also professionals. And so they are board of directors, and they are everything. And of course, I respect them actually, but there is a fine line of difference here. You know, this way, a risk management profession under a CA, an actuary under an actuary makes sense. But mixer of that, it's a bit of a risk. In some companies, the appointed actuary was CFO also. And then, of course, IRDA took action and said that they find the company also. Other way around also, there is CRO and I actually. Because you can't be the same person. And you can't question decisions taken. I actually. So this is about the background. And so there's a lot of opportunity for chartered accountants in the insurance world. There's so much to do. I guess there is shortage of skills. And shortage of technical skills. Very important. So if you can just focus on insurance world and then specialize. I've left my 6 banking experiences. I had BI, Standard Chartered, Credit Bureau, ING in Netherlands for insurance profession, and it's not bad. And I don't regret my decision. So, not that I've forgotten banking, but because it's the same investment risk, credit risk, market risk, operations risk that I deal with in this world also. But no, it helps. So it's a vast world and a lot of things can be done by chartered accountants. More so because the depth of the CA. You don't have a 3-year articleship for a actuary actually. But they actually work in the insurance companies and learn the hard way. They also again write exams again and again. I'm not saying every chartered accountant writes that. But it's tough exam. So this is the comparison and the thoughts I would like to leave with, then so that I can go on with the presentation. Thanks up. Thanks. Sorry. Right. So first I'll give you an overview of risk management and best practices, awards, whatever governance, and then finally we'll talk about what carriers the unless you want to ask any question anytime, please feel free to interrupt me. Now, Mr. Then I have plenty. Right. This is the overview of CRM. In fact, entire risk management is summed up in this one slide. So, you have governance in the top, which is the director. 4 directors. I mentioned 5 different directors, 2 from Japan, they are very different only. 7, and then 2 again now from the administrator, they are also like independent directors. I've got 9 independent directors in my head, and then 1 executive director who tries to manage. So, establishment of policies and definition of framework, everything, all frameworks get approved by the board. And IID is very, very strict. Everything they want board approved. Now, what they've done, which my previous speaker spoke of, the commission policy that you have to pay an expense of money, that also you have to take a policy, it is approved by board. Then only the old limits will go away, otherwise, parallel use remains for the old product. You can find will be for the new products. unless you do use a file of all the file use. File use means actually give a document to the IRDAI, kind of saying that this is the pricing, this is the assumption, this is the profitability, this is the expense, and this is what it means out, this is the value we create. That's a file use document. And then you have a sales brochure which gives the products, features of the product. Then you have a policy document which the legal guys make fill out, which contains agreement and process with the policyholder. It's my job to see all the three values. And it's a head of a job. Worst cases, the systems will never carry. If the product is 20 years, then after 20 years, what will happen has to be decided now and I have to sign off now. Doesn't happen. So that's called the day two requirements. And IIT makes changes like this. In 2011 or 12, they made some changes. All products become more. So some companies were without products for about a week or a month. So what do you say? It's a problem. So what we used to do was then file quickly. And so we said, like, bigger requirement, they go back to market. So day two requirements were taken care of later. And of course, we had inspections and then they raised the storm. And they said, you have to pay this, you have to pay that. And many companies had to pay crores of rupees for this. I had to spend about 18 crores once for an old product. And then, of course, policyholder doesn't get much. There's few cash flows that the person would get. But the point is that company has to go through all that storm. And of course, board will raise the storm. Now, what we do is I actually engage an actuarial auditor, which is a chartered accountant and also to go through the products, features, the systems, and then certify. Based on his certificate, only we certify. So the chief risk officer has to sign, the actuary has to sign, the compliance head has to sign each product. That's part of all this is the governance framework, which is the audit. Then we have two statutory auditors, it's not one statutory auditor. And then one internal auditor, my internal auditor also is outsourced. So we have EY or Deloitte will come and do the audit. There are so many other audits, concurrent audit, which is for investment, daily audit. So that's a systems audit of investment. That again is done by a separate specialist. So concurrent audit specialist is different, system audit specialist is different. A concurrent auditor cannot be system auditor cannot be a concurrent auditor. Again, there is segregation there. And when I look at limits, three limits in the system. One is the regulatory limit, which says that I can't invest 10% of the industry. Many limits are there. I'll take you through some slides. Then there are product limits. Each product has limits. Then there are internal limits, which is compulsory again by law. There are three sets of limits for each investment that we make. So there are about 800 limits for a small company like mine. Imagine what will happen to a big company. And each of that has to be systematized, automated, and ensure that there's no governance issue or an audit issue or a security issue there. Then they have to identify risks. How do you identify risks? We used to do many things manually. Now everything is automated. You have to create dashboard, but it's not easy itself. Because every automation you have to check. And automation changes when regulation changes. The regulations, like what previous speaker said, changes daily. Crazy. Every day you get some circular, some guidelines, some news, and then every day you think one day how do you do it? How do you do it? So that's again a problem. Risk identification. You have to measure risks in terms of degree of risk, quality of risk, like regulatory risk. I can't take any chance. Be careful. And then you have to monitor risk. What's happening in the dashboards again? Every month we display this dashboards. And we have to mitigate it, to bring down the risk. When you are auditor, this point because you point out recommendation, action, you have to discuss of the recommendation and action. But when you are a risk manager, your responsibility doesn't end there. You have to ensure that the action plan is implemented. That's the difference between a risk manager and an auditor. You are part of the flow now, part of the decision making. And so when you have limits and when you have action plans to be implemented, you have to ensure they are implemented. So success of a risk manager is how the processes are implemented and how systems are implemented. Then there are various committees. You have investment committee, your credit committee, your control committee, your executive committee. We meet every Tuesday at 11:30. That's an executive control, executive management. Then I have a control company every month. So I've never not met since 2006. Even if I go to US also, I try and see the meeting is held. And actually now, of course, with all the virtual meetings, it's possible. Quality assurance of process, again, very important. We have a quality team separately, we go through all the processes, documents all the processes. Consistency across group, when we are at Reliance Capital, every company try to manage and map what I do. Everybody picked up the best practices from each company. We had a general insurance company, we had a life insurance company, we had a mutual fund, we had a securities company, we had a broking company, we had intermediary company. So we had group risk, group audit, group compliance, group legal, group secretary. So I had many bosses. So I have to also report to those, all this gentlemen there. Group legal person, group risk person, group audit person, group compliance person, group market working, group finance person. Then there's independent review audit again, separately. And of course, ALM, which is very important. It will be designed part. And then you identify risk, you map processes, the process will be huge. Every process needs to be documented. So the person needs, process also needs otherwise. If you don't document. And I have seen this many times. Unfortunately, I'm there for 17 years. They say, you are there. So every time there is Sunder ko pata hai. Everybody will come. So my job is like a doctor, consultancy, patients keep coming. So processes have to be mapped. Function, sub-function, risk. What is the process? What is the sub-process? What is the action plan? What is the check? And then you have to self-assess again as a function head. Best risk manager is a function head. Best auditor is a function itself. But they are experts in that area. Self-assessment is very important. We do RCSA. Risk control, self-assessment. That again is independent. That again I have also. An external person comes and checks. Now, of course, the risk, head risk under me is thinking to do internal. Then there is capture of losses. Whatever losses you incur, you have to do RCA, root cause analysis. Sometimes there are near misses. This is a basic of. When you have near misses means bach gaya hai. Also, our CEO had a mail from CFO. CFO had a mail from CEO saying that pay to this. So they have to create a vendor for that. When the vendor was created, it went to the secretary of the CEO. God lag raha hai. So she asked the boss, "Apni email bheja kya?" मैंने भेजा. Happened 18 months back. And then we found that that was actually act. The mail was act, or it's not even acting. It's what we call as external mail. There was slight change in the mail ID. Nobody noticed. Then of course it comes for investigation to be. We found that it was a CSR item. Somebody had opened an account 6 months back in Delhi, NG Road. It's again a fraudulent organization. You get cases like that. That was a near miss. But CEO appreciated the process that if you have to create a code, to start the process fresh. And that sort of process helped us to save from the loss we would have suffered and we contributed to that. Fine. Key risk indicators again. What can go wrong? This is again very, very detailed dashboards in each of the area. Selling risk, customer care risk, information systems risk. So many risks are there. Then of course, e-governance risk compliance, people process data. We need softwares for all this. If you look at 8 or 10 softwares, actually there are 8 or 10 softwares, there's something like 60, 70 softwares which work, and then there are some 70 or other software which don't work or they try to work with development under progress. So any bank, insurance company, mutual fund would have so many softwares. Mutual funds slightly lesser because they outsource their operation to a company. We can't do that, it's very technical, and IRD also doesn't like it. Improve processes, again, try to improve processes, consistently improve controls. More automation you do, better. More dashboard, more automation, less dependency on manpower. We are one of the highest attrition risk. 6% is the monthly turnover of people. Every company has that. It's not only our company has. All companies are facing attrition. Crazy. And that's why CAs are very helpful because CAs are more patient. You don't need the company. So, and enhance technology, ECP, business planning, enhance business control, quality assurance, and of course, your new project readiness. So this is the risk dashboard. And these are the building blocks. Any doubt? And so between this risk, we have market risk department, which is separate. The investment mid office also, whatever reports we need. All these limits controls have to manage. Generally, we engage specialists that people who do FRM, what I put in market risk. Credit risk again is dangerous animal. They are IFRS, they are all IC, then Adani, of course, now Adani, of course, is scared. More political than experience. Then many of them, 3, 4 more were there. It's all invaded the insurance industry 4, 3 years back. Now everybody is very conservative. We put money, all government securities. Don't take risks. You see my balance sheet is there. You just have one company which is AA. That too actually is a AAA. India books, they have improved now. Other than that, I don't have anything. Yes. 100% is same. Whatever is that, which is provided for, ILFS is provided for. DHFL, we got more money than what we got. Then we did go suffer a risk that. Then we have less than 81 bonds, again 100% provided for. But hopefully, hoping that Supreme Court also can import that. So, the credit risk is key for insurance company. Because the insurance company has to last long years, 20 years, 30 years. Therefore, investment psychology of an investment company is very different from the investment psychology of a mutual fund or a bank. The more short term, they are more long term. Therefore, ALM becomes very important. We try to increase the life of assets. Why? Where do we increase the life of assets? Liabilities for longer term, 20 years, 30 years, 10 years. But why we should increase the assets life? Then you will short life again by another asset.
Back to back audits.
Correct.
Solvency and
Solvency में 238%. उन्होंने तो 150 मांगा है, 150 भी निकालने वाला है अभी, making it 100, hopefully, but it will be risk-based capital. Yeah, long-term, short-term mismatch. Correct. Interest rates will change. So I have to see interest rate. I see interest rate almost every 1 hour. Okay, the screen picture is on. Correct. So interest rates might change. Look at the way interest rates have gone up now. Huge. It's good for us as insurance company. But when it goes down, it's bad. You have to be protected for that. So the reinvestment risk is very high for an insurance company. 5 साल अगर मैं asset रखा हूँ, 5 साल के बाद क्या होगा मालूम नहीं ना भी. I have to buy again asset again. And that time when I buy again, I will be under a loss situation in the policy. Because every policy you have to match how much liabilities and how much asset. So this is the key, and this is what this CA will understand better than actually. That's what I'm saying. How can we let go CRO to an actuary? Of course, now actuaries are picking up the investment part. But you know, intrinsically, information systems risk again, you have DISA or SIDA, and many other things, financial risk, which our CA understands better, but actuaries are gaining a lot of knowledge now about these areas. And then getting up. Better would be a good tie-up. You see that many CAs are becoming actuaries. And I can see already a lot of CAs already doing the actuary course again. It's like they write 15 exams and pass the actuary course also. So, you know, you think through this, so it's a good aspect. So these are the things that we actually do. Risk investigation, risk assessment, risk sensitization, RCSA, and many things are outsourced. And many outsource everything also to risk reviews, fraud prevention. Everything has outsourcing element. We do control it. Yeah, I have one person, two person, and two full-time employee in fraud risk, four part-time employee in fraud risk. And they are actually police people. And then I deal with police, CBI, everybody. And then like that. So everything is like that. BCP again, I have BCP rated. A separate BCP rating, separate information system security rating, separate ERM rating. All the three are rated. All the three are certified. But every time I have to tag with the auditor and get a good certification. Like I'm AAA rated by an auditor, but it's not easy stuff. You'll have to demonstrate risk management across. Again, insurance risk monitoring, mortality, I'll come to this mortality. And then consistency, strategic risk through the management meetings. And this insurance risk dashboard is again partnering with actuary. Your actuary is not your friend, valid. You better be supportive and learn as much as possible from actuary. And then of course the reputation risk is very important. The reputation risk of each of the above is very important. This case will give you financial risk as well as reputation risk. Again, we will have market risk monitoring, which is through limit, sub limits, performance, credit reviews, again, separate credit reviews. Executive investment committee, I am part of the executive investment committee, question decision. ALM, again, I have separate ALM committee, and then review all this. So, again, of course, ISO standards are very important. Then separate quality group, which gets us, and they are also overseeing everything. So there's a lot of conservative approach in insurance companies simply because we are long term. We need to be safe. Investments need to be safe. There is public money. And at the end of the day, overall, we are trustees of public money. It's lot of responsibility. I have to be very, very careful with each decision. Again, of course, we have operations risk, investigations, pre-issuance of policy, post-issuance of policy. We call up customer. आपको पता है आप 10 साल के लिए मुझे तो बोला गया 1 साल है. But then so we put lots of things in the proposal form. This is a 10-year policy. And then we try and check that. This used to have lots of projects happen before, not now. Now this is crossed over. Now, of course, as I mentioned in the UM, we spoke about explaining over management. What they have done is they have reduced the allowance for policies less than 10 years. And all of us are represented by 60% 37.5 for 5 years. 7.5 times into number of years. So we are all questioning IRA now. So that's again a problem, which means you have to think really long term consistency, etc. is very, very important. Every policy you have to have minimum 10 years then to have a good expense allowance. Expense allowance is why important because you spend money for distribution. And so there's a lot of initial expenditure in the policy. Now comes the IFRS 17. We will question all that. How do you match expense income and measurement of placement of the policy over a long term, 10 years, 15 years, 5 years? How do you recognize revenue, etc.? This is going to be tricky again. Again, that projects are also started IFRS 17. And again, you need a CA and actually both working together. So the finance, risk, and actually work together. Whistleblower again is very important. Earlier, I used to get a lot of crap. Now, 80-90% of the whistleblowing complaints are genuine complaints. Because I have lots of branches. I used to have 1,400 branches. Now, luckily, I have 700 branches. 707 or 770. I have to listen to all those people who speak from various cultures and geographies and languages. And I have to take action on that. Doctors, again, pathological logs, doctors, history shopping, CDA background checks, associate who you are, you do background checks. We have disciplinary action committee in Bombay also and region also. Zonal risk also. Again, IT risks. IT again, I have mentioned earlier, IT security certified. I have a CISO reports to me. He has lots of people and there is a lot of outsourcing there also. Lot of work is also there. Vendor management, payout verification, fraud analytics, etc. Then you have the RM level, ERA dashboard, which is key risk indicators. Risk indicators for all aspects. Use SAS analytics actually. I'll come to it in detail. This is for the mortality book. RCSS, again, for auditor independently. And then control committee, committee. From 2006 to today, I have a risk single committee. Every month we have a control committee. Last 10 days of the month. Then there is a PCD committee. This is continuity planning and audit and certification of that. Risk management committee, again, these are board level committee. So there are a lot of preparations. Again, this is the key risk, product risk. So I have a quality assurance team, actually as a quality testing, products as a testing team. There are so many teams, and then there's the independent auditor. Yes. The committee what be? Are this taken care of? No. A lot of requirements that need to be taken care of. And so we always have a laundry list of problems. Then there's some days given, we change the days, we change the problem, get it solved. These are of course day 2, day 3 requirements, not day 1 requirements. Day 1 requirements, no. But all of us, all the insurance companies now become more and more smarter, more conservative, more governance oriented. Even companies which are very less also become quite safe funded. That is a dangerous area. You can make by crores later. Risk assessment of all functions, again, audit, including branch audit, corporate. Branch audit, every branch is covered every once 3 years. No risk, high risk, medium risk branch. Corporate agent audit, again, every corporate agent is audited. This was compulsory earlier, not compulsory, but risk conduct is important. Management request audits, regulatory audits, risk reviews, again, sometimes independently done, and presentations to the board. But office, I spoke to you about 800 deliveries. There are lots of daily. We listen to calls every day of the dealers. Now, auditor is saying you should put minimum number of calls to listen. We'll say we'll at least do 10 calls. But record those and keep it. So, voice call check, again, declarations, market risk monitoring, credit risk concurrent audit. ALM is key, as I explained earlier. Executive control for investment and ALM company. So you have lots of quarterly board meetings, so therefore we need to have monthly meetings. And then you have to have periodic group meetings and then independent reviews and audits, all reported to the board. So board is not just one board, so there's the board, then there's a board risk committee, there's a board audit and compliance committee, there's a board policyholders protection, there's a board investment committee, board CSR, and so we have so many boards. Each of the boards we have to prepare presentation monthly and then sum it up quarterly and give it to the board. Reviewed again so many times. I cannot speak a different language than the CEO, so we have to agree on the language. And then come to some kind of understanding and then speak the same language. These are the boards. Looking at this, anything ALM of course is there. ALM and bridge sometimes you can combine, sometimes you separate. We are a separate company. That transfer, what happens is locked by the regulator from my company, not other company. And then of course, very important board regulation committee. Most decisions are taken in the board regulation committee. Let's say committee council, who's been 130, control committee, last 10 days. Dashboard committee, again, monthly once. Investment committee, fortnightly once, or more than that. Claims review committee, monthly one. Board of directors present. So remote committee now we have a policy holder committee. And there's an expert that comes analysis. This is again frequently. This is also depending on the company. So then we have risk sensitization where like what I'm doing now, you go to the branch and sensitize. Fraud prevention, mitigation, loss database, key risk indicator. So when we move to risk-based capital from 150% solvency, I have to demonstrate audit, dashboard, all this. Prove, no problem, risk-based capital act. कोई risk नहीं है. That's why I have to prove all that. Then they'll allow me to reduce from 150% solvency to less than that. What is my actual solvency? 238, 236. So we still keep, Japanese are very conservative, so we still keep a lot of excess money as solvency. That's because I told you the nature of insurance companies is to be safe. These are the dashboards, red, amber, green, colors, scores, for each process, function, sub-process. Again, fraud prevention machinery also goes through all this. Recently, in Audit, they said that training has to be electronically done. And again, training. We showed them so many PPTs. We also showed them the attendance. They said, no, it's not still electronically done. So, okay, so we launch it electronically now. Electronically means you have to prove that every employee sees this, and then their salaries won't go through, their attendance won't go through unless they have picked saying they've seen the presentation. So it's on the e-journal. And market risk again very important, very tough area. Where is very high insurance industry, so it is staging. Because all banking and insurance portfolios are different. If you compare bank with insurance, and the bank auditor is also the bank director. Because you are like connected, then we explain to insurance company. We have to explain them what is the appropriate where, industrial where, alpha, beta, stuff, etc. Then I think now it's on hold. Because most of our portfolio is GSET. It's quite safe. So the non-GSET person is very less. Then we have to explain that. Again, we have to go through character, capital, capacity, collateral, and everything, even in the insurance company. Then we come to this is a frightening area. Information security risk. Nobody safe. Just now I read for yesterday, there's an Indonesian company which is at about 10,000 or 15,000 of Indian companies. The public news center. Imagine the kind of, so I call my vendor and said, critics fail because we have been hacked. Do you know a cyber security guy? Do you know a cyber legal guy? Like, it's not something wrong. So it's tough. And this area is like, you put so many controls in all the aspects. Internal, like firewall, external firewall, DMZ, and anti-spamming. So it was a spam, that CFO, CEO, the one that I spoke to you about. And because of the email difference. And laws and regulations, policies, threats, vulnerability, these threats are increased, of course. Worst is now the CERT, which is the government body based in Delhi, has put a, what is it called, a pilot portal called honeypots. They put honeypots in both in my DR and the main server area. They also produce reports almost every week. And those reports also have to take care of. So we have a PAPT done daily of all publicly exposed items. One. Then I have a SIEM, which listens to logs of all these network units and gives a review. Then there is a risk review that is done by independent person on each of the security items. Then there's now honeypot report. All these 5 reports have to be given to my security guys and say fix it. Of course, there are major vulnerabilities, minor vulnerabilities. That's what there have been so no major vulnerability. But security is such an area. Even a minor vulnerability can be dangerous. So again, we have to be careful. And of course, this is the actuarial area. And of course, I have to cover the mortality part will be very interesting. And so there is an insurance risk dashboard. What does it actually do? Basically, does pricing. What does it do pricing? You have to expand next 20 years and say, ऐसे होगा loss, ऐसे होगा business, ऐसे होगा underwriting cases, ऐसे होगा claim, ऐसे होगा investment return, कितना पैसा आएगा. That's what it does, pricing, modeling. And then there are modeling experts who come and review. We also have 2 sorts of modeling experts who review. One from IIT, one from here. And so after that, then they have to do pricing, they have to do reserving based on the actual experience. Pricing is modeling. Then you have reserving and valuation. And every year you have to do valuation. Of course, with listing and all that, it's increased now. Quarterly they have to do. And quarterly, of course, as insurance, quarterly validation of those assumptions, pricing differences, etc., to be taken care of. Many companies have problems with persistency. Persistency, when they do assumptions, they presume 75% at least persistency. And many companies did not have persistency of 100%. They are 50, 60, but all of them have gone up slowly. Industry has gone up. Like my company's persistency now is 80, 81. But my Japanese friend, so when Japanese company 98 became 93, they spent 1,000 crores to understand why it became 98 and 93. And then set up systems for 1,000 crore include systems set up and all that. They're so conservative. And so they think, what is this persistency? When they came, we were 56. This 56 was like crazy for many years. From there to reach to what we have reached, what we have reached. It's a long journey, tough journey, very disciplined journey. Because you have to insist the salesman cannot sell the easy policy, he has to tell the stuff. Sell a tough policy, which is long pay, long persistency. And also got to put up calls, radio, and see customer really understand. Many times customers don't understand, but they pretend to understand. So they have a problem. And then we have to get those premiums also for so many years. If you don't get premiums for 7 years, you're in a loss in that policy, generally. Because it's a long life policy. And therefore persistency will be good. Our 7 or 8 year persistency is now only above 50, 53. My 13-month persistency is 81%. 7-year persistency or 8-year persistency is 51 or 53. It has to go up to 70. Then we were a safe company. So this is the journey. Of course, my profits have gone up to 100 crores now, but it was at 1 crore, half a crore long back. And so with that journey also, half a crore to 10 crore, 10 crore to 30 crore, 30 to 40, 40 to 60, 60 to 100. It's not an easy journey, tough journey. So many requirements, provisions, and somebody asked about GST. Good question. So GST again is a very interesting incident. So, luckily, my company is not into distributor framework, more agents and employee framework. We are very less distributors. The problem comes only when you have a distributor framework. Distributor framework demands more than the commission limit laid down by. And so we have to pay the distributors more than what is filed with the IDF company. But actually, we are taking out of selling costs, which is planned in the product, and then paying that to the distributor. What GST is saying is, it is not real expense. The expense is actually commission, and you're saying it is expense. So that's the argument point between GST and the industry. Industry, of course, is gone and shaken in finance ministry and everybody says that it's for your GST guys to audit. They're crazy. जो भी पैसा आ रहा है वो भी नहीं आएगा बाद में to take that. Of course, the idea has been nice to change the commission limits now, made it free to the board. From this year, it shouldn't be a problem of GST. And because GST had raised the problem, income tax didn't keep quiet. Income tax said all those expenses that you incurred will be disallowed. So people have been in with 100 crores, 50 crores, 70 crores, 30 crores, 30 crores. Luckily, we contributed only 1.5 crores. But that again under protest because whether or not you must contribute. Now I take Punga with any regulator or tax people. It's a dangerous item. So of course we were nice, they didn't invade us, they didn't investigate, they called us to their office, give us the station nice to us. So this is the good part of the dealing with GST and taxes. Therefore, we don't know what is contingent liability, what is a footnote. Everybody has to work that out this year. But very interesting question. So that is about insurance risk. Then you have the business continuity planning. As I mentioned, a separate degree for security, separate degree for BCP, audited externally every year, tough process. We also have automation, we run analytics. I run something called it used to be post-issuance risk verification. Now it is pre-issuance risk verification. Because the underwriters give us the whole lot now, what we do is we do investigation there. Wherever there is suspicion, we do investigation. So my analytics throw out propensity scores. Propensity score is Will the customer pay premium for 7 years, pay premium for 10 years? Now, if your customers, I had one customer whose bones were visible in X-ray, and we were thinking that is a Dawood, means a shoe dealer, a good shop and all that, because what was written as shoe business. Finally, he was not even a shoe, he was a cobbler. And totally drunk, with all the bones visible in the X-ray, and insured for 5 lakhs. So this is the actual state of affairs when you look at the proposal form and the investigative case. And so you need to have triggers, you need to have monitor, and of course we decline that policy later because of course the information given was wrong, etc., etc., etc. The income was wrong. But you don't get evidence always. Where you don't get evidence, you have to pay. Like my settlement ratio is 98.6 or 98.5. Means 1.5% only we were able to decline. That's very key, not easy. What I declined was the pre-issuance verification. It's not part of that scope because numerator will get denominator will get. So more and more stress is on pre-issuance risk verification and not post-issuance risk verification. That is under section called section 45, which has been amended. Which says that after 3 years you can't reject the policy, even if it's a fraud. So, unless of course there is validity of contract, means the policy holder never existed, everything is fake, then I can reject. But non-disclosure, I cannot reject after 3 years. So you might have cancer, you might have whatever, you survive 3 years, you have to pay the claim. That's the law. And so, have to do first year verification, have to do second year verification, have to do third year verification. After that, no verification. So what we do pre, we also do post. And I can show you some scores of that. So this actually I was a claim side because my company, the CEO had resigned. So they didn't appoint a new CEO, they had operations person. So the CEO's posts were bifurcated. And I got information systems, investigations and claims. So I said, any reputation comes to me. Pay करके तो नहीं आता, नहीं pay करके तो आता है, because it's a reputation risk. मैंने आज क्या है, ये सर ये तो 80 साल आप देखो को तो आ गया investigator से, उसको बताया गया 60, 50, 55, तो क्या है, ठीक है, इसका क्या प्रॉब्लम, एक इसको कैंसर था, I got this hospital report, but he's been so he's written everything is good. So I had something like 7 or 8 parameters. I said, I'm just rejecting claims and making my settlement ratio bad. And it's not the right way to do business because you're creating so much of. I don't know who's the problem person, the salesman or the customer, or both. Sometimes both, sometimes salesman, sometimes customer doesn't even know. मुझे तो बोला कि मिल जाएगा, मैंने पैसा दिया, आपने साइन किया है इधर देखो, हाँ मैंने सब साइन किया, मैंने पढ़ा नहीं, पढ़ते नहीं है लोग फॉर्म, with the reality of life. So what do we do? So I had some 7, 8 parameters. I said investigate. Of course, I was a worst enemy in the company itself. Salesman will say all salesmen are with guns. ये क्या कर रहे हैं तुम? Because you know you rejecting policies after you issue. Nobody does this. बोला तो ठीक है ऐसे करो आप IRD से पूछ लेते हैं कर सकते हैं कि नहीं कर सकते हैं because policy has a clause if customer gives false information or fraudulent information I already right to cancel the policy and forfeit the premium. Okay, then was CEO was likely supportive. The main claims was bad. 180% in some places, 300% in some places, 240 in some places. When I say 300 means if I predict 100, then 300 actually die. 240 means 240 die instead of 100. 120 instead of 100. And you did a lot of research on this in 2011, 12.
I'm sorry, I paused you.
No problem.
IRD clearly says at a claim stage, we can't deny the claim.
Absolutely right.
And after 3 years of the policy, in fact, then you can't challenge the information disclosed. So if you have made this as a control, but if my policy has already been completed the tenure of length of 3 years, then Even I won't be able to deny the.
So that's why I do this first year, second year, third year, stop. I don't do after 3 years.
Okay, so these control you have, is that,
I do the first month, I get first year, second year, third year. I do this in 15 days time.
but then in that case, we do it CA card, it's like cancel from inception. So means then we can recover certain charges which we have spent and then we pay the balance.
If it is valid, if it is not valid, and he is given false information, and I prove that it is fraud, then I don't have to give it.
So with this control is for first year.
Yeah, 3 years.
Third year we can't, right?
No, 3 years. Fourth year we can. दो का पहले तो 3 हुआ सेक्शन 40 का आंसर चाहिए
Then I think, yeah.
deadman okay we had lots of deadman insurance cases the guy is already dead and then insurance paid. That I can cancel anytime because there's no contract so the question of legal contract is not valid. Of course I can cancel after 3 years, no way. I have the conditions for that. They have questioned already. These companies are cancelling policies after 3 years. Then you have to explain, no sir, ऐसा नहीं है, ऐसा है. So there's a lot of audits that happen. IIT also does lots of inspections for this and runs analytics. They come with all laptops now, take data and then run dashboards. It's not easy. Before also they are now, correct. Yes. Also, very interesting experience. First year I spent about 45 lakhs, paid about 40 crores, 2012 or 13. Next year, 14, I spent about 50 lakhs, saved about 60 crores. 60 crores, right? Something like that. And so then I said, Jayesh, whatever magic I'm also not magic anyway. So I asked my analytics team to work on this. They were SAS team. And they worked on this, they added 10 crores more. They made it whatever 7 or 6 items I had given, they made it 36 items with combos and this and that. Now it has become very complex item. The intelligence unit sits on this. And it saves a lot of money. We made 5 baskets. Red mine was one very high goal. Red mine में तो सवाल ही नहीं उठता है. I don't know. Person suffering from critical illness, again, overage, 85, 95, how can you insure? Actuarial is 55. Because if your policy allows 85, it's fine. It depends on the policy condition. Boundary condition that we call it. Then there is high risk. No such person exists. Means actually कोई और था सुंदर कृष्णन और कोई है और वो जो सुंदर कृष्णन है वो और कोई है. Occupation again wrong. So like that we made this and very high we cancel. Medium flow में we don't cancel, we give it back to the sales person. Boss तुमने ये लाया तुम जाके check करो. उसमें भी 99% never come back. Only 0.5% come back. जैसे नहीं ये customer था abroad गया है ये तो आ गया passport है इसका okay. 1 or 2 cases you get that's it. So that's how we saved 97 death and I saved 203 overhead. I saved just 6 months that time. 221 critical expenses and then savings of that time, premiums and that. So then of course we got several awards for that because it's innovative. Nobody did what I did at that time. Now everybody does because of section 45. The law also changed. And so this was an interesting mortality level experience. Then now we do also persistency also same because persistency is key. If life insurance company doesn't get persistency for 7-8 years, there. Then there is governance risk. Again, meetings have to be, directors have to be again safe. One of my director was a director in a defaulting company. Then section 164 kicks in. Then he said, Sunder, I already resigned from that company. Then we have to see resignation date, admission date, when the company became default. Luckily, he was safe. You know, you have to protect your directors also. They do disclosure, of course, to you. Agenda, D-conflict, joint venture agreement, how does it? IIT has a very detailed corporate governance regulation. Nowadays, IIT is doing more thematic audits. They don't do normal inspection. They do sophisticated inspection. So there was an investigation or inspection only on corporate governance. They came up with some 20 items. So carried to read all those 20 items. We did, they related. And then luckily there is no super notice. So last 4 or 5 years, no show cause notice, no warning, no, again, fine, warning bhi nahi hai. So we're safe for 4 years now. But it's a tough task. So the compliance has to be inbuilt in the blood of every person you are. It's not only risk management, but everybody, compliance. But each and every person has to be compliant. Again, outsourcing regulations. As we're actually on a case with IIT on this. We won the case, IIT got back the case, then they reduced the fine, they removed all the comments, nasty comments they had. So, again, long journey on this governance risk. Fraud risk, again, as I mentioned, we work closely with police, CBI, analytics also. We have surveillance triggers here again in fraud. Compliance, again, we do self-check, certification, independent review by a third party, training to staff. Again, we are in implementation, we do lots of work there, automation there. And culture. This is the key actually. Finally, it doesn't depend on Sunder Krishnan, but it depends on everybody in the company. How risk aware they are, how disciplined they are. I remember salesmen used to come with their own Wi-Fi equipment in the branch. So from that scenario where we have changed today, it's amazing. I mean, totally controlled. You get to know things much in advance. And yet I'm telling you, I'm not secure. Because that's the kind of vulnerability and hazard that have come in the environment. And again, automation, very important. Again, of course, I just thought I'll give you sample of one of the area investment limits. I've already spoken about that. We have all these kinds of assets, AAA, and there are investing levels. There are again GTech limit. About 75% is in GTech balances in AAA or companies like that. I'll forward the slides to the institute. I think I've already done that. You have the slides, so can give it to everybody. We'll go through faster. Quickly to what are the opportunities for CA? With the risk management again, I've got many CAs working for me. So again, chartered accountants are very key required. Actually, also, as a lot of chartered accountants who are doing actually, some people have passed 6 papers, some people have passed 9 papers, some people have passed 1,000 papers. For various kinds of actually for CAs now. This is very interesting development last 4 or 5 years. And we have so many other areas, investment audit, concurrent audit, system audit, all that chartered accountants are required. In compliance again, I find a lot of company secretaries and chartered accountants. There are chartered accountants who do company secretary and then they are working again. Then the CFOs are all CAs, but I'm a non-CA CFO. Then there's internal audit again, mostly CAs. Good contribution. So, a lot of roles that CFOs play in planning, budget, forecast, CFO, actuary, participation in systems. A lot of CAs are now more IT people now. They've removed CA from their curriculum work, sponsorship, lead role, project management, outsourcing. Again, audit, QA, quality review, training, best practice, partnering with strategy units, inventory, NPR, review process. This is a practice area for CAs. System audit once in 3 years or once in 2 years, internal audit, concurrent audit, risk review, compliance reviews, spot check, branch audit, investment governance check, risk management consulting, asset, liability management. So again, as I mentioned, outsourcing, everything is outsourced to CS. More and more work is being given to chartered accountants. So within underwriting, you will have some kind of company being underwriting. Within claims, you will have investigations being done. Legal again, some work is given. So a lot of outsourcing happens. It's like big kind of. We have an outsourcing committee. Anything more than 20 lakhs goes to that committee. Forget outsourcing anything. And then of course, core outsourcing also goes to what's going on. And then when you go through that committee, it means finance approval has to be there. Budget has to be there, agreement has to be there. Quite tough. There's a lot of checks also we do. Every year we do independent field checks. You have seen companies are there in paper, but actually it doesn't exist. 4 5 years back or 6 years back. Those were days now, we don't have such items. Gone more and more conservative. And it's not only about my company, all companies have gone through the journey. So that I thought I'll hand over. Thank you so much. Any questions, please?
Internal audit and risk. Nowadays, these both departments are legally formed in organizations.
Usually,
Internal audit and risk audit. How these? No, I'm fine, I'm auditing. So internal audit and risk, both different functions nowadays in an organization. So how, what's make your view on that? How internal audit and risk are different? Just to,
you think first question I got in 2006, first board committee meeting. How can you be head of audit and compliance and risk? First question. And this challenging meeting. And of course, the person who asked was a very well-known expert. I don't want to name it now. So I said that. So what we do actually is the field audit work of internal audit, not statutory audit, not internal audit. It is done by external firm. We had very specialist internal audit firms who help us in the audit work. We don't do audit ourselves. And the internal audit head, or therefore is an independent person who comes to the audit committee. And the field audit guy also comes to the audit committee. And the board has got a monitoring kind of role or responsibility on the auditors. They deal with auditors, they know the auditors, they understand from auditors what the company is. That way independence is maintained. Why do we combine audit compliance risk? The idea is that there should be no silo risk. Many times what happens in risk work, I find non-compliance issues. Then I tell compliance guy about compliance guy finds risk issues in his work and audit issues in his work. And so we want to avoid that silo risk, so we sort of centrally monitor it. So what is monitored is the risk assessment, not work. The audit work is independent. I cannot question why did you audit this and why you did not audit that. Sampling is daily. Risk assessment is also, they also do, we also do, we compare. And then we do the plan. When I do a plan, I do plan for 3 years, high, medium, low. And then I do every year plan. Even after doing 3 year plan, every year plan also I have to do. I have to get both approved by the audit committee. And then the work is being monitored. Now, again, before also monitors, Reliance Capital. Of course, now Reliance Capital is monitored. Now the directors committee. So this is how we ensure internal audit is different from this and compliance.
There are organizations who have internally internal audit. In-house,
Also, we are also having internal audit. I tell him, I told him 100 times, don't call yourself the internal audit. He likes to call. He says, that risk and internal audit. I need to do internal audit. You make a better work. वो कर रहा हूँ काम बहुत कर रहा हूँ अरे काम तो कर रहे हैं ठीक है so that's the work that you do monitoring work it's not internal audit work and whatever reviews you do risk review it's not audit but sometimes what we do branch audits so I give a lot of branch audits to chartered accountants in the regions because there are specialties so then they and then they report to us this is not handled by the internal auditor but he will monitors it and if he wants he can go to the branch also. The independence freedom is left to the external auditor. That's how we ensure the independence between internal audit, risk, and compliance. Very important question. Anything else? Thank you so much.
So he inspired us, right? So we all were inspired by you, and of course your practical experience along with your presentation made this seminar very interesting. And time was a bit barren for you. Otherwise, you could have continued, and we could have continued listening to you. So it was very interesting, and I propose a happy vote of thanks, sir, with a round of applause. We will take a lunch break of 1 hour.
I will repeat this wonderful.
Friends. I think all of us had delicious lunch and post lunch session is usually heavy, but chairman sir and the entire team has planned smartly the interesting panel discussion so that none of us are, will have a feeling of sleeping post such a delicious lunch. DFSI as a sector, we understand, wherever there can be, the business is up and down, but banking, insurance is one such sector where, there is a constant growth for past several years in India. And we as a chartered accountants, we have been, predominantly doing most of the time CNAG audits of branches and DOs of the general insurance. Sometimes we get empaneled with the company like LIC, which was, for years the only insurance company in India owned by the government. Post the sector opening up, now we have n number of companies. There are so many changes which have come up in the regulation by the regulators like IRDA. We have so many private companies having insurance businesses of life, non-life, and we have, worthy panelists, all three panelists for today's discussion and including the very learned moderator for this session, Vitesh. There are so many opportunities, trust me, and the opportunities are so many which we are not able to think over. We think that only there is a statutory audit or there is a internal audit or there is, a routine kind of work which we used to do in past. Now beginning with, a lot of claim audit, forensic audit, the certification work, the concurrent work, and the entire field of insurance is, much better and comparable with the entire banking field. We have been always focusing only more on banking and doing, some internal audit, concurrent audit, stack audit of bank branches. And never thinking about insurance as a sector. The biggest, reason, one of the reasons for that is that the fees part. We as a practitioner, we understand that in the bank branch audit, no fees are linked with the advances. Here also, I personally feel fees should be linked with the claim or insurance premium collected. Then it is going to attract more and more practicing chartered accountants. With this opening remark, let me introduce all three worthy panelists for the day, for this panel. First, Nilesh Mijari. Nilesh is a seasoned visionary finance professional over 20+ years of experience in insurance sector, covering life insurance, general insurance, health insurance, reinsurance. He has experience in insurance sector as a chief financial officer, chief compliance officer, and chief risk officer. He has worked as a founder member in multiple startup insurance companies. A very brief introduction but a very worthy speaker on the panel. We welcome you, sir. Next, our speaker is Hemant Jain, chartered accountant with again more than 20+ years of experience in working with big corporates like Satyam Computer, Bajaj Alliance, Reliance, and he has become CFO at a very young age of 35 years and currently working with Reliance Insurance since 2008. Reliance General Insurance, I did not say, but Reliance General Insurance is one of the leading general insurance company and fastest growing company in India. Our third worthy speaker is Shailendra Kothavale. Shailendra has been, Chief Compliance Officer and Chief Risk Officer at Audit Insurance, which includes the control functions of entrepreneurial risk management. He has been involved into the compliance, investment, analysis, information security, business continuity, market conduct, and various other activities. He has been, he has worked into the true life insurance for almost 10+ years. He has been, working into the various capacities into the different companies, including system auditors experience. It is very important in today's time to have, the knowledge of system into any sort of, business. He has worked on the technical guide of audit of life insurance companies issued by Institute of Chartered Accountants of India, which is a, most important publication to my mind if you go on to do the audit of insurance companies. And he has won a prestigious Golden Peacock Award into the risk management, multiple information. So with this, we welcome you, sir. Very glad to have you on the panel. Our moderator for the panel is Vitesh Gandhi. Vitesh bhai has been, again a very seasoned professional chartered accountant into practice. He was partner with Chaturvedi and Shah and has done a lot of leading insurance companies audit, banking audit. Currently, he has joined as partner of Manubhai and Shah and he will be heading practice of Manubhai and Shah. Again, a very renowned firm into the CA field in Ahmedabad based, and now they have started offices in Mumbai with Vitesh bhai leading the team. So we have, very experienced team member as well as very experienced moderator, and I'm sure this session is going to be rocking and we'll be learning about a lot of opportunities which are there into the insurance sector. And I request all of you to once again welcome all the panelists and the participants.
Quickly, friends, as you can see, it's a variety of a panel here. And let me really congratulate all of them. This is the busiest season for each one of them, insurance audits. I would require all of you to please put your hands together, a louder one for Nilesh sir. I think on one day, just yesterday we had reached out to him, sir, we need you, and he was there with us, and I really want to thank Vikas bhai to make this possible. Please have a huge round of applause for him. What did I do? I started my career and then I was an ethical. I worked under the CFO of a dynamic company, insurance company. I come from that background, and today I'm happily sharing that space with then CFO sir, Hemant Jain sir. Really, it's a pleasure, sir. And thank you for accepting this invitation. The first person whom I reached out to and he said, good, you should do this. I think first ever program in WIRC on audits, you should do this. And despite having a very hectic schedule, he has just taken out time and come for only for this time. So huge round of applause for Hemant. And again, Shailendra sir, just in a short notice, again, just gave him a call, and we want to have you here. Of course, I had to reach out to a very tall figure again in this Kumaraswami Jati. And therefore he connected and he said, yes, let's do this. Thank you, Shailendra bhai, also for here. And Vitesh bhai, really, amidst all this merger acquisition that he's been part of, he has taken out time to be here. And Ketan bhai, thank you for having a trial and for this entire panel discussion. I think very knowledgeable session curated by Vitesh bhai. So I think overall, it's like a fantastic feeling that this panel has shaped up in this manner. And I'm really hopeful that all of you will have a great evening. Thank you.
Thank you, and now it's a time to, honor over the speaker, panelist, and the moderator. I request Chairman Kamra to first, felicitate Nilesh sir with the moment as a mark of our global play. I request Secretary WIRC CA Saurabh Balvera to offer a moment to see Hemant Jain, sir. I request my colleague in council, Vitesh, to offer a moment to Shailendra, sir. Thank you, Vitesh. And I take this privilege of giving moments to Vitesh, right? Without taking any time, I'll request Vitesh bhai to take it over and we can begin with the session. Over to you, Vitesh bhai.
Hello. Good afternoon, everyone. After the lunch, this topic on a panel discussion, I think this is the right time. Typically, we should be discussed with the Indian speakers over here and who come from background from industry. So, I assume over here, most of the people who attend this seminar are from Chartered community and they are doing practice. That is when I told. So, area of practice we need to be focused. So, the good section for point of view, we have been called a speaker for a discussion on a panel discussion, CFO and a risk compliance officer for company. So I think the better to deal with them to discuss the situation for reporting mostly. Ideally, if you go to the insurance within like bank audit was series of webinars. I think if you see a WRC or any of our council of institute, maybe for bank audit. You saw February, you come to know it is the bank audit sitting going on. So bank audit is going to be start now. Technically, brand will publish RBI, every stage of process they know, but nothing much heard about insurance side. And insurance is a sector is not other than banking. If you see today is a scenario in Indian point of view, we have 4 public insurance companies, they are very large. One private insurance, one life insurance company like LIC would put on the state, and 23 plus 23. The life and non-life, altogether 46 companies are there. If you see that there is opportunity for insurance for auditors, yes, there is immense opportunity. Now, what kind of opportunity we have in insurance sector? Definitely the statutory auditors of the private insurance company. And idea make it compulsory rules of joint audit. So this is the industry where the compulsory reason has to be a joint auditor. There is no case of limits, like NBFC is a limit. If you reach a 15,000 crore, then you should be have a double auditor or joint auditor like that. But in an insurance company, once insurance company be formed, registered, is taking a license, there has to be a joint audit. So here the friend, opportunity work with the co-auditor is very, very valuable, number one. Number two, if you see the external insurance company, they always appoint a branch auditor and DO auditors. And as far as LIC is concerned, they appoint DO auditors. So this practice field was there for many years. Appointing of branch auditors, DO auditors, and secretary auditor of branch, and internal auditors, then central auditors, they are practicing many years. But apart from that, I don't think so in chartered accountant community, people think that there is an opportunity for internal. It's an immense opportunity. If you see, as Sunder told about internal auditor, someone asked about risk audit. Now, apart from internal risk, this is the common, we think about it. But all the insurance company, what they do basically, they collect the premium, they settle the claim, they do invest. So there is an investment audit also is happening everywhere. You see that there are 26 companies, 46 companies. So they are a concurrent auditor for investment. It's compulsory by idea. There is a scope for investment audits, number one. Number two, they require an audit for cyber security. They require audit for IS security. They require risk and compliance audit basically from their respective verticals because IIT come out with so many circulars. As chartered accountant, we have a tendency to look at the circular in detail. So we comply ourselves and we try to mitigate the risk assessment for the compliance side. So there is an opportunity for risk compliance audit. Apart from that, if you go to integrity of business, if you go integrity of business like a general insurance company or a life insurance company, claim audit. This is also taken assignment by the chartered accountant nowadays. If you see even medical, third party claim assistant also, chartered accountant assists to the team. And now lately, the insurance company is covering the various branches to all over India. So audit committee has mandated them in some of the branches, not all the branches. You are required to carry out independent audit in respect of internal audit or risk audits. So chartered accountant has a scope of getting a branch audit also in an insurance field. It has never been accepted by anybody of us. By branch audit, इसमें होता है कि नहीं होता है? No, there is a scope. Even Sunder told in his presentation, if you listen carefully, there is some mandate in a branch in rural area, tier 2 city, tier 3 city. As a management, they want some confidence, independent verification by a chartered accountant about integrity about the branch, accounting, housekeeping, and policy assurance. So all the activity has to be called by a chartered accountant. So I think the sector has been growing now, and there's a lot of opportunity for chartered accountants. If you really want to work on the insurance sector, there is immense opportunity going to come. Now coming to the sector, friends, the insurance sector has a cap or a limit. 100 crores. Earlier the limit was 200 crores. If you want to open insurance company, you require a minimum capital criteria. So now the limit is reduced to 20 CR. So anyone can form a company of insurance company 20 CR and they are 20 licenses going to come now. Already 3 years been passed. So then you see the rural, micro, all insurance sectors going to come in now. So this is a great opportunity for chartered accountant. If you have a vision to carry out an insurance audit, then this is an opportunity to come. Now, looking at the scenario, I think we should start discussing on what are the challenges in audits. So I think we can discuss with the panelists over here. It becomes easy for us to get some in-hand experience, basically what kind of challenge in audit, because they deal day-to-day audit. Because whatever audit I told you, they are dealing with their capacity of CFO or their respective verticals wherever they locate. So I will start with Hemant Jain. He faced many of auditors. Maybe statutory auditors, internal auditors, risk auditors, investment auditors, or a claim auditors. What kind of challenges he sees in Hemant Jain?
Thank you, Vitesh. As far as audit of insurance companies are there, I think Vitesh has already cleared that there are so many areas where chartered accountants can play their role as far as the audits are concerned. Regarding the challenges, I think the first important thing is that the understanding of regulations in a very detailed manner is one important thing, because insurance is not like the banking sector where generally chartered accountants are engaging like in the involved themselves in bank audits and various kind. Insurance companies are not in that way that chartered accountants are very familiar with. So I think the most important thing is the changes in these regulations, and then in the last 1 year or so, you may have seen that there are significant changes which has happened in terms of various kind of regulations. Mr. Devashish Panda, who is joined 1 year before, I think almost there are so many regulations they have like brought in the last 1 year. I think at this point of time, going through all those regulations in detail, is going to be one important area. Good part is that nowadays, with thanks to the technology and the system, most of the companies have enough data in their systems, which is available for auditors really to have a deep dive. And now gone are the days then when earlier people used to do kind of sample audits. Now with the use of technology, you can do like a thorough audit, complete 100% checking with the use of technology, and the data and everything is available. So a lot of analytics or those kind of things chartered accountants can use while conducting the audit. So understanding how to conduct audit using technology and good understanding of analytical tools, I think is an important thing in my view that one should have. These are other things. Otherwise, I think understanding of regulation and use of analytics these are the two important things which if you have, then it will be very easy for you to like do any kind of audit which is there. And other important area post COVID, you know that the things have streamlined in terms of like exchanging of the data and information. You can do the audit by sitting at your place. There is no need to come to insurance companies or office. So I think those kind of things already like significantly resolved.
Hemant Jain, we want to mention one more thing, since dealing with the general insurance company. So can you throw light on the accounting community, basically on opportunity on the insurance side, basically about the fraud audit, about the claim audits, about the investigations, what we do basically wherever there is opportunity to go.
Yeah, it's a very interesting question. As far as the fraud audits are concerned, let me tell you that in our business, frauds are very like a significant proportion of our transactions can lead into the fraud if we count in terms of number of transactions. And the reason is that we deal in volumes in terms of our transactions, and we deal with, you know, that the intermediaries, we deal with customer, we deal with like various kind of entities who are actually smaller, not like in corporate environment and all. From that perspective, and the other important thing, many times people really don't know whether they are doing a fraud by doing a claim. They think that this is their right. So there are, if you ask me, of the claims value, though the numbers are not there, but based on various kind of reports and studies, in insurance generally the fraud is in the range of about 10% of their claim size. And in certain specific lines like health and all, it is as high as like goes to up to 15% also. So fraud is very big in insurance sector, and there is a need to all insurance companies really to have good control on the fraud, because that is the only piece. If an insurance company is able to manage, then their profitability is set. And if any insurance company is not able to manage that piece, they are gone. So it's a very important area. Now from chartered accountant point of view, I think analytics, using analytics, as I earlier mentioned that by doing the audit, you should use the tools by doing audit of 100% transaction. By using analytics also, you can identify various kind of patterns, things which can help you to understand what are the possible areas where frauds are possible. And now the things is it is not like you need to do in a reactive manner. Now the important thing is that you should be able to do in a proactive manner. Like we as a company, what we are doing that we are putting triggers in our system in advance, so that any transaction happens, if that transaction has certain like points which are triggers of a possible fraud, we understand it in advance, and then we try to eliminate those kind of things. I think this is very important from chartered accountant point of view, that when you are doing any kind of such audits, you should be able to implement those kind of things in advance, so that before an event occur, we can actually protect the things. So that's one area. Second important area on the investigation side, of course, chartered accountants are playing a very big role in case of any large losses, especially in corporate property segments, fire insurance, engineering insurance, marine insurance. And the primary reason is that CS have a good understanding in terms of financial number, understanding of balance sheet, understanding the size of stocks and all, and doing right kind of valuation. In case of the loss of profit policies, really calculating what kind of the loss which really has occurred. So definitely, being the expert of the finance domain, CS plays a very big role. So I think investigation is another important area for you to look into it. And lot of people, lot of chartered accountants are working as a surveyor. So that's one important area where you can have good your understanding with your clients, and you can give a good kind of services to your clients.
Yeah, this is something especially I want to draw attention, because in a audit of a claim basically, if you see the general insurance public perspective, normally the claims audits, as a chartered accountant, we think what is our role basically to play? Because already internal auditors are there, risk auditors are there, scheduled auditors. But if you do investigation kind of a fraud, where chartered accountant claims into picture, number one. Number two, wherever there is a valuation to be done, because there is a loss of profit policy. This fire occurred in the factory will close for 10 days or 15 days, then how the loss of profit is being calculated. The insurance company take a help of chartered accountant. Not only chartered accountant, insurance companies grown to the further extent in this medical claim third party. Now they put a people as a doctor, as a valuer basically to validate the claims. If a chartered accountant or a finance guy need to be scrutinized a bill for a medical reason, then they will not go into integrity of the reason for the medical bills. But if a doctor has understood this bill, so what happened? This bill is so big in a general insurance point of view, not only chartered accountant, even doctors, engineers, even motor insurance also, they put engineer in the bill, the claim department. So they recruiting engineer also in the department to pass the claim for the engineering point of view. So this is the field basically now we need to be concentrated apart from finance audit. There is a scope for chartered accountant for the big losses. They do investigations about loss of profit policy, and where the chartered accountant come to picture and validate the claim method, validate the claim profit, and validate the arrived of claim amount. So this is a big opportunity. Now coming to Nilesh Bhai, just want to understand basically this impact of COVID, because last 2-3 years we see that the COVID has been changed a lot of things in the industry, especially on insurance side. So can you think to our audience basically about what we learned from COVID on the COVID side, about risk, about learning, about penetration, about digitalization? Can you throw light on that?
See, from a COVID point of view, I can say that COVID has created an opportunity for an insurance sector as a whole. Because insurance sector is what? It's a liability of the policyholder that we write in our books of account. So COVID has made people, it's an auto advertisement that has happened. So God has done that advertisement for an insurance company, and people are made well aware of the different kind of risk that is there in everybody's life and how that risk can be mitigated with an insurance company as such. So that's an opportunity which has created into an insurance company, and that's one of the big reasons for which if you see life, general, health and RI, there are total 57 insurance companies in India, and there are already 20 insurance companies about to apply for a license. 3 of them have already received. So there is a 40% growth in the insurance sector, which is going to happen shortly. Yeah, and I think with as a chartered accountant, the list of audit and list of opportunities which we have, I think even by and Vitesh Bhai has already explained. So there are immense opportunity that is there. And COVID has made us change in the business model as such as well. Because COVID has forced most of the insurance company to automate their process. So I would, as a chartered accountant, and I would request all the other chartered accountant as well, don't try to, because most of the BFSI CAs have turned out to be an auditor in the different field within the insurance company. I would only request, don't try to copy paste your past experience of different sector into an insurance company. Most of them have failed because of that. Insurance sector as in finance and as more from an accounting point of view, it's not an easy financial to understand as such, because most of the company, if you see, you have a P&L and balance sheet. Here you have revenue, P&L and balance sheet. So what is the purpose for it? So I would only request, or I would only say that as a chartered accountant, try to be a smart worker and try to understand the nitty-gritty of the sector as such, before deciding or before concluding or before giving your opinion or impression about the sector, because there are a lot of nitty-gritties where as an insurance professional for such a long time within the insurance sector, because I work in life, general health, RI as well. There are every day is a new day, and every day is a new day because of the change in the market, change in the complexities of the business, change in the because and now it's going to be more interesting because of the regulatory changes which is coming up. So I would solely say that that the business model and the business, the way we are doing the business is totally different. So don't try to implement or try to give impression about any of the financial thing, what you had previously or which you had last year as well. Because next year, FY21, first April 2023 is going to be a dynamic year as well. Because multiple fronts from operational process and from finance point of view, a lot of changes which are in the plan.
Yeah, I think there is a opportunity for chartered accountant. There is a reason, in fact, what Nilesh was trying to say about that we need to be emphasis on particular sectors for insurance. Our BFSI segment has given experience in the past, but if you look at insurance, that's the reason even I recognize this fact that every chartered accountant firm can do maximum 3 audits, not more than 3 audits. See, this now realized by RBI also. Now RBI also come with the regulation that in maximum 8 NBFC audit you can do it. Such class of companies basically. Even in insurance sector, as a chartered accountant who want to do statutory audits, they do one life, journal, and health. Yes, they can do it. Maximum 2 of any of the sectors, and altogether 3 is the maximum companies who can do it. Even if you take a branch audit or a DO audit, in fact, is considered over there. If you statutory nature kind of a thing. So even insurance industry perspective, I also recognize that a chartered accountant community required to undergo deep understanding about a business. So friends, my discussion with this panel, as these people have taken a time and to come to us. So we not only discuss about the opportunities of audit over here, but we also understand the business also. What kind of environment insurance company has been really doing with the business over here. And then related to that environment, we try to focus that how we can as a chartered accountant get opportunity for that. Now, every over here, you see that someone asked a question over here about GST. GST is the big area for insurance company because they give you the volumes of data. They could use data of premiums. They could use data of claims. They could use investment income. So they have a lot of things, exempt income, non-exempt income. So every bucket of a GST regulation point of view, insurance company has database. So as a chartered accountant, I think we understand now that we can preparedness our side to help the insurance industry in a much larger role in GST part. This is also dominant advantage for us because we know GST regulation very well. We can help to the insurance industry as well. Hemant Jain, this is, I think, this area also is need to be given a good opportunity for chartered accountant. GST.
Definitely, you know that in the GST, and considering the large volume, as you said, that large volume of data and information, definitely opportunity is there. And you know that any loss of input credit is direct impact on the P&L of the company. So no one can afford any kind of loss of input credit. So the first thing is that every company, every business needs to ensure that they should not be having any kind of loss on account of this. And from that perspective, your systems, your process, the way you collect paper, the way you collect invoices, everything. So it is not just checking a paper. I think the entire process need to be seen from that perspective that there should not be any losses. So most of the companies nowadays are trying to get like digital invoices and also that the reconciliation and everything should be easier in from that perspective. The another important thing apart from the claiming of the input tax credit, I think the other important timely filing of various kind of returns, timely deposition of GST, and you know it's a state matter now. It's not like the earlier service tax thing. It's a state subject, so definitely the filing so many returns in across the states and all is very important, critical to do it in a timely manner. And these days, after like 3-4 years from implementation of the GST now, the audits have also started. So in last 2 years, most of us have rendered audits in various states, and we are taking services of CA firms to help us in smooth conduct of like those kind of audits. Where GST department also comes and do the audit. So we generally take the local CA firms services to get that kind of things in smooth manner. So that's one area. So I think from a GST perspective, most of the companies, I think these days are trends are there considering the whole huge volume of the data. again, the technology is very, very important. Like as an insurance company, we are dealing with about 20,000 car garages, motor garages. We are dealing with about 10,000 hospitals and all. So the kind of paperwork, the kind of invoicing happens between us and them, and you know that the credits are available if they have filed the returns and all. So there are processes using like bots and all implemented in place, so that if there are any deviations we face during our monthly work, automatically the mails, reminders are being sent to those kind of like vendors and all. So these kind of voluminous work are being handled without any manpower and just using a technology, or generally like this kind of volume can be handled by a bot in less than half day. So these kind of things, innovative solutions we are trying to put in place so that there is all fully compliant on account of the GST part.
Yeah, that's good. So now we talk about GST part, so that remind me of lot of litigations happened in last couple of months, basically with department and insurance company about claiming the GST input credits on a base. Basically, they said that it will overdue commissions or it will are nothing but the excess fund made to a dealer as a commission point of view. So from that perspective, I think the IIT did very good job. In fact, from actually onwards, they come out with a new regulation. So I asked to select my of this regulations of expense of management. Friends, this was very, very complicated area earlier for the insurance company to deal with the expense of management, especially on commission side. So I think this latest amendment will help to to industry, number one. Number two, about paperwork. Number three, about consistency in your readiness. So, Shailendra, can you just throw light on this new regulations?
Yeah, so I think before we go to the expense of management, because that could be a bit complicated for some of the audience. I can understand. I think most important is this is just one example of which direction the regulator is going in, and both Hemant and Nilesh mentioned that there are a lot of changes in the regulations. So just to give you an example, I come from the life insurance industry. Only in the year 2000 was the whole life insurance industry privatized. Okay. Terms is approximately 4% of GDP. It is not increasing. It is thoda sa marginal increase. So why are people not getting covered by insurance? So there is one insurance which is the Pradhan Mantri Jeevan Yojana, which has started since the last 2 years. That's to cover the poor people, give them some limited amount of insurance. But does it mean we are adequately insured? No. So the potential is very high. The new who came in was a breeze of fresh air. He came in around a year and a half back. He said, I did a full form kya hai? Insurance Regulatory Development Authority. He said, बहुत regulatory हो गया. Growth नहीं होगा तो regulations करके फायदा क्या? So let's focus on the development part of it. So a series of reforms are planned or are happening. One of it is the expenses of management. I come to that. But the other reforms which they did was, they said, we will remove all the bureaucracy in terms of taking licenses. We will ensure that someone can apply for a license with a lesser capital requirement and take a license. There were a lot of relaxations on insurance tech, a lot of relaxations on the way you generally do business. And this helped us a lot at the time of both COVID and post-COVID. Okay, so we were at a stage where after COVID, the insurance industry was pushed towards automation. Nilesh spoke that we were pushed towards automation. All of us are traditional companies, okay? Like a lot of us are traditional CA firms. We only, right now also, Vitesh, when we are speaking, we are only speaking, I'm thinking only of audit. Audit क्यों बात करता है? Analytics बात करते तो audit में analytics क्या करना है बात कर रहे हैं? अरे आप business analytics क्यों नहीं कर सकते? Okay, just to give you an example, why don't we think of ourselves as data scientists? Data किसको better समझ में आएगा other than an auditor? But because of the way we operate and हमारा पेट भर जाता है इतना करके भी, because right? So there is business analytics, there is risk analytics, there is audit analytics. Let me tell you, तीनों बहुत अलग है और operating levels बहुत एक level जैसे video game में होता है. So, but we have the capability of doing it. Okay. Similarly, why can't and this is just a random example because some of the institute officials are there. Right now, you are doing a practice, you have an ethics code. So obviously you can't practice as an agent. But let me tell you, some of the distributors I meet are chartered accountants, have amazing relationships. Insurance is all about trust and at least life insurance, trust and relationship. Why can't you go there? So the opportunities landscape is very high. The chairman is saying by 2047, we want 100% of India's population to be covered. Growing population, younger population, and coverage. We are at Amrit Mahotsav right now. We have to reach in another 25 years by 100%. So that's the potential. If today you get into as a youngster into this field, just think in 25 years what you will do. So the potential is immense. I would say just don't keep it limited to audit, though audit is important, but go beyond that. I would also request the institute to liaison a lot with the IRDA or with the industry. So one suggestion could be, why don't we host all the CFOs, compliance officers, risk officers, who are you think of life, health, general insurance companies, have a workshop. We take a lot of recruitment from the institute, trainees, yeah, new freshers, we do that. But we do that because we know they are good, but not everyone knows. So, I mean, someone who's an MBA, someone who's in control of the business of the organization should know. So let's do that. Improve your this thing because a lot of places data analytics is done by firms who are of data scientists or IITs, MBAs. I think CAs are better than any of these. So and with the chairman of IRDA looking at relaxing everything, pushing everyone for development, I think this is the best thing. Coming specific to the question of Vitesh in terms of expenses of management, insurance is slightly complicated. You get money today for a policy which you will have, at least life insurance I'm speaking of, which could be over the next 30-40 years. Okay. If I get into a product known as non-par product where you offer guarantees, आप guarantees एक rate आज दे रहे हो, you don't know what's the interest rate going to be. So we do a lot of risk management through investing in derivatives, PRAs, etc., etc., etc. But there is always an asset liability mismatch which you are trying to bridge. So बहुत scope होता है. Similarly, expense of management is where you get allowances depending on the type of business, the tenure of the product, etc., etc. IRDA ने क्या simple बोला है, हम आपको इतने allowances देंगे. You show us you are operating well within that 100% you have given you. If you are operating well, you can pay whatever commission you want to your distributors. You can do expenses in whatever year you form. But ये boundary है. इस boundary के अंदर करो, anyway territory में मत जाओ. अगर जाते हो, फिर हम आ जाएंगे. So that's the in a simple way, that's what they are doing by regulations. Similarly, they are planning to change the Insurance Act. This is all being planned. Some is done, some is getting done from 1st April as we spoke. So in life insurance companies will be allowed to, if it goes through, will be allowed to sell health, general insurance, maybe mutual funds, maybe bank deposits, depending on what gets approved. So, and one more thing is, Vitesh, when we speak of branch audits, for example, branch audits is not just branch audits of the 300, 400 branches of life insurance companies. Today, more than 50%, for example, of my company business comes from my tie-ups with banks. Okay, so whose banks में मेरे products बिकते हैं at their branches. When you do a branch audit of a bank, you don't look specifically at insurance, right? I'm presuming you more look at overall banking, etc. So you have a potential of doing audits of those banks specifically for insurance. Take an example of a leading private bank. It could have anywhere between 4,000 to 5,000 branches. And SBI could be having what, I don't know, 15,000 to 20,000 branches. And that will become an audit different than a bank audit also. So I'm again coming to audit, but the opportunity is there at many other places. If we reach out to IRDA and we engage with them, we can get audits in other areas also. For example, there's a need of doing a cyber security audit. Today it can be done by anyone, but I prefer giving it to a CA form. But can we lobby to get it compulsorily for a CA form? There is an audit to check whether you're following the e-commerce regulations. Can that come to a CA form? Investment, of course, has to be done only by a CA. So that's the long and short of it.
Yeah.
So I think that I just want to add an important point here, that as he also mentioned that chartered accountants cannot take like agency license, cannot get into it as a practice. I think this is one important thing which as an institute, we should actually try to allow, and we should need to teach that chartered accountants should be allowed to have agency license. I think it's a financial consulting in a way. Insurance is nothing but it is again in the form of consulting. If you are guiding a client, it's a risk management services. So why chartered accountants should not be allowed to do any kind of having a agency? I think this is one area where there is a need to push this agenda, and then chartered accountants should be allowed to do this kind of thing.
Also, one more point that I want to add. You see, as an institute also can be one of the supportive hand for the industry as a whole. Because from an accounting point of view, there are a lot of areas which is the areas of improvement. I would say, for example, premium booking. If you collect a premium, you spread the premium over a period of the risk in case of a general. So there is a spread between two financial years that happens. But what about the acquisition cost? What about the commission that you pay to the agent? It is upfront. So that is kind of accounting principle which as an institute in coordination with the regulator can work on. So I know that IFRS is on the way, but IFRS when it is planned for a longer period of time, and this now the industry is in a mode of change. So why not? Why not take the advantage of that as well?
First about Shailendra, telling about IRDA, let me just update the members. In the last month itself, there was a meeting called in Sachivalaya, where there were officials from RBI, there were officers from SEBI, there were officers from IRDA, there were officers from MCA and Institute of Chartered Accountants of India, and there were a lot of discussion that what kind of support all of them want from CA Institute. That meeting has happened, and in detail, like for almost 4-5 hours that meeting was. Each of these people, like whether SEBI, IRDA, RBI, MCA, they have noted, lot of things. We noted what they want and what kind of courses we are running. Like even in insurance, what courses we are running, or for banking, what courses we are running to tell to RBI. And this is going to be, this was the first introductory meeting. There is going to be, we are told that these type of regular meeting will be organized by Sachivalaya itself. And then there will be an individual meeting, maybe one meeting with only IRDA, one meeting with only SEBI, or one meeting only with the MCA. That is there. Second, to respond to what Hemant said, I think there have been a lot of discussion in the council. Number one, as far as consulting goes, sir, when it is part of consulting, a chartered accountant can do the consulting. I'm not on agency license or selling of the insurance, but if a client comes to me with the various products and if I have to analyze, if I have to guide him, and I may do it on a professional basis also. So if you see the management consultancy definition, I think you are able to compare products, you are able to guide the client, and you are able to charge also then if you are guiding the client. Now, agency license, I think, this is not the right forum to discuss what are the plus and minuses which are there in the agency, but definitely we can do it offline and there are various issues. And practically also, as Shailendra just mentioned that there are chartered accountants who are into agency businesses. The only thing the institute says that when you are focusing on practice, don't have, either COP. No agency, there are chartered accountants having big broking of insurance as well as they are having agencies. I am told that top 3 or top 10 chartered accountants, top 10 insurance procurer if you pick up individual, there are 2-3 chartered accountants. There are development officers also who are chartered accountants, I am told. So it's a choice that if I am choosing and I am focusing on, let's say, insurance as my selling, I may not have a practicing COP. But to have COP and to also do a selling, be it insurance, be it mutual fund tomorrow, I mean, n number of products are there for our financial services. Then with that, there are a lot of other issues which are happening. Maybe I don't think we have time to discuss that.
I will just correct myself. It was a mere suggestion for evaluation, and it is not as specific in terms of allowing chartered accountants, because of course we have our code of ethics. We may need to change our act, and everything has a reason. Neither I'm a compliance officer of my company, neither would I recommend that we should do it. What I'm saying is, chartered accountants can play a role in terms of reference. They can play a role in terms of literacy of their clients. Of course, they do that, but if it comes as a campaign from the institute. The second is if institute officers themselves or the designated officer can try to map the open white spaces. Few white spaces are not to be touched. For example, wherever there is anything of ethics, obviously we have to be more conservative. But there could be many areas which we don't know are happening. It could be data science, as I spoke of, it could be many other things. What can the institute as a role play is my limited point. It's not for today, obviously, but because it was an opportunity, I just wanted to stoke some sentiments and just get it out. The other bit, only thing is where I really want to give, I won't say feedback, but input is you spoke about Sachival's corner. Can we as institute call some of these eminent things, take the first step? We must be take it also. I'm not here to, do any appraisal or any of that matter. But can we do it more engaged way? At least being a chartered accountant, being in the industry, I see a scope of doing it more. So that's my limited input.
No, that is the difference between audit and rating agency also does the same thing. But CAs are not allowed.
Only one thing I love it. As and when the institute, this is a regional council which feedback I gave, we have been called by them. But central council does that proactively, I'm told. And even when the first time in the February, whoever new office bearers at Delhi, they assume their post in the various committee. What they do is first thing they go and meet the regulators, be it RBI, be it IRDA, they go and meet. That's the tradition and years we have been doing that. The kind of courses which we are trying and designing with them. I mean, we approached even banks, just to mention that we approached the Union Bank for some other matter. Union Bank said that for X, Y, Z, just design the courses for our officers. So similarly, that same model we discussed in that meeting and told to even IRDA to MCA that based on your need, the ICI will design some courses. And last year in institute for GST officers, we did at least 4 programs, which were free of cost program. We allowed them, we hosted all this program in the below auditorium. Chartered accountants trained the GST officer. Actually, how this came, this entire invitation of Sachivalai came to us and they called the regulator. There's a story behind that. So 7-8 programs happened in institute, wherein CA were the faculty. We trained the GST officer about lot of interpretational issues, lot of scheme which they were launching, the assessment which they were doing. These 3-4 programs which happened, no, the message went to the Mantralaya. The CA Institute did a good job, and we were trained and we were hosted nicely, and all those things happened. This year, in the beginning of in January, February, we had one meeting. We hosted a meeting for PF. The entire commissionerate of PF had come. In fact, we began with the meeting, and then they had their internal discussion. There are some problem and some issues going on, wherein they took our advice also. I cannot, discuss that openly as of today. But I'm trying to say that wherever we are getting as a regional council, these opportunities, we are trying and, helping them out to create a goodwill of institute with these regulators, so that, what happened with GST department went and told in Mantralaya. Mantralaya said that itna acha agar GST ke liye kar sakte hain, let's do it for other departments. And that's how it began actually. And otherwise, as a regional council or as a regional council chairman, even Mr. Arpit or me as a treasurer or Vitesh as regional council member, we are not supposed to go to regulators. That's the job of central council. So that's a fine difference that I say. Of course, I take your messages positively and we'll definitely pass it on to the central council.
No, when I speak of us collectively as a body, not of WRC. One fantastic area which the CA Institute has done work on is the systems audit. And I see a lot of systems auditors everywhere competing or being better than engineers. This is a core domain of engineering, you can say in some sense. What I want to give as an input is there are other wide open spaces also. For example, I am the compliance officer. It's a legal interpretation, etc. What a chartered accountant doing there. Okay. Typically, a legal or a company secretary might get into it. I think consciously, if we design programs on that, the central council does, the WRC does, but let's do that. That will be very useful. Something on analytics, not just audit analytics, but business analytics, data science. So these are a few areas which could be inputs.
And that's another one thing I think taken by perspective. But we end of the day, we are accountant. In fact, we always think about productivity basically. So all of three you had mentioned about that there's a lot of opportunity. So I think the audience over here has been the possibility of the thing that's actually there is a possibility in insurance sector. Maybe from AI point of view, maybe from engineering point of view, maybe from audit perspective. Why more focus towards audit? Because we know what is the core area of chartered accountant. But friends, how we come to know if there is opportunity? Because normally, if you want to approach for say for AI or for legal opinion, or I say some other kind of administrative intelligence point of view organization, how they approach? Because over there also they put code of ethics. Because they tell about that, I'm soliciting some work from you. So is there a platform basically where the GI or a life insurance and institute can work? These are the area open for chartered accountants. So whether basically to work on this platform basically, how the people are, because today chartered accountant community think that we can do much more larger role play in insurance sector, but they are limited scope because I don't know the area. Because if you appoint a branch audit or if you appoint an audit for your claim, how I approach? We need to be still from that perspective, how we do synchronization of this two part, opportunity available for chartered accountants and opportunity at the office.
Most important thing is, I think, trying to bring out a point that me as a individual small practitioner, do you maintain our empanelment? How do I approach Reliance or how do I approach HDFC Life? You may be having 10, opportunities, but me as a member, what are the ways to approach? Instead of having some, if there is some empanelment process, then I can make an application. Do you have thousands of PCAs? From where you can, based on their credentials, you can choose that.
Actually, the process is right. I would say, and it is a very good point because actually before I come over here, this was there one of the points which was there that I mentioned this into this panel discussion. Why? Because if you see my ESOP 23 years of insurance experience, I see that there are particular set of auditors are only there within the insurance sector as such. There is no new auditor or new idea that has not come. Why? One, what you correctly mentioned, that there is a no official or process where you can empanel the auditor as such. It is only by the network or coming within the
known faces and people. But yeah, this is one of the challenges that we have a limited set of auditors who are still there within the auditors, and they are moved from a BFSI point of view. So BFSI was the area by which they got the reference within the insurance, and from within the insurance now they are within the. So this is also one of the area that needs to be looked into. Also, one more opportunity which I can see. See, now the market is in the mode of change. Yeah, the insurance market is in the mode of change. For example, internal audit. Why we call it as an internal audit? Because now it is because internal audit, for example, is one of the department which has a end-to-end, which has the knowledge or information of end-to-end from a different department or end-to-end from a starting point to the end point of the company's process point of view. Then why we are calling it internal audit? Because internal audit, the way we are framing the process or we are framing the checklist, there are only it ends where you point out that this is the area of improvement, then we go to the respective department, take a reply, that this is the area that will. But when an auditor, internal auditor, when you know the end-to-end process, how you are calling it as internal audit, call it as a process efficiency department. You recommend what is to be happening, what is the change that needs to be there in the process, and get it implemented. Be a partner to the change in the process instead of being an outsider to a change in the process. So these are some of the, I don't know, whether mindset change or a process change or a checklist change or whatever it is. But yeah, this is one of the areas.
No, I think this is a good area. I think, because I need to work with the industry for, in fact, for the life and non-life, both the company, CIO, internal ad, we need to have a seminar and make it our community also of 700. What are the opportunity? So we can bring the into one table, basically we know where the opportunity buckets lie. So today only we discuss about audits, but there are many opportunities for chartered accountants apart from audits, like internal audits, claim audits, okay, but we don't know about which are the areas. So if we move, connect between the industry versus our member, it becomes a good forum for us. If you see that the WRC can do a lead role in that, at least on Bombay, because most of the insurance companies do have product in Bombay. That is, we can start in WRC point of view and get our member into the platform where they are activity apart from audits, the chartered accounting community in the insurance field. That will be great.
Yeah, we maintain a panel for bank audit. Similarly, a panel can be created for insurance audit. Like banks, most of the time they're using ICI panel and then they pick up the auditor for concurrent for everything. Of course, the person will separately make an application, but they'll see that he's empaneled with ICI. Similarly, for empanelment, I think we have enough software data with ICI, New Delhi, and we can try and do that. And if you rightly said, let's have some coordination of all the leading insurance companies, and then we can become, as ICI, we can become a bridge between our members and the insurance companies and try to create a platform.
I have also a suggestion. Because if you see at a CEO level or at a CFO level, and from a regulatory point of view, you have set number of audits. I am not going to that because that's everybody knows about it. But at a CEO or a CFO level, when there is any ambiguity or any areas which is the concern, and you need to get an checklist of the list of problems that is there in that. It's always that we try to find out that we should go for an audit. Yeah. So that is kind of an opportunity which at an industry level we are all waiting for because that's more than a CEO or a CFO, I have a good number of faith on the auditor as a CA to help us out to improve in our process, help us in improve in our compliance, help us to find out what is a better way in doing the thing. So that is also, so basically we have to have a paradigm shift in the way we are doing it as well. Because nowadays if you ask any other department that the audits are over, people get afraid of it. Why? No, we are not supposed to be afraid of the auditors because auditors are going to be a helping hand or a supportive hand to find out where the problem is and get it corrected. We're not supposed to. So that also one of the paradigm shifts has also to happen.
So I just want to add one important point here, as I mentioned earlier also, that when the things are moving, the number of transactions are being large number of transactions we are dealing with, and nowadays the kind of underwriting we do it's a very detailed, like at a customer level, we really need to see what kind of opportunity in terms of better selection of risk and appropriate pricing is there. So all those things are there. So my point here is important that chartered accountants can play a very big role in data analytics in helping companies to ensure that the profitability can support them in their understanding. And those chartered accountant in our course curriculum and all, we focus on taxation aspects, accounting aspects, on various law aspects. But I think one important area which is like understanding of a very detailed data analytics tools. I think there is one special courses. I really don't know whether we have any kind of special courses.
We do have, courses on Power BI, Power Query, Advanced Excel. And believe me, the kind of courses which ICAWS is hosting, the pricing of them is at least, 40, 50,000. We are hosting at 8,000 after a lot of negotiations, and the quality of courses is really good. The people who have done these courses are appreciating that, one should continue. So we launched the last 2 year level 1. This year we are going little higher, and we are trying to, make them learn the language also. So that they small program they themselves can write. So, the course at 8,000 rupees for a chartered accountant for 30 days or 40 sessions. I think that's nothing. I mean, and the market value of that cost, which they are otherwise charging, these institutes with whom we have collaborated, they are charging 40, 50,000 on their own.
So my suggestion to all the people who are like new chartered accountants who are coming, I think they should definitely use these kind of opportunities and try to develop their skills on analytics side. I think that is going to be very, very important from future career point of view.
So, I think as an industry, somewhere, we are not as connected to the institute as a practicing chartered accountant today. And that's a fact. I don't want to jump to conclusion whether it is we have to go to the institute has to come to us or something. But I think that's one area of improvement we can do because we have an influence of maybe 200, 300 chartered accountants in our own companies. And maybe we nominate them for a course which HR sets up. HR has no love loss for Institute of Chartered Accountants. At least I don't tell them that you have to pick up the course only of the Institute of Chartered Accountants. Okay, just people are doing part. Yeah. So that's one area I see as an immediate improvement. There I see some bit of improvement if Institute can share those courses with me. The other thing you mentioned at the start is in terms of how to you match both of it. For example, if I need some good form, which is good in forensics, etc. Of course, I know many people who are good out here sitting in Mumbai, but there are many firms which could be in Vadodara, which could be in Kochi, which could be carrying fantastic capabilities, better pricing. And in today's times of digital, I don't have exposure of them. So maybe if Institute can host some of those firms on its website or wherever it is, taking the code of conduct and all of that into consideration. At least if there's something as simple as a search and I search need not be specific to insurance, someone who's done good work in the banking space, I may want to take that form. Because a lot of times I think I don't want to go to a firm which is over specialized in insurance because then they are very focused. I may want to do someone who's done good work in telecom, someone who's done good work in banking. So I think both the institute and people in the industry can do that. Institute can host, some of us will be happy to host the institute at our end also. I think it's a good starting point. We can interact more on this.
I think it very, very positively. In fact, we tried hosting a lot of CFO meets last year, but it's unfortunate we couldn't connect to you. And I think Hemant came once, if I'm not wrong, you came in one of the meeting of CFOs, probably.
Again, the problem in the thinking is don't think only of CFOs. There are CRO compliance officers also are chartered accountants. There are people in sales also who are chartered accountants.
Second, the assignment which you said, if any of the companies are giving us that assignment at PDICA, we are hosting them. So any of the members who are not aware of that also, you should regularly go to PDICA site जितने भी कंपनियां हमें जो असाइनमेंट के लिए बोलती है कि हमें चार्टर्ड अकाउंटेंट चाहिए, we immediately go and host at PDICI these requirement of company. So chartered accountant directly approach these companies based on the this portal's data available.
I can give an example, within the institute. Institute maintains the panel of audited. People, chartered accountants who have completed certificate course in area are done by the institute. The institute maintains the panel of audited. It's available on the website. And the TTA is I think about 1,000 chartered accountants are already listed. Similarly, you can maintain a panel of. So what is it? So the completely once we complete the certificate, after donate. But you know, and easy for look for.
Yeah, perfect.
There are examples for it.
Written by at least what I can summarize over here in one section basically. Like let us come to the forum basically where institutes, yeah.
CA firm, I service respect to all of you. इंश्योरेंस कंपनी को अगर आप हेल्प करना चाहते हैं तो आपको ना उनके पीपी ऑडिट अभी हेल्थ का टॉपिक निकला तो हेल्थ में वहाँ पे आउटगो ज्यादा है, इंश्योरेंस में प्रीमियम उनका इनकम है तो प्रीमियम आता है ज्यादा आता है, वैसे ही कंपनियां कम है, प्राइवेट भी आ रहे, गवर्नमेंट भी है, प्राइवेट भी आ रहे, लेकिन इनकम होता है लेकिन एक्सपेंसेस उससे ज्यादा है, डबल है और उसमें फ्रॉड हो रहे, फ्रॉड होने की वजह से उनका जो इनकमिंग जो है वो आउटगो ज्यादा करके निकलते ज्यादा लॉस में आपकी क्योंकि कोविड में भी बेनिफिट पॉलिसी है करके मेडिकल में ज्यादा पेमेंट हो गया, उनका तो कमर ही टूट गया, कोई कंपनी भी बंद कर दिया, लेकिन फिर भी कंपनी खड़ी है क्योंकि उनका इन्वेस्टमेंट इनकम जो है उसके ऊपर कंपनी चली, तो उन्होंने इन्वेस्टमेंट डाला था पहले कितने सालों से है, उनका जो पैसा उनको मिला उसमें से उन्होंने क्लेम को पे आउट किया, तो वैसा नहीं कि उनके पास वही साल का प्रीमियम उनके ऊपर वो चल रहे हैं, लेकिन वो सालों से जो उनका इन्वेस्टमेंट है उसके ऊपर उन्होंने कंपनी को आगे बढ़ाया, लेकिन अगर सीए फर्म और सीए लोग उनको हेल्प करने का तो उनको क्लेम्स ऑडिट में ज्यादा जाना चाहिए, सिस्टम ऑडिट में जाना चाहिए, अंडरराइटिंग ऑडिट में भी जाना चाहिए, जहाँ पे अंडरराइटिंग में फॉल्ट है, जहाँ पे उसकी वजह से गलत पॉलिसी यूज करने के बाद भी इंश्योरेंस के क्लेम ज्यादा होते हैं और कभी उसमें अवेयरनेस भी कम है पब्लिक में, इसकी वजह से वो क्या हमें 100 रुपए दिए तो हम लोग लाख रुपए लेके जाके हमारा हक बनता है, लेकिन वैसे ही नहीं है, इंश्योरेंस प्रीमियम अगर बेचा जाता है तो वो रिस्क बेचा जाता है, रिस्क के ऊपर प्रीमियम हम लोग लेते हैं, लेकिन उसके ऊपर जो क्लेम उनका जब कुछ होएगा उसके बाद में वो पेमेंट होएगा, लेकिन उसका मतलब ये नहीं है कि अगर आपने 100 रुपए प्रीमियम दिया तो उसके ऊपर लाख रुपए आपको मिलना ही चाहिए, जो रिस्क रहता है कंपनी उसका वो पैसा होता है, ठीक है, अगर क्लेम के ऊपर फोकस करेंगे हेल्थ ऑडिट के ऊपर या फिर ये टीपी ऑडिट हो रहा है, टीपी में तो सब आंख बंद करके क्लेम करते जा रहे फास्ट, क्योंकि उन्होंने 98% रेशियो दिखाना है, लेकिन उसमें वो लोग इतने सारी गलतियां करके बैठ रहे हैं अभी, तो रिकवरी ऑडिट करना पड़ेगा अभी।
But that is happening. So that is the reason basically, from a chartered accountant perspective, if we do it from insurance side, a forum basically where the insurance player, maybe CIO, maybe chief risk compliance officer, maybe CFO, or they say whoever want to join us in forum, let us know what are the openings for chartered accountants. We should be doing it because see, here madam said that TPA, I did audit for TPA. TPA mentioned for 7 days. Not more than that. Most of the TPA maintains for 7 days. I have to dealing with this comment very quickly. But we need to understand this why this process is maintained. So what result they have given. Are they taking any surprise audit with TPA or not? Because third party is the ease of business basically. But at the same time, we should not be pay out more. Because ultimately, if you see last many years, if you do audit of insurance industry, today in India also, this combined ratio is much higher. There is a reason for combined ratio must be higher because we are not getting into underwriting profit. Investment income is okay, but still we are not reached the stage of underwriting profit. So this is a long way to go. If we do all data analysis perfectly, all data tools perfectly, then it becomes easy for you. If you compare the US market, because I gave my friends who work for IT company, they do analysis for insurance sector in IT. That's like if insurance company has a database of a car driver who having a license, how many times in a year this car did a mistake? कार एक्सीडेंट कितनी बार किया है, 2 बार किया, 3 बार किया, इसका प्रीमियम बढ़ जाएगा. But this data is not there available in Indian industry. If you ask somebody कि आपने कितनी बार कार में कितनी बार आपका नेम प्लेट का नंबर आया है सिग्नल ऑफिस में, कितनी बार पेनल्टी भरा है, तो दैट रिस्क असेसमेंट नॉट डन बाय अस, तो डेटा है ह्यूज लोड टू प्ले इन इंडस्ट्री। मेरे को तो लगता है कि आप फॉरेन जाते हो, वो लोग बोलते हैं कि नहीं वहां पे इंश्योरेंस मैच्योरिटी हो गया, तो अपने इंडिया में तो अपॉर्चुनिटी है, so I think it was a better opportunity for us.
I'll be adding another dimension to the whole discussion. Here we are talking about insurance industry with opportunity. Here we have our members here seeking the opportunity, and here we have institute. Here we have already come with the solution. We have practice and management software institution could promote to the members. In the same way we can do that, because practice and management software तो अभी 15 दिन पहले start किया ना, वो reach out हो गया. Same way ये भी चीज we can bridge the gap. That is what I am saying.
Okay, I think what we understood basically there is a lot of opportunity within insurance data. They are setting on so many data, so many analytical tools for available for chartered accountant. They dealing with the volume. उनको क्या चाहिए वो? हमारा मिलाप कराओ. हमारा मिलाप कराओ. What is the chartered accountant community? You want to know where the role of chartered accountant is so picture. I think this is great because today chartered accountant को मालूम नहीं, because if you really understand Sunder use many of chartered accountant in Reliance Labs, because I've been doing audit for Reliance Labs since long. So they use in Bhubaneswar, they use in Kolkata, they use in Howrah, they use in Kerala. Many of chartered accountant then help out from the policy audit point of view, institutional audit point of view. They do a lot of work with chartered accountant. ये opportunity अपने को मालूम ही नहीं है यहाँ पे.
Yeah, to add on to what you said, more than having an opportunity to the CA, I think institute can also work to streamline some of the activities for the insurance sector as a whole as well, in coordination with the regulator. Because the one I explained to you about the method of accounting, and all this thing, value addition related activity in coordination with institutes and getting that with the regulator, that would also help. So that's also one of the area which can contribute.
So I think one again important area that IRDA is trying now. They've already issued the circular and all of implementation of IFRS,
Yeah.
and this is the solvency kind of thing. So the roadmap is already like done. That the insurance companies need to submit, do the assessment of their these things, IFRS thing by September, and then the performer financial, the first set of performer financial need to be prepared by January 25. So again, this is a very, very big area for chartered accountants. If they are expert in IFRS, there is a huge demand which is now likely to come in insurance industry, because you know that there are very few people who have understanding of IFRS 17 especially, which came recently, and there is a significant lack of, like, you know, the talent. So if any chartered accountant are developing those kind of skill set, and now is going to create a huge opportunity in days to come for IFRS.
Add on in IFRS, there are three things that we have to do with it. One, accreditation of the resources, for which we are dependent on somebody outside. You have to have an implementation partner, or also you are dependent on somebody outside. You require a system for implementation. For that also we are going outside third party implementation. Why? India is a country. If you ask me, some of the one of the sector within the insurance, which is if I have to be very specific, insurance. India can be an hub for insurance. Why? Because of the quality of the resource, the intelligence what we have in India. But for the IFRS, what I just mentioned, we are going out of India. Why? I think why not we create something within India and try to, and that's one of the big opportunities which we can create for all the chartered accountant firms.
So to make my submission, is somewhere, as we all discussed, there's a gap between the people who are in industry and people who are in practice and per se ICI. So, if I talk about ICI, what is ICI? We all are part of ICI. We've rolled out last 15 days, prior to 15 days, we sent to all the members a mail saying that my role at ICI. See, it's not only 20 elected members or 30 central council members are running ICI. If all of us collectively think that there is some responsibility on our part also
towards ICAI. Whether you people are there in industry, chartered accountants or chartered accountant in practice. So if we, all of us come collectively and apply and do the brainstorming, I think that's where the ICAI success lies. See, if you are sitting in audience or sitting in industry or sitting in ICAI, I cannot say that industry should come or practitioner should come or ICAI should go. I think we all will have to come together to make it happen. And see, as far as the resources goes, I don't know. I mean, I personally believe, in fact, Indian chartered accountants are going and doing a lot of implementation of it. Even GST, when it came to UAE, I think 90% of the implementation was done by the Indian professionals. Singapore, some new amendment came. I think people from India traveled to Singapore and did execution over there. So I don't know wherever these assignments are going out of India. I think it's other way around. Many of the CA firms, be it his own firm, Manubhai Shah, is doing maximum, outsourcing job of out of India client, which I understand. This is one of the top firm in Gujarat doing outsourcing job of clients in US, client in Europe, client in UK, Australia, Talati and Talati, the current president's firm is doing maximum outsourcing work. So there are firms sitting out in Ahmedabad, sitting in a smaller places, doing execution of the work of out of India. So there's no question of capabilities. Only thing is right demonstration, properly pitching them, making it happen over here that if it is IFRS, who better can here implement IFRS then we as a chartered accountant, the way we, I don't know how many of you have heard, I am sure practicing members must have heard. We had an event called World Congress of Accountants here in India, in Mumbai. 9,000, 7,000 plus chartered accountants, attended this. Almost 10,000 chartered accountants across globe attended virtually. One incident which our president is quoting always, we were trying and we went to Singapore chartered accountants saying that हमें एक तो exemption दे दो exam में which if you appear for exam, you give us few exemptions and certain exemptions are there when we go to CPA forms. हमें एक दो paper का exemption. So we went with that intention and also for sending an invite. If India is hosting World Congress, please come over and we went to Institute of Singapore. The official from ICA went over there. They briefed them. These people came to the event. They said exemption तो सोचते हैं बाद में बात करेंगे. We'll talk later. Then they came to the event. They saw the kind of knowledge dissemination which happened. The people who were there from India as a speaker, the magnitude at which this event happened. The Singapore Chartered Accountants President, he came down here. We were all down at the this building. He said, your building is this is owned by ICA. And very humbly, Aniket said that not only this, man, we have such 100 buildings across India, and they have office on 6th floor in Singapore in one building. He said we have just one office in Singapore, that too on 6th floor in one building. So he said, ma'am, we have such 100 plus buildings in across India, and ICI is the largest body. If I add up the student network and the chartered accountancy network, the body having highest professionals across world. Only thing is many of them are not aware of that. When this lady went back to Singapore, the day Aniket assumed the presidency, she wrote a mail saying that I congratulate for you to take over as the president. Also, I'm very glad to say that any CA from India, he stays 6 months in Singapore, will be given without any exam, will be given a degree of CA. That is the kind of knowledge demonstration. The capability of ICI which happened in the workout. People were thinking that why to have World Congress. The first time in India tried to host World Congress, so-called bureaucracy, I shouldn't be saying that, but denied that, said that India cannot host this event. Fortunately, when this time this event was planned 4 years back, the now deputy CM who was a CM at that point of time, he said that I can give you a letter. There was a letter required by the whoever is there as the CM, current CM. He was a CM then. He said, no, the institute will host and India will take that guarantee. You have to give them some comfort letter. So that comfort letter was given by Devendra Fadnavis. And because he gave that comfort letter, they confirmed this hosting. And that time even this venue was not there. Zero World Conference Center was not there when they came here for doing a recce. They went to 7 places across. Last they came to Mumbai and we told them that look, this place is coming up. By the time we host this event in 2022, this place will be made, and this is the layout, and this is the 3D view of this place, and it is going to be like this, and we can host an event of 10,000 members. We are very comfortable. Yeah, we have a building here. If there's anything, any events already happening, we can take care of hosting many events, including this place. We hosted 5 meetings across those who were attending program those times. Simultaneously, 9 programs were happening, and there was that. There's been itna capability in the ICI ka. So one meeting is happening on 6th floor, one meeting is happening in auditorium, 3 meetings are happening in over there in Geo Center. One meeting of very senior people happening on 8th floor simultaneously, and everything so systematically and so perfectly planned. And trust me, we demonstrated our culture, we demonstrated our principle. Whatever principle we follow as institute, if there are certain things which we don't follow, we very politely told them, no, this is not possible. This that I say is not possible. So the kind of discipline we showed, the kind of event we organized across throughout those days of 6, 7, 8 days, and the people which carried that impression, I think at least globally that message is sent that Indian CAs are capable of doing a lot of execution, and this was the one event which I think people say that if Indian CAs are to be seen, people will see that pre-workout and post-workout, and that kind of impact it has left on the mind of people. So even wherever Indian resident traveled, he said he went to the event of SAFA, he went to the event of KAPA, everybody stood up and they welcomed the president from India. That kind of goodwill we have created in the ICI, in the account. अब तक हम जाते थे गांधी जी कापा साफा कोई भी इवेंट में इंडियन प्रेसिडेंट will go and sit, he cannot be recognized also. Moment Nadi can walk in, they all stood and they all started clapping and said like he's the president of Indian Institute of Chartered Accountants who hosted lot of like this. And we have set that benchmark. So I think execution we are far superior than CA from anywhere, because हमारे पास टाइम नहीं है. वो लोग सोचते हैं कि हमें इतने बजे से इतने बजे तक काम करना है. A firm like Manubhai Shah must be delivering at 3 AM in the morning, in the night, at 2 PM also, in the afternoon also. हमारे पास ऐसे लोग हैं जो बिना टाइम देके काम करते हैं. 12 घंटा, 15 घंटा, 17 घंटा. We have intelligence. We see he said that CA can do anything in analytics. So we have capabilities of chartered account. Yes, I agree on this front. Maybe it is unfortunate that we all are not together and we are not united in in that space of BFSI, in that space of insurance. But yes, whatever efforts which we have to make as regional council, we are all committed 24/7, and we will be eating on your contacting you and eating your head for creating this sort of opportunity for our members. Definitely we will be in touch with all of you and we'll try and do something collectively good so that the members get opportunity, the people get the right choices. That okay, you have pool of chartered accountants doing variety of execution is. Sir, rightly said that those who have done forensic will definitely write a mail to ICA saying that please host a list of the chartered accountant. They have hosted a list of arbitrators. We'll do it within 24 hours. The mail will go from the chairman's desk that I can ensure, and we go to ICA and say that we request them to host a panel of the CA who have done the forensic. So with this one, on my hand, we have really thank all of them for enlightening and taking through this and taking it forward, and we will be definitely having a good interaction with all the panelists and moderators.
So that I think there is a really good reason to really I can say the time and opportunity given to us. But one more thing I want to bring the member. As you see, the global world is changing towards India now after the Wakao and before Wakao. We in Manubhai Shah, we see a lot of opportunity. So one thing we can say there is a scarcity of accountant in the global world. So India has the opportunity over here. If you see where we practice in Rajkot, we practice in Jamnagar. We go to interior part of India basically to develop a skill of a chartered accountant because we have a mandate to be learned from morning to 3 o'clock. We see the time set. We can do it much better. So here I can say for insurance point of view, where the IFRS 17 is going to come to us, let us prepare for our side. From insurance side, let us make it a core team. Why this IFRS 17 is not being discussed much in detail by the members and the industry, the fact, go and deep to analyze. Second thing, friend, the actuary. Major role of actuary in the insurance industry, being a chartered accountant. Are we developing the skill of actuary? No, because what we doing is that from a day one, we rely on actuary. This is the wording I see in the audit report. We are relying on expert opinion point of thing, but we need to be develop the skill of actually understanding what is the tabular table they made it. Because if you listen to Kandoi, in fact, you want to avoid how deep the actually works physically. But being a chartered accountant, we need to develop a skill to know how to actually make it template figure, how we discuss to the management and understand this thing. So for insurance point of view, these are the two areas for chartered accountant, but actually one is the IFRS 17 is going to be dominant play in the next couple of years basically, because the world is changing fast. But Indian, I don't think so. In banking and insurance, they are looking for IFRS for last 5 years. But because of solvency, because of capital requirement, because of attitude, basically we are behind this. Now, but you cannot go over to behind the table. We have to close the one day because in all listed companies we come with the IFRS. For banking and insurance, we cannot say no, we cannot go for IFRS. We need to adopt. Because of the most of the companies, even if you ask FNG or if you ask any other listed company or any global player, if you see the FDI, the highest FDI in insurance sector, it means the regulated company of holding company like maybe Nippon or a Bajaj Alliance or Prudential, they have to prepare their respective US GAAP for IFRS. So they have to convert their accounts to Indian perspective also. So they already doing for IFRS perspective. So there is an immense opportunity for Indian chartered accountant from IFRS perspective, from actuary perspective. Right. And we see that how institutes and the insurance industry body, basically from a life owner perspective, can get together and have appreciation basically what way the members can opportunity in various forums. Because today, as I told you, members of the industry think there are a lot of opportunity, and members of the institute think that the opportunity is not being given to us basically because we don't know about employment, we don't know about the business point of view, how we can approach to them. So that dialogue we need to be fixed, and we can see how synchronized can done by these two of these. With this, I think if any of audience has any questions in the panelist, and me, we are happy to answer.
I have one question. Sir, recently joined insurance industry and I'm lucky to be part of this session over here because it was quite informative, quite knowledgeable as well. So, I've just recently joined an insurance company in the internal audit department. And as you said that now the chartered accountants need to move towards from from backdated working towards we need to shift to proactive checking. So that's what we are actually our department is also planning to go for a continuous audit, wherein we can check the majority of the population rather than going for a sample checking. We can check majority of the population. So if you can just give us some insights that how we can go ahead, like as you said that you have designed some of the triggers to identify frauds. So if you can just highlight some of the figures also for just for knowledge purposes, so that we can implement in our case as well. Definitely, it's a good question. I think. So in terms of like trigger, I will give you very simple examples, and then basically those kind of examples, I think there are very complex queries which we can. So that's why I insisted that one, the understanding of technology solutions, the understanding of analytics tool is very important for chartered accountants if they really wanted to do many things, because now simple audit is no more thing. Now from a proactive things, like very simple example, you know that in insurance motor vehicles are insured, and we really need to see if suppose immediately after the insurance there is an incident happens. Okay, this could be a one trigger that if an insurance event happens within a week of issuing a policy, is there so the moment any such policy issued and then the claim happens, then there is a trigger for those claims need to go into a separate line where you need to do it in a more like in a detailed manner, whereas those claims which come in a normal court, they can by using technology you can flow them fast. This is a very simple example. These kind of similar examples can be created. We are planning for exception reports. We are working towards developing of the exception report to which we can identify the exceptional scenarios, and then we can go in detail for that. Absolutely, and for those kind of things you can build trigger in your claim system. So the moment any such claim happens, reported, those information will come to you. Otherwise, rest everything by using the technology you can have like straight to pass kind of processing. Because at today you know that the expectations of the customers have increased significantly. So you cannot just because of one old claim, you cannot stop 99 claims. You have to really go and clear everything in a very fast manner. So in that kind of environment, the proactive way of handling the claims management is very, very important. If you can just suggest the reading materials also, I can read because I am new to the industry. So some of the reading materials I can go through it, I can read, it can help me in grasping the nitty-gritties of the industry in a faster manner. Yeah, correct. Like in case of similar in health claims also, there could be like, that there are various diseases and generally, a treatment cost of one particular kind of disease is in a range. And the second thing is that if suppose a patient is being cared for a cancer treatment and he is being given some other medicines which is actually not required. So all those kind of data goes into the system and if any such kind of things come to our knowledge, then automatically those sort of things go into like an investigation or kind of bucket. So the question is that investigation is not a selection of samples. I think these days, investigation the cases should come to you, the technology should be able to show you those kind of cases automatically, and then only those cases you really need to focus, rest everything should go in a straight manner. So that's the purpose.
Just to add to what Hemant said, some of the reading materials are just read the process notes. Because it is very important that the gap between what we have learned in our CA curriculum, the way we do audit, and the way business operates. I think it is very important for you to know how is business operating on the ground, both through the process notes and what is not written in the process note, so that you can envisage what can go wrong scenarios. And when you are doing that, you have to wear the hat of what do they call professional skepticism. That इसमें ये wrong होना ही है, अगर wrong कोई करेगा, कौन से way में करेगा, what would be the various ways it can go wrong, and then backbuild it in terms of query बनाना, तो it's more of a technical thing. But first you are chartered accountant, query बाद में बनाओ, पहले वो समझो कि क्या wrong हो सकता है, and once you do that, then obviously how to make the query
Also to add this, ICI also has a course called Domain Insurance Risk Management. So if you are more interested in the insurance and want to go deep down to that before starting it, so you can pursue that as well. And Diploma in Insurance Risk Management. And also ICI has a study material on audit of life insurance companies. So you can refer that. Also ICI has a detailed checklist and audit plan for investment risk management audit and investment confident audit. So definitely you can refer those things whenever needed at the time of your audit.
If you go to digital learning hub, you'll see, all the courses which are hosted by ICI. There's a new sort of a portal where, all the members can, log into that portal and you can do online courses also, as well as wherever there are physical courses happening, those all details are triggered to you. And also get registered, if you are not registered, get registered with PDICI separately. So that wherever there are opportunities which PDICI gets, apart from hosting on website, they are emailing to members also.
Can I share something which is a bit of a self-joke? But when I joined, when I started my chartered accountancy career, I mean, after becoming a chartered accountant, I started as an internal auditor. I joined a manufacturing company. I was given a physical checklist, PA audit for manufacturing company. And then I realized the checklist is 15-year-old. Similarly, the technical guide of audit of life insurance company, I was involved and it was written, I think it was written some 10 years back. I don't know if it's revised or not. Okay, just check that out. Yeah, just check that out. What I want to bring is things change very fast. I don't think it will include things like COVID, what has happened. And it's unfair to expect that from an institute or something to suddenly.
Let me update you. At least as far as the COVID goes, there was a separate guidance issued that how to so that there was a separate guidance which is covering all the audits. And sir, आप लोग तो insurance में हो, आप chartered accountant में हो, मैंने पहले request की आपसे फीस बढ़ाइए देखिए हम सब कुछ करेंगे.
I think
we get the fees in bank audit. Bank audit guidance only. This is on a lighter note, not officially I'm saying, but every year the guidance note is updated for bank audit. Of course, the insurance book is also as of today, which is very fairly updated. I think it's not that kind of outdated book. Maybe we unfortunately missed you in that updating team. Otherwise you would have done some more value addition.
The moment we go like a bank audit and insurance audit every year, the books get automatically updated. We can have a committee over here, like, let insurance industry give business to chartered accountant, every brand audit should be compulsory, 1/3, 1/4, then it becomes easy for us. So we see from that point of view, as someone says basically about the technology things using, because I remember my own golden days, basically I did article from Actuarial. So the Catalan was a well-known firm basically from auditing point of view. And that time we used to learn about audit ticks. How you should do ticks in audit basically. So my first 3 days of article audit to understand the ticks. We do casting ticks, we do lilac ticks, we do L tick, laser casting ticks. So there are various kind of ticks only you need to learn the auditor. Because if you go the auditor, basically your role is totally different. So nowadays in our audit firm, how many of us in fact will be explain to the audit clerk basically that this case to be do ticks? No, nobody is doing any ticks. So because industry has been changed, the auditing style has been changed, auditing platform has been changed. So even what I say, madam, the DRM books, what we talk, we need to see how update frequently we do it. If you want to really want to go and deal with insurance side, we need to update this material from our end. Definitely we try to work on that because there's a huge focus insurance industry, as I in bank audit.
I said about my role of WIC, I just completely, थोड़ा सा books में और बोलना चाहिए था. So I request all of you also. We are trying to do, research also in a lot of areas. We have specific, demarcated some funds also for research. So any of you, anywhere, any of you feel that, we can come up with a publication for insurance, maybe on reinsurance, maybe on something else, maybe on technological using insurance audit. We welcome all this and my role at WIC for all of us that if somebody has not got the mail, please tell me, we'll send it to them again. If you are not registered with WIC, you might not have got. Otherwise, you send to all the 150,000 members in Maharashtra, Gujarat, Goa, saying that wherever, whatever way you can contribute to WIC, be as a speaker, be as a writer, be as a person doing research in a particular area, be as contributor. In whatever capacity you want to work in WIC, you are welcome to work here. And this has happened, I think, with the wisdom of current chairman, I think this has been done very nicely. And first time ever it has happened that generally we are inviting each and every person to, come forward to work at the ICI. So we, you find out what is your role at ICI and come forward. We welcome you for all the roles and we will definitely, see to it that you are involved in all the activities. In whichever activity you want to get involved. So my request to all the seniors also who are here and the panelists to come forward. See, alma mater is ICI. We all are wherever we are because of ICI. Main industry, main practice, whatever we are today, we are because of ICI. So it is our core duty to see that something good happens at the ICI and we are in ICI. That's what we say everybody. Also, I recognize presence of Parag Hangekar. He himself is a worthy speaker, worthy person doing life insurance corporation central statutory audit. Parag, we welcome you to this program. I didn't see you again, otherwise I would have invited to the panel discussion only. He himself can be one of the panelists, having vast experience and again a very very good resource for WIT. He has been a regular speaker, regular contributor. This time also he was a contributor to the bank audit book. So Parag, you should not sit silently like this. We could have been here and you could have come forward and shared your knowledge. So with this, before we take a tea break, let me request Vishal to do this vote of thanks. Very very well deserved vote of thanks to all the panelists and moderator. I request Vishal Rajive to do the honors.
What a session. So we all got to know like what are the opportunity available in insurance sector for all of us. So only thing is, I just want to add certain thing also in terms of the opportunity, because as they mentioned, there are 23 life insurance companies, 28 general insurance companies, 2 life insurance recently added, so 25. And there are, proposal has gone for another 20 insurance companies. So these are the related to the insurance industry. And earlier speaker also mentioned in terms of the intermediary. So we have 597 brokers and 570 corporate agents and around 600 IMF, that is the insurance in market in the intermediaries. So for the information security and cyber security audit, till from 2017, it was only applicable for the insurance company. And in November 2022, where the IRD has come up with a circular, so this thing has become applicable even for the intermediaries also. So now you see from around 50 insurance companies to 1500 companies. So that is the market is available for all of us. So obviously, and after that, so I would like to thank Shailendra Kothavale, Hemant sir, Nilesh Mijari sir, and Vitesh sir for here for the panel discussion. So thank you very much, sir. And, yeah.
His hand up.
of the youngest professionals in India to qualify as an actuary at the age of 24 after having qualified at 3 years at the University of Louisiana. A founder of Vessels Kandoi and Company and has 9 years of experience working in the actuarial field with a specialization in employee benefits. His expertise lies in providing 360-degree solutions for actuarial accounting and advisory globally in employee benefits, including ESOPs, as per Indian GAAP, AS, Indian IFRS, UK GAAP, and US GAAP. Can you use round of applause for this Kartikey? I like to request Gandhi to join me in presenting a moment to Kartikey. I think we eagerly wait for your session, sir, and thank you so much for agreeing to be a part of the session. Thank you so much for this, sir.
Thank you very much to the WIC with the ICA team for inviting me for this topic, and thank you very much to our company audience for attending this program. So, as you have heard the actuary word since the morning, so like actuaries are mainly known for the risk management, the risk mitigation, etc. So here also we have a risk like time allotted was maximum 1 hour, so we have a risk that we are short by 15 minutes. So to mitigate that risk, I will ask my audience only in which kind of subtopic you are more interested. Let's say I will show you quickly the agenda subtopics. The whichever subtopic you are more interested, I will unfold that in a detail, and others I will detail in an excellent manner. So today we are going to discuss on the importance of actuarial valuation, why actuarial valuations are required, whether you are aware of that or not. The regulatory requirement of actuarial is very common benefits in India today we have. Then the practical aspects of actuarial valuation, because there is a SS 620, there is a accounting standard, then there is some actually coming. So many times there is a confusion. What is the role of statutory auditor? So that we are going to discuss in detail. Then we will shift the gate to the ESOP. The overview of ESOP, accounting of the ESOP, practical aspects, some complex transactions in the ESOP also that we will discuss. And the theme of the topic is the opportunities for the professionals. So that also we will cover the professional opportunities in both the areas, employee benefits as well as the ESOPs. If you have any specific interest in this topic, you can let me know. So, and again, this will be a two-way discussion rather than a one-way communication, because as part of my regular exercise, I have kept some kind of poll questions. Due to the positive time, I am not using the online poll tool, but still I have kept the questions on the slide, so you can read the questions, you can discuss them, and you can answer that. So I want this to be a two-way communication rather than a one-way communication. So first, to talk on the importance of actuarial valuation, this is one slide for the non-compliance in the accounting standards, which is given by the financial reporting report of the ICAI. So what they do, they pick up various annual reports, check the different accounting standards, which have the more non-compliance. If you see the AS15 have the highest non-compliance after the AS3, which is the cash flow statement. So it in a way shows that many companies are maybe not complying properly with the AS15. What are those non-compliance that we will discuss in detail while I go through that particular topic? But this is the one key reason why we as a chartered accountant, we as an auditor needs to ensure that this accounting standard is complied with. Otherwise, we don't know when the NAFRA or the ROC they will catch us or something like we have just seen maybe couple of days back in case of the CCTV that everybody knows. Now coming to the employee benefits, which let's say the AS15 and Index 19 both are applicable. This accounting standard divides the employee benefit in 4 subcategories. First one is the short-term employee benefits. As the name suggests, short-term. So these are the employee benefits which are paid within the 12 months from the reporting date. So they don't have much of the variability. Like for example, we know from the visibility that when this is going to be paid, what could be the expected payment amount. So the accounting standard says for the short-term employee benefits payment, you don't require any actuarial valuation. What we need to do the accounting, we need to account for the expected payout on account of these short-term payments as an expense when we render the service. What can be example of short-term employee benefits? For example, the salary of the March month, or let's say the provident fund of March month which is paid in April, for example, or let's say the annual bonus, performance bonus, which on the yearly basis, but we give it in let's say the May, June. So this needs to be accounted in the appropriate financial year where the service is rendered. So these are all covered under the short-term employee benefits. The second one comes is the post-employment plan. As the name suggests, post-employment means employment खत्म होने के बाद में पैसा मिलेगा. So what can be example? Gratuity. Gratuity कभी मिलता है? Retirement, death, resignation. In service you can't claim gratuity. Another example is provident fund which we get after the retirement from the let's say after 58 age. Another example could be pension. For example, some organizations may be having the pension. If you are doing the bank audits, if you have some bank clients, they must have the pension schemes. So they are example of the defined benefit. PF is an example of the defined contribution plan if we have money deposited with the EPF. Similarly, the NPS contribution, it is an example of the defined contribution plan. The third type of employee benefit is the other long-term employee benefit. These are the long-term means beyond the 12 months, but before employment. Okay, so this is you can say after 12 months, but before the end of the service. So the example of this could be the leave benefit, where you carry forward the leave beyond the next 12 months. It can be allowed for the engagement. It can be available for the future utilization further. We need to make the provision for the same. Other example could be long-term bonus. For example, you want to pay the bonus for the FY 22-23, but this bonus will not be paid only in the June 23. This will be paid in 2-3 installments. For example, one installment in June 23, second installment in June 24, then 25 next year, so on. So this becomes your long-term incentive plan. You can say deferred incentive scheme plan. So in this kind of plan, they are now not a short-term benefit. Short-term benefit was when you make the payout within 12 months from the reporting date. Here we are making the payout after the 12 months and before the end of employment. The last one example could be the phantom stock. The phantom stock means here we are giving the benefit to the employee, which is not linked to equity shares of the company, but which may be linked to some other parameters. For example, revenue of company, P/E ratio of company, EBIT of company, or some other parameter other than the equity share. So any benefit which is linked other than equity shares, but we want to link it to the performance of the company. Because if your company performance grows, then the benefit of employee will also grow. This is the kind of the new age benefit which company wants to give to retain the employees. And how the accounting of this effort it is as per the other long-term benefit plan. The termination benefit plan is, for example, any VRS scheme, we are terminating certain employees. Now the accounting standard, which is AS 15 and Index 19 both, it says that for post-employment plan, which is defined benefits and the other long-term plan. For these two category of plans, we need to do the actuarial valuation as per the projected unit credit method. This is what given under the AS 15 and Index 19 both. So irrespective of the standard which is applicable to our organization, we need to make the provision for these benefits as per the actuarial valuations. Now, let's say we have a question that in your organization, which is a private limited company, which have more than 10 employees, and Gratuity Act is applicable because we all know Gratuity Act applies once we have 10 or more employees. So now the question is, A15 requires actuarial valuation as per this PUCM method for which category of companies? Like the first option is only listed companies. The second option is non-SMC company. Non-SMC includes listed plus companies having turnover more than 250 crore or borrowing more than 50 crore. Third option is SMC and non-SMC. So in your view, which is the right answer? Can any one of you tell ABC, which should be the right answer? C. Okay, anyone on the A and B? C. All members believe C. Yeah, the C is the correct answer. It is required by all kinds of companies. Why it is required by all the companies? If I come to this quickly, because many times we chartered accountants misinterpret this exemption given to the small and medium companies. The small and medium companies, which means turnover less than 50 crore, borrowing less than 50 crore, those SMC companies are exempted only from the detailed disclosure, the last X. They are being exempted from the disclosures. कि नोट टू अकाउंट में 500 पेज का नोट नहीं देना है, बाकी प्रोविजन एक्चुअल वैल्यूएशन के हिसाब से बनाना है. So many times the company believe they don't need to make the provision also, but that's not the right way. Auditor needs to ensure that appropriate provision is made as per the actual valuation. For the non-SMC, which means the large organizations, they need to make the provision plus the disclosures as well. And when it comes to the Index 19, there is no such exemption for the small and medium company because they have only one set of companies, which is Index organizations. So there you don't have any exemption. एक बार इंडेक्स लग गया तो सारे अकाउंटिंग स्टैंडर्ड पूरा ही फॉलो करना है, वहां पे कुछ भी आधा अधूरा नहीं. So now many times we get a question on the non-company entities also. For example, मेरा पार्टनरशिप फर्म में मेरा LLP है, उसको एक्चुअल कराना है कि नहीं कराना, उसका प्रोविजन कैसे करना है. So for that question, the ASB have bifurcated the entities into 4 different levels by the ICA guidance note on that same. So there are 4 different levels of entities, level 1, 2, 3, 4. It is based on the turnover and the borrowing criteria. Detailed definition is given in this same appendix. Mainly the level 4. The level 4 means सबसे छोटा माइक्रो एंटिटी, जहां पे टर्नओवर 10 करोड़ से कम होता है, बोरोइंग 2 करोड़ से कम होता है. वो बहुत ही छोटे माइक्रो ऑर्गेनाइजेशन के लिए एक्चुअल वैल्यूएशन टोटली एग्जेम्प्ट है. They don't need to make the actual valuation, but as an accounting policy, because they are following the accrual principles, they need to make the provision on the own stream. They can't say कि हम provision नहीं बनाएंगे, हम cash flow use करेंगे, cash basis use करेंगे accounting का. That's wrong. They need to make the provision on the accrual basis on the own calculation. But now come the level 2 and 3 organizations which have turnover more than 10 crore but below to 50 crore and borrowing 2 crore to 50 crore. So level 2, 3 combined entities. Entity means again the partnership of LLP etc. So for this level 2 and 3 organization, the ICA said you just take your employee count also. So if your employee count is 50 plus, then you make the provision as per actual valuation. Otherwise, you make the provision based on the own estimates. So this exemption, we need to understand very clearly which kind of organizations are exempted. So to sum up this requirement, this exemption is available for non-provision is available either to a very micro entity or to level 2, 3 entity if the employee count is less than 50. Otherwise, they need to make the provision as per the actual valuation. Now let's discuss some of the regulatory aspects of the gratuity, because this is one of the common benefits in India. So as you all know, gratuity is applicable as per the Gratuity Act 1972, and it applies to all organizations whenever we have 10 or more employees. And we have the 5 years vesting criteria, which means if you complete 5 years of service, then you are allowed to get the gratuity, otherwise you are not allowed to receive the gratuity. But in case of that, there is no such 5 years requirement. Now there is a question and ambiguity or confusion in our friends' mind sometimes on the 20 lakhs limit. What they believe in some cases of examples that 20 lakh limit is just in the income tax.
But for calculation purpose, they believe that we need to pay full amount. For example, let's say there is Mr. X, who is a very highly paid employee of the organization. Let's say his basic salary is, let's say, 10 lakh per month. And when he leaves the organization after 5 years of service, and 15 divided by 26 formula, the gratuity amount comes to, let's say, 50 lakh. So the question is whether as a company they are liable for 50 lakhs or 20 lakhs for the payment. What is your view on this? 50 lakhs. But so that's the problem. They are liable to pay only 20 lakhs as per the gratuity act. But if company wants, कंपनी की तहे दिल से इच्छा है तो वो 50 लाख दे सकता है, या फिर कंपनी ने कभी वो एम्प्लॉय के साथ एग्रीमेंट किया हो कि आपको फुल सैलरी पे विदाउट लिमिट आपको ग्रेचुटी मिलेगा, बिकॉज इन ग्रेचुटी एक्ट वी हैव सेक्शन 4 which gives this limit of 20 lakh. So that's why as a company they are statutory liable only for 20 lakhs, not for 50 lakhs. Many companies misinterpret and they just feel that कि वो 20 लाख का वहाँ पे exemption है, इनकम टैक्स में यहाँ पे नहीं है, वो सरासर गलत सोच है. बट अगर कंपनी चाहे तो सेक्शन 4 सब सेक्शन 5 दिया गया है ग्रेचुटी एक्ट में जो बात करता है, कंपनी चाहे तो एम्प्लॉय और एम्प्लॉयर एग्रीमेंट कर सकते हैं कि बेनिफिशियल टर्म्स पे ग्रेचुटी मिले. आप 20 लाख को 40, 50, 60 बना सकते हो, 20 को 15 नहीं बना सकते, 14 नहीं बना सकते. So this is the one point we all friends needs to take care. The next is once we know the regulations, now comes the accounting part. कि इसका accounting कैसे करना है benefit का. So as we all are aware that we need to follow the accrual principles, we need to follow the accounting standards and in days 19 whenever they are applicable. So in that we have the stage 15 and in days 19. Which speaks about the actuarial valuation, use of qualified actuary and the PUCM method, etc. And top of that, it says that you need to make the provision even if service is less than 5 years. So for example, you have started a company and you start up having, let's say 6 to 8 months old, very recently started, let's say June 22 you started a company with, let's say, 20 employees. So many times question comes that as an organization, whether you are required to take actuarial valuation, whether you are required to make the provision for such organization. If it is less than 5, it is just a 1-year-old company. So as per the accounting standard requirement, they need to make the provision. Even if service is less than the vesting period, this is 5 years in this case. This is given under the para 70 and the para 72 of A15 and Index 19. But at the same time, when they actually do the calculation, what they do, they don't make 100% provision. Because आज आपने 20 एम्प्लॉइज ऑर्गेनाइजेशन चालू किया है, आप नहीं कह सकते कि 20 के 20 कंटिन्यू करेंगे 5 साल. There will be some expected attrition rate. For example, 10% per annum attrition be agent, for example. Okay, so over the next 4 years, let's say you have to 40% to leave. So on the accrued benefits, on a motamoti basis, there may be provision of 60%. The actual calculation is very different, but I'm just giving you a broad picture that they don't make the 100% provision, they only make 60% provision. Considering that 40% employees will leave by the 5th year of service, and only the employees who continue the organization, they will get the benefit. So, and at the same time, if you read the accounting standard where they are given the exemptions, wording, etc. For the organizations, small organizations, let's say, कि जिनको बिना एक्चुअली के वैल्यूएशन कराना है, खुद से प्रोविजन करना है, वहां पे अगर आप पढ़ेंगे तो क्या लिखा हुआ है कि you have to calculate the gratuity for all employees, including the vested and non-vested employees. Gratuity means any benefit, including vested and non-vested employees. Considering we are required to pay benefit to everyone. So it's better to get an appropriate provision via the actuarial calculation, because in the private sector, you know that typically how the attrition rate works nowadays. It's not that the 1 to 3%, it's way more than that. I will come to that also on the auditor checkpoints, etc. But this is mainly on the accounting side. Now coming to the taxation aspect, because in this also many of our friends have some misconception, and we all are playing a role of tax auditor as well at some point in other time. So I'll just try to clarify on that aspect as well. So this point I believe everybody knows that provision for gratuity, whatever we make, it is disallowed. Because this is what we have read in the gratuity act, the income tax act. But at the same time, the income tax act says under the section 36(1)(5) that contribution to approved gratuity fund is allowed as a, whenever we contribute to the approved gratuity fund, it is allowed as an expense to the company. The point over it is a contribution to approved gratuity fund. Now, for the practical reasons, what some of the companies do, they invest directly in the insurance company. जो ग्रुप ग्रेचुटी पॉलिसी है वो अपने ही नाम पे लेते हैं, एबीसी लिमिटेड के नाम पे, बिना ट्रस्ट बनाए वो गलत है। अगर आपको 36(1)(5) का बेनिफिट चाहिए, आप इसका खर्चा क्लेम करना चाहते हैं, तो आपको ट्रस्ट ओपन करना पड़ेगा, ट्रस्ट का इनकम टैक्स से अप्रूवल लेना पड़ेगा। तो यहाँ पे चार्टर्ड अकाउंटेंट का रोल, चार्टर्ड अकाउंटेंट का स्कोप, उनका प्रोफेशनल अपॉर्चुनिटीज काफी ज्यादा है। एंड एज ए टैक्स ऑडिटर यू नीड टू एंश्योर कि ये चीज अपने क्लाइंट्स को बताई जाए, जहां पे भी अगर ऐसा कोई इरेगुलेटरी है तो, अदरवाइज व्हेनेवर दे आर कॉट देयर विल बी हेफ्टी पेनल्टीज ऑन द सेम। नेक्स्ट इज देयर इज अ कंट्रीब्यूशन लिमिट आल्सो ऑन द ग्रेचुटी फंड्स, सिमिलरली ऑन पेंशन फंड आल्सो देयर इज अ लिमिट। So typically we are talking on the gratuity, so there is a limit of 8.33% of the annual salary under the rule 103 of the gratuity. So it's not like for 5 years we don't contribute anything. 1 year suddenly company rise and give a very hefty amount to the insurance company because of liquidity. That is not allowed. In one assessment year under the rule 103, you can claim up to 8.33% of the annual salary as a expense for your contribution. Coming to the auditing aspect, we have SA620 which requires the use of qualified actuary for the defined benefit obligations, and we have this financial reporting review board and the QRB use, which we will see and discuss in detail, that it is required the use of actuaries and the role of auditor as well. Now coming to the lead actuarial valuation and the regulatory aspect, the first one only is different as compared to the gratuity. So here again the role of chartered accountant is very important to understand the regulation. See, gratuity act is a central act. सभी राज्यों में एक ही एक्ट है, इसलिए सब दिन उसको मानते हैं कहीं ना कहीं भी। Lead regulation is governed by the Shop and Establishment Act, which is a central, not a, it's a state specific act. That's why problem is एक state में अलग practice है, दूसरे में अलग practice. But at the same time, if you are following the Shop Establishment Act, you need to follow the lead policy which is given under that Shop Act. Now, if I tell you the Shop Act of the Maharashtra Shop Act says you need to carry forward the leave up to 45 days. And if you don't carry forward the limit up to 45 days, then it is a violation of the Maharashtra Shop Act. At the same time, it says that you need to encash the leave also whenever employee separates from the organization. They also gives the provision for the, let's say, the sandwich leave rule. For example, आपने कई जगह सुना होगा कि थर्सडे और मंडे कभी हॉलिडे है, उसके बीच का छुट्टी आप लेते हो सैंडविच में फंस जाओगे। मतलब फॉर एग्जांपल, सो सैंडविच रूल इज नॉट अलाउड बेसिकली, इट्स गिवन अंडर द शॉप एक्ट in the technical language basically, because sandwich rule I am saying because it is very commonly known to our friends, so it is not allowed. So we friends, we chartered accountants needs to know these regulations, needs to tell the company what these are the rules and regulations given under the legal framework. If we don't follow, see again, when we caught we don't know, because it's again whenever the inspection happen or whatever, any complaint or whatever, because see, we are going on the good faith basis that we have to follow the rules. So this is what given under the rules. Like Maharashtra gives a limit of 45, Karnataka, Delhi also gives a limit of 45. And Factory Act is a center specific act which have a carry forward limit of 30 days. This is mainly applicable on the manufacturers, let's say, and wherever they have the power added something like that. So again, if we actually follow this kind of regulations, which we are supposed to follow, then leave is also allowed to carry forward. Then accounting standard plays a role. Accounting standard says if your leave is allowed to carry forward beyond the 12 months, it is a other long-term plan. How you need to do accounting as per actuarial valuation. So exception is again said there is no benefit on the provision. Benefit is allowed only on the payment basis. यहाँ पे group LIC policy का कोई benefit नहीं मिलने वाला है. If you purchase any insurance policy for the leave, there is no benefit under the income tax. It's just an investment if you want to do to offset your liability, but you can't get any benefit out of the group leave policy for the taxation. Again, it is a misconception I have seen because various of the, I don't want to name the insurance company, but a large sector insurance company, their agents tell the corporate clients कि gratuity का जैसे इसका भी policy लीजिए, इसका भी claim कीजिए. So as an auditor, we need to be aware, we need to be vigilant to give the right advice and appropriate advice to our clients, because sometimes we are playing a role of tax auditor, sometimes we are playing a role of the consultant to the company. So we need to be aware of these things. Yes.
Respect a company जिसका business office register office मुंबई में है, there is a business multiples office मुंबई. तो अलग अलग स्टेट में वहाँ का applicable law या मतलब जो महाराष्ट्र में स्टेट मतलब उसका register office मुंबई में, यहाँ का महाराष्ट्र का स्टेट का जो भी ये स्टेट of state is right. वो all India में आप.
So I will not go into the legality of कौन से स्टेट का उनको प्रोडक्ट का लाइसेंस लेना है कि नहीं लेना, उसकी लीगलिटी में मैं नहीं करना चाहूंगा. बट जहां का भी मान लीजिए उन्होंने लीगल लाइसेंस लिया है, आई एज्यूम कि उन्होंने 10 जगह का लाइसेंस लिया है, तो वो 10 जगह के एम्प्लॉय को वहां का भी लगेगा. एंड इफ आई फॉलो द फर्स्ट प्रिंसिपल without going into the legality, the employee wherever they are working, ideally the benefit of that particular state should apply. And wherever we consult the companies, wherever they have the multiple locations, what we advise you pick those 10 locations. We check the policy of 10 different locations. Then this itself is beneficial because see as a company you can't have 5 different policies for the 5 different employees, because otherwise it will be difficult to administer the employees to explain. So they don't have very large. Obviously, I have seen the variation over here that Gujarat have 63 as compared to Rajasthan have only 30. So variation is there. So, but we need to understand as per the company's business policies and their management's intention and how much complexity they can have.
Management can decide what
But it should be within the purview of this. Now coming to some of the practical aspects of the actuarial valuations. So while doing the audit, we need to take care of these things very carefully. The first one is directors needs to be included in the actuarial valuation. They are also part of your employees, but at the same time there is a catch. Let's say you have a insurance policy of the group gratuity. So under that there is an income tax rule 101 to 104 basically. So they say if any director having more than 5% shareholding, they cannot be part of the that gratuity fund. तो वहां पे ग्रुप ग्रेचुटी में वो पार्ट नहीं है, बट यहाँ पे प्रोविजन बनाने के लिए वो पार्ट रहेगा. The reason is the provision is as per the accounting standard. Accounting standard has nothing to do specifically with the income tax. Secondly, as per the in dash 24 disclosure, we need to give the KMP amount for the salary, post-employment plan, other long-term plan, termination plan. In fact, for ESOP expense as well, you need to give the KMP expense. Many times I have seen the annual report of companies, they say that due to difficulty, we are unable to disclose the KMP amount for the in dash 19, but that's not the right way. You can ask your actuary to give this KMP expense, they should give. The next one, which is very important, is we need to check that benefits scheme is same as per the actuarial report and company policy. Like we discussed, the company can have the beneficial terms in terms of the gratuity or in terms of leave, they can have any policy. So they need to ensure that the whatever actually have value, it is in line with the company policy or not, because it may be possible that they have not communicated to the actually that gratuity is without 20 lakh, let's say. So actually have by default considered the gratuity at 20 lakh euros. But as part of your analysis, you know, as part of HR policy, you know, that 20 lakh limit is not applicable. So you need to ensure that benefit scheme in actuarial valuation and the company policies in the same. The next one, which is very important, on the current and non-current liability breakup. So again, in case of the funded plans, the current liability is mainly the expected contribution in the next 12 months. Whatever you want to contribute in the next 12 months to the plan assets. And in case of unfunded plan, it is mainly the expected cash flow, benefit payout to the employees. But this needs to be bifurcated only for the net liability. Sometimes I have observed as part of the annual report checking that company bifurcate the current and non-current to the gross liability. मान लो उनका defined benefit obligation तो gross liability 100 रुपए है, उन्होंने plan assets में invest किया हुआ 80 रुपए, तो current non-current का ब्रैकेट खाली 20 रुपीस का आएगा, 100 का नहीं आएगा, because the accounting standard says we need to show in the balance sheet only the net liability. In the accounts, we can't show the both number on right and left side. We need to show only the net amount on the balance sheet. Then the next one of the very important aspect is on the leave availment and leave engagement. That the standard says that for the leave availment valuations, we need to use the CTC salary deposits, the leave which we pay on the consumption of leave. But for encashment, the leave can be the basic salary, also the different salary. And the company policy can also have the different carry forward leave. For example, we have certain companies where the carry forward the leave lasts up to 180 days, but encash the leave only for 120 days. क्या company छोड़ के जाएंगे तो पैसा 120 का मिलेगा, but carry forward 180 days. So the actually in the valuation is to use both kind of limits, because the leave utilization leave availability is applicable out of 180. You can utilize full 180 days of leave, but encashment provision is only for 120 days. So if there is a different limit, different salary, that needs to be incorporated in the valuation. So as an auditor, we are not supposed to go into depth of the calculation, but just needs to ensure that they are being appropriately highlighted in the benefit scheme and the plan provision mentioned in the actuarial report. Because that's why as part of our actuaries institute, we have the actuarial practice standard also, which tells to the actuary to mention these assumptions and the plan provisions in the part of the actuarial report. The next very important point is on the employee transfer within the group. Let's say you have different employees being transferred from A limited to B limited with the continuity of service. So you need to transfer the gratuity and the leave liability as well. If we have the fund, then fund should also move from one company to another approved fund. Then last point is whenever we consider any plan assets, then we need to include the trust balance also. Many times it has been observed that gratuity trust have some bank account, which is used in the plan asset, but that needs to be considered. And accrued interest also needs to be considered, because in case of listed company, you see that there is a hurry to finalize the books from the 4th April, 5th April. Okay, but the LIC or any insurance company, they will give you the interest of March, but after 10th April, 20th April, 30th April. आप उनसे 31 मार्च को जाके स्टेटमेंट लेके आए, उनके स्टेटमेंट में इंटरेस्ट मिसिंग होगा, तो वो इंटरेस्ट का उनका 10-15 अप्रैल के बाद में जाके लगना है. But you want to finalize your books of account on the 5th April. So you need to ensure that some part of accrued interest is considered as part of the accrual principle. The difference can be adjusted later on in the next year, but at least some accrued interest is considered in the valuation. So any counter thoughts or any other experience you want to share on this before we move on to the next part of the financial reporting board?
balance and cycle. In which books we.
So let's say we are preparing the ABC Limited's books of accounts. Okay, this is our company client, let's say. So in their books of accounts, when we consider the plan assets, let's say let's say in the LIC which you have taken,
Yes.
the fund balance shows 10 crore balance. ये आपने 31 मार्च को लेके आए 10 crore balance. But interest is not included as of now because interest को 10 अप्रैल के बाद आएगा. And let's say interest is 5 lakhs, accrued interest, let's say. So the plan assets which we show in the disclosure, it will not be 10 crore, it will be 10 crore 5 lakhs. In ABC Limited books of account. And see, ट्रस्ट का जब भी बुक्स बनेगा वो यूजुअली बनता है जून जुलाई के बाद. ट्रस्ट भी अपना ऑडिट कराता है, आईटीआर फाइल करता है. वो यूजुअली काम होता है कंपनी के सारे काम खत्म होने के बाद में. तभी तक वो लोग एक्रूड इंटरेस्ट जो एक्चुअल आया वो कर लेते हैं. सी हियर वी आर डिस्कसिंग द पेन पॉइंट ऑफ द एबीसी लिमिटेड कि जिनको 5 अप्रैल को जल्दी है अकाउंट्स बनाने की, उनकी समस्या है कि वो विदाउट एक्रूड इंटरेस्ट इसको आगे बढ़ा देते हैं. दिस आई हैव सीन इन वेरियस कंपनीज. सो that we need to ensure as an auditor.
Can the company pay to the gratuity, like suppose they have created a gratuity trust as well, and now they are that gratuity trust is investing in LIC. Okay, so company can directly, ABC Limited can directly pay to the LIC, or they have to move the funds through the trust only.
So the ideal correct practice should be the LIC will give the check to the trust. Trust will give the check to the employee. This is the most appropriate method. But in the practical situation, it may happen what is happening. Company ABC Limited is giving check to the employee. Trust is giving check to the LIC is giving check to trust. Trust is reimbursing to the company. This is the practical alternative which is into practice also. That is also fine. But I don't prefer that. I prefer the first route, which is कंपनी इंटीमेट टू एलआईसी की एक क्लेम आया है, क्लेम फॉर्म भरा हुआ, ट्रस्ट को चेक बना के एलआईसी चेक बना के ट्रस्ट को देगा, ट्रस्ट से एम्प्लॉय को देगा. दिस इज द मोस्ट एप्रोप्रिएट.
This case or whether it will be recorded in the AB Limited books or it will not.
No, it will not come into ABC Limited books. वो खाली ट्रस्ट की बुक्स में उसका अकाउंटिंग होगा. ABC Limited में इसलिए नहीं होगा क्योंकि एक मार्च को एक्चुअली रिपोर्ट भी बनाया काउंसिल पे सेम. Yeah, the reason is this one, that I hope the screen is visible over here. Okay. Just let me go to the asset. Okay, so let's say this is the plan assets of 2.80 lakhs in the company books of accounts. During the year, they pay the gratuity from fund of 41 lakh. एक एम्प्लॉय छोड़ देगा उसको 42 लाख का ग्रेजुएटी आपने दिया है. सो 42 लाख आपका प्लान एसेट्स में कम हो जाएगा और 42 लाख आपका लायबिलिटी डिस्चार्ज हो गया. तो क्या आपने एम्प्लॉय को ग्रेजुएटी पे कर दिया तो सेम 42 लाख से आपका यहाँ पे फंड का पे आउट हो जाएगा लायबिलिटी. बट व्हेन यू प्रिपेयर द बैलेंस शीट रिकंसिलिएशन लेजर फॉर द दिस काइंड ऑफ वैल्यूएशन, so usually all actually give this balance sheet reconciliation table. The opening net liability, net means asset और gross obligation of plan asset का net करने के बाद आपकी बैलेंस शीट में क्या बचा हुआ था वो ओपनिंग नेट लायबिलिटी आ गया. P&L में कितना खर्चा गया, OCI में कितना खर्चा गया, बेनिफिट पेड अगर कंपनी ने अपने पॉकेट से दिया है तो उसका अकाउंटिंग एंट्री यहाँ पे आता है. वो 42 लाख का यहाँ पे क्यों नहीं आया? क्योंकि यूजुअली कंपनी क्या करती है, प्लान एसेट्स का अलग से लेजर ही नहीं रखती है. वो क्या करते हैं कि जब भी आप एलआईसी को या जो भी इंश्योरेंस कंपनी को पैसा देते हैं, आप उस पेमेंट की एंट्री क्या पास करते हैं? आप उसकी एंट्री करते हैं प्रोविजन फॉर लीव, वो ग्रेचुटी अकाउंट डेबिट टू बैंक अकाउंट. आपने जो ग्रेचुटी प्रोविजन पहले बना रखा था उसी को कम करके आप उनको पैसा देते हैं. अलग से आप इन्वेस्टमेंट अकाउंट डेबिट टू बैंक अकाउंट नहीं करते. तो जब भी आपने एसेट का अकाउंट ही नहीं खड़ा किया हुआ तो जब भी उस एसेट में से पैसा जा रहा है तो वो कैसे रिड्यूस करेंगे? आपने अकाउंटिंग नेट बनाया हुआ है कि लायबिलिटी और एसेट को नेट करके आपने लेजर बनाया हुआ है. तो जब भी वो एसेट में से पैसा जा रहा है तो एसेट भी कम हो रहा है, लायबिलिटी भी कम हो रहा है. तो वो एंट्री आपका नलीफाई हो गया क्योंकि आपने नेट बेसिस पर अकाउंटिंग किया होगा। तो ये बैलेंस शीट रिकंसिलिएशन आपको नेट बेसिस पे बता रहे हैं कि आपका नेट लायबिलिटी कितना है, आपका पीएनएल में खर्चा कितना है, ओसीआई में खर्चा कितना है। So that's why I always recommend to the companies that when you want to pass the accounting entries, you just cross check this table, आपके accounting table. Because many times when I visit the client, I have seen in some of the cases कि notes to account में वो बराबर ही report चिपकाते हैं, ऐसे बहुत सुंदर सुंदर print करके लगाते हैं, but accounts में कभी आप उनके by chance आप उनका लेजर कभी check करेंगे, तो ये amount में कहीं ना कहीं पे वो 19-20 का हेरफेर मिल जाता है। So that's why I always try to request our friends in the companies and the auditor friends कि आप ये 20-22 पेज की जो एक्चुअल रिपोर्ट होती है, मैं समझता हूँ कि थोड़ी बड़ी बनानी पड़ती है कुछ कारण से, I give a total respect for that, but इसमें एक छोटा सा हाफ पेज का एक रिपोर्ट यूजुअली हर एक्चुअली की रिपोर्ट में रहता है कि लेजर मूवमेंट, so at least we need to ensure that our accounts and the notes to accounts वो दोनों टैली होना चाहिए। ऐसा नहीं कि बुक्स में खर्चा कुछ लिया है, नोट्स टू अकाउंट में कुछ अलग पिक्चर जा रहा है, that should not happen. I have seen this happening in the large scale listed companies as well, so that's why I am quoting here. Coming to this, some of the non-compliances by the which are found by the financial reporting review board, not done by them, it is done by the companies, but found by the financial reporting review board. Mainly the non-provisioning of gratuity where they don't follow the matching principle. Sometimes the disclosures are not made fully. Then the most appropriate is the provision for leave is not made as per the actual regulation, which is the other long-term plan. So as an auditor, we need to ensure that we don't commit this kind of mistakes in our accounts, in our auditing plans. One more this point I would like to discuss, the third point, which is the defined benefit plan wrongly constituted as a defined contribution plan. It is in the case of the exempt PF fund. If you have exempt PF trust, we need to calculate the provision as per the actual valuation for the interest shortfall. It is a defined benefit plan rather than the defined contribution plan. Then this is lastly on the issues which are found by the quality review board related to SA 620. So this says that auditors have not evaluated. What they have not evaluated, the first one, competence capability of the actuary. If वो capable है कि नहीं. Second one, they have not evaluated the reasonableness of assumption. की assumption जो दिया वो लिया कि कुछ check करके लिया. So these two things, as an auditor, we are required to check. This is the responsibility given to us by the SA 620. So what could be the possible solution to this? Because here we are to give some solution as well. So the possible solution could be, as an Institute of Actuaries of India, we issue the certificate of practice to the actuaries. So that can be asked because that certificate of practice includes the wording that it is in the area of employee benefits. Let's say it is in the area of life insurance because, for example, you want to engage an actuary for the life insurance work. Let's say because today we have the seminar on the insurance health. Okay, so you want to engage some actuary on the consultancy method of the life insurance. So how you will ensure you capable hacking? So for that we can check the certificate of practice given by the Institute of Actuaries of India that will contain the words. They are allowed to practice in the life insurance, general insurance, health insurance, like that. So similarly, employee benefits. So that kind of certificate of practice can be checked. Secondly, the companies are not allowed to practice in the actuary, only partnership or individual is allowed, similar to the CA. So if you receive any actuarial valuation report from the company, it is not a valid. The second one was the reasonable of assumption. So as an auditor, we are supposed to do some kind of checks on the reasonable of assumption. For example, the attrition rate. This is the one assumption I have seen various times that company just check 1 to 3%. आप अगर अपने भी क्लाइंट का कभी खोल के देखेंगे शांति से, तो उसमें मिलेगा कि काफी जगह 1 to 3% attrition rate मिला हुआ रहेगा. So we need to just check with the HR team or we ask them, what is the actual attrition rate in the company? What is the actual salary increment in the company? So we can just do the one-on-one discussion with them, or we can do some broad checks on the data. So how you can do the checks? I will send this all the files to you, but I'm just showing you the links of that because due to the shortage of time. So let's say you have some large organization where let's say you have 20,000 employees. So what you can do out of 20,000 employees, you can break down into the different levels like service wise or page wise, that into that particular band of that employee, particular cohort of employees, how many employees are continuing, how many are leaving. So that's how we can do the checking of the attrition rate. So you are surprised, this is the data of the actual clients, means only small numbers here and there, and they were using the assumption as 3% attrition rate. But their actual attrition rate is around, so that you can see the service is more than 4, which means 5 or more. There we have attrition of 10-11%, but some service वाले का तो attrition 20-40% है. Now what will happen is that I'll just, as I discussed the first sentence, आपने attrition चुन के 10%, बंदे की सर्विस है 1 साल, प्रोविजन अपन ने कितना बनाया 40% कम करके 60% प्रोविजन दिया हुए. Okay, now consider attrition rate 10 की जगह पे 2%. So 2 into 4, 8% is discounted. 92% provision you made. What could have been the fair provision? 60%. But 60% provision की जगह पे अपने 92% provision बना दिया. So how much excess provision we have made? So that's why these assumptions are very important. And this assumption will have an interlinkage to the discount rate. So what discount rate accounting standard says, we need to take based on the expected term of obligation. Expected term कैसे आएगा? Attrition rate के basis पे. So that's why these assumptions are very important. Auditors are also required to check for the reasonableness as per the standard of auditing. At the same time, actuaries are also required as per the actuarial practice standard. So somehow, whether they are doing or not, I don't want to comment on that because see, I am coming from both the professions and having role in both the bodies also, ASB and the Actuaries Council. So my duty over here is to tell to the chartered accounting friends that while we are doing the audit, we should do some broad checks. I don't want you to do very detailed check in all the plans, otherwise we will not be able to complete the audit. So maybe you can request or you can suggest to the clients and they do some detailed analysis, which you can just check. Or maybe from your side, you can just have a one-on-one discussion to check for the reasonability of the assumption. So, any question on this? This is all from my side. These are some consequences of non-compliance. I believe these are in general and known to everyone because the thing is, what is the cost of compliance? क्या non-compliance करके देख लो तो वो आपकी cost of compliance है. So non-compliance will always have some kind of penalties, some kind of maybe jail also. I don't know. Maybe आपका practice license कहाँ से कहाँ चला जाएगा. So all these things are possible. So that's the possible way.
See companies areas to be remove the discontinued business and the valuation may partner due to the company and the liquidation problem and any auditor we can qualify that company not because the company has sick declared limitation because it's from that 20 years.
So if let's say the business is discontinued, so they must not have employee.
Yeah.
अगर employee होगा तो उसका provision होगा.
They are not.
Then there is no need for disqualification. They qualification करने की आवश्यकता ही नहीं. See qualification तभी आएगा जब कुछ गलत किया है. अभी मान लो किसी organization में बंदा ही नहीं है. They don't have employee. If they don't have employee, there is no provision. If they don't have any provision, what is the need of actually? So they have not done anything wrong. But if they have employee, जिसका payment pending है. If from liability still undischarged, then they have to calculate the provision. If they have not done that, then the qualification will come. If there is no liability, then why there is a provision? Then why there is a qualification of not to make the payment? So I think now I have to see the watch also, because if I am speaking, then I am eating out of the Vikas' time. So if you permit me, I will take next 7 minutes to conclude on the ESOP.
Yeah, no worries, sir.
Yeah, so.
And I suppose you have permit me to extend my time.
So this is all due respect. So this is a topic which can take 7 to 8 hours also, because I covered this extensively for accounting standard board in the India certificate course, but I try to give you the overall glimpse which we all friends needs to be aware of. So that's why I try to give you. Apologize me if I have been running very fast. So coming from the ESOP overview and plus the opportunities for chartered accountant simultaneously. So on the regulatory front, there is a complete requirement under the section 52(1)(b). Whenever you launch any ESOP plan, so you need to get the shareholders approval, board approval. If you are a listed company, then some merchant banker certificate will be required. Then there is a requirement to file with the BSE and the NSE for the in principle stock approval. So that kind of regulatory requirement comes into play. There is a SEBI regulation 2021 for the listed company. There is a rule 12 for the unlisted companies. The key point under the rule is the vesting period. जब भी आपने इसको ग्रांट किया तभी से एम्प्लॉय एक्सरसाइज करेगा इसको vesting period should not be less than 1 year. Many times you may see in your clients कि कंपनी ने बहुत जल्दी में ESOP पॉलिसी बना लिया, but उसका vesting period 1 साल से कम रख दिया. That's not the right way. When it happens, they offer the employee joining letter. तभी ESOP पॉलिसी था नहीं. तभी HR ने एम्प्लॉय को बोल दिया कि आपको आना काम पे, उसको ESOP कमिट कर दिया. but ESOP पॉलिसी नहीं था. Then they try to find a way. कि एम्प्लॉय को कमिट किया हुआ है वेस्टिंग पीरियड इतना, बट अभी तो पॉलिसी था ही नहीं. So once the policy comes, then the grant date will start. Then the vesting period will start. Vesting period has to be minimum 1 year. That you need to keep aware. If we talk about the accounting aspect, then accounting is as per the guidance note of ICI, which is 2020, the latest version. If it is Index, then Index 102 is applicable. If it is a guidance note also, then we need to take care that for the accounting side, company is allowed to book the expense either on the intrinsic value method or the fair value method. But at the same time, they need to give the fair value disclosures. This is the mandatory requirement under the guidance note. But if it is an Index 102, then they need to follow the fair value method only. There is no option of intrinsic value. This is the broad timeline of the ESOP. First we grant, then there is a vesting, and post vesting there is an exercise. And company is free to have the locking period after the exercise. They can put any locking period. There is no restriction from the regulator side on that. And this is the broad chart that how you implement any ESOP plan. So there is ample opportunities for the chartered accountants to do the practice in this area, because this is not a reserved area for any professional. So any company secretary, chartered accountant actually can do the practice in this field with the requisite skill set. So the overall process is, first we have to prepare the ESOP scheme as per the company's requirement, because there are various cash settled plan, equity settled plan, different vesting criteria, different exercise criteria, how long exercise we want to keep, good levers, bad levers. There are various different processes that we need to keep in our mind while making the ESOP policy. Then there is an approval of ESOP scheme by the board and then the shareholders. After that, we expand the ESOP, and then the journey start for the service. And then the accounting will start. Once you grant the ESOP, then accounting will come, the fair valuation as per the black score, etc. So this is again one area where we chartered accountants have various opportunities in the valuation. So basically, if 25 say there are two type of valuations being required in case of ESOP. If it is a unlisted company, we require the company share valuation also. If it is a, and then second valuation is the fair value of option. Because it is a call option, and what is the fair value of the option which needs to be amortized in the accounts over the period when the service is rendered, basically. And the prominent method is used with the black box method, but as per the complexity of the scheme, we may need to follow the binomial model or the Monte Carlo simulation. We have done various cases of Monte Carlo where there are complexities in schemes, so that we need to follow that particular method. This blue highlighted area is very important. This is being missing in various ESOP accounting by the large organizations. The accounting standard in dash 102 under para 90, it says that when you book the ESOP expense, you need to check the options which are expected to vest. Example, you have granted ESOP to 100 employees, total 10,000 options are granted with a vesting period of let's say 4 years. So the standard says you need to amortize the expense over 4 years, but not for all the options granted. You have to calculate the options which are expected to vest. It may be possible there will be some attrition. Some employee will leave the organization before that 4 years. So that attrition you need to keep in your mind and calculate the expense for the options which are expected to vest rather than the total granted option. This is the issue I have seen in various large listed organizations as well, where they just take the expense for the options which are live on that balance sheet date. Future का attrition rate को consider नहीं करते. So this is one thing we need to ensure it is compliant with. So I think this is all the key points I wanted to discuss because otherwise the slides will be reviewed. They are, although they are relevant, but not that critical, so I am skipping for the time being. Okay, just 1 minute more I will take because the cancellation of plan. This is one area where again there is a scope of consulting and the scope of correct interpretation is required. Let's say company have granted the ESOP with a total 3 years vesting period. Let's say, okay. And 2 years expense, sorry, 1 year expense you have already recognized based on the straight line method. Now in the second year, company feels ESOP is not viable. They want to cancel the ESOP now. So there is a cancellation of ESOP. Now the question is, what we need to do with the first year expense? कि वो पहले साल जो खर्चा किया उसको रिवर्स करना है क्या या क्या करना है? What is your thought process? What we need to do? कि जो फर्स्ट ईयर का खर्चा उसको रिवर्स करना है या सेकंड का वापस बुक करना है? What is your thought on that? टोटल 3 साल का ESOP प्लान है. अकाउंटिंग स्टैंडर्ड बोलता है 3 साल का खर्चा अमोर्टाइज करना है. पहले साल का खर्चा आपने 1/3 बुक कर दिया, सेकंड ईयर में आप आ गए. अभी सेकंड ईयर में कंपनी बोलता है प्लान इज नॉट वायबल, वी वांट टू क्लोज द प्लान, वी आर कैंसिलिंग द प्लान. सो व्हाट इज द अकाउंटिंग ट्रीटमेंट? कि पहले साल का रिवर्स करना है कि दूसरे साल का और बुक करना है? व्हाट डू यू थिंक? अभी ज्यादा दिन का काम सही रहेगा कि करना है, बट अकाउंटिंग स्टैंडर्ड आगे सवाल है.
First year is over.
Yes.
March 31st, the liability was there and it has to be accounted and it's closed. P&L should not be used.
Okay, then second का खर्चा सेकंड में बुक करना, थर्ड का थर्ड में.
Second year, that is no, that's been cancelled.
Okay, सेकंड का नहीं करना.
Third का भी.
थर्ड का नहीं करना. फर्स्ट का तो हो गया तो हो गया, सेकंड का को साइड पे. Okay, this is one view. Same view. Any other view? Any other view on this? Okay, अभी अकाउंटिंग स्टैंडर्ड क्या बोलता है? चाहे गाइडेंस नोट हो, IFRS हो, इंड AS हो, कुछ भी हो, वो क्या बोलता है कि सेकंड और थर्ड ईयर का जो खर्चा होने वाला था उसको आपको अभी बुक करना है. The para 28 says over here that cancellation of the ESOP plan, this needs to be considered as an acceleration of vesting. कि आपका ऑप्शन 3 साल की जगह 1 साल पे आके वेस्ट हो गया, तो आपको जो ईयर 2 ईयर 3 का जो बाकी का 2/3 खर्चा है वो आज आपको P&L में आके डेबिट करना है. अभी कंपनी के मैनेजमेंट ने जब डिसाइड किया था कि प्लान क्लोज करना, उनके दिमाग में क्या सोच चल रहा होगा उनके दिमाग में यही सोच चल रहा होगा कि सेकंड थर्ड का खर्चा पीएनएल में आएगा नहीं, या ये सोच चल रहा होगा कि फर्स्ट का खर्चा रिवर्स हो जाएगा, तो मेरा ईपीएस पे थोड़ा थोड़ा अच्छा फर्क पड़ेगा. So this would have been the thought process in the company's mind, but that's not the accounting requirement. Accounting standard says you need to book the expense for year 2, 3 as well. And then what you need to do with that expense? Expense P&L में चला गया, EPS आपका कम हो गया. That ESOP reserve which you have, since ESOP is cancelled, this ESOP reserve is no longer required. आपको शेयर किसी को ग्रांट करना नहीं है, तो वो ESOP रिजर्व को आप P&L में रिवर्स नहीं कर सकते, उसको जनरल रिजर्व में रिवर्स करते. तो आपकी अकाउंटिंग एंट्रीज होगी, P&L अकाउंट डेबिट टू ESOP रिजर्व पहले खर्चा बुक करने की, ईयर 2, 3 का खर्चा पहले बुक करेंगे ईयर 2 में, फिर ईयर 2 में जब भी वो ESOP रिजर्व कोई काम का नहीं रहेगा, ESOP reserve is no longer required to be carried forward. At that time, you will reverse that ESOP reserve in the general reserve. This is what given in the para 23 and 24 somewhere in the investment. So this is very important point we need to understand, because in the first principle, I would have also thought the same way, which you have, but I am not saying you are wrong, but we need to give the due respect to the accounting standard, and that's why whenever we are consulting in this field, we can't hold the half knowledge. Okay, so I know this is a very creative field. The professional piece is also very good in this field, I can tell you. But at the same time, we need to go with the proper knowledge, and not just about the regulation, but about the accounting as well. Because tomorrow company can call you and ask your plan cancel. So we need to understand all this concept as well. And lastly, this is the snapshot of the professional opportunities, like ESOP scheme drafting, ESOP implementation, and then ESOP valuation you guys can do. And again, the approved fund, the trust setup, etc., you can help to the companies, the funding through insurance companies, because insurance companies we get many chartered account friends have a tie-up, so they can use that tie-up to recommend any insurance company. There is a commission available, I can tell you, maybe 0.5% of the investment amount. Then again, the last point, there is huge demand supply gap in the actuary. Currently, there are many chartered accountant friends, the young chartered accountant friends who have started the actuary. I have also started the actuary just after completing my degree, because I find this field to be, because there is a demand supply gap. When I started the actuary, there were only 250 actuaries. Today we have 600 actuaries, but still we require at least 3,000 actuaries per year. So there is a huge demand supply gap. We have the availability of actuaries only 600. There is a requirement of more than 3,000 actuaries. So if you want to start this as a career, or you want to guide this as a career to any of the young professionals, there is a ample opportunities in this field. So with this, I would like to take a pause, and I know I have overall apologies for that, but in the interest of all of you, I have continued with your permissions. Yeah. So any question, I am happy to take.
So one thing regarding this family, nowadays the company has the policy, where it is taken the sanitary family. But you said that as the Bombay Commerce Establishment is not so how does
we need to guide their leave policy cannot be harmful or less beneficial than the government act. So the point is, whenever some compliance officer comes, let's say, then they will be in the trouble. I know, you will find that a category companies also following that. So that's the point की वो complaint कौन जाके करता है? A category companies में समस्या क्या होती है कि वहाँ पे वर्कर यूनियन नहीं होती है. जहाँ पे वर्कर यूनियन होती है ना, वहाँ पे व्यक्ति के सारे रूल फॉलो करेंगे. बट जहाँ पे भी अपने व्हाइट कॉलर एम्प्लॉयज रहेंगे ना, वहाँ पे कोई ना कोई समस्या रहेगी पॉलिसी में. उसका रीजन क्या है? White collar employees don't have the unity. They don't have the union. So this is the advantage which they are taking sadly, so but yeah, it is written, I can show you maybe. I will send you that, so it's written, so it's only 2 pages document. Total 14-15 pages are there. Leave is covered only in 2 pages. उस लीव जो दो पेज में लिखा हुआ है उसके ऊपर आप एक क्लाइंट की पॉलिसी बना सकते हो आराम से आप उनको 40-50 हजार का कंसल्टेंसी का चार्ज कर सकते हो तो देयर इज स्कोप ऑफ दैट इन द लीव पॉलिसी डिजाइन टू गाइड देम कि आपका लीव पॉलिसी कैसे होगा कैसे एजुकेशन होगा सी वी ऑल फ्रेंड नीड्स टू एजुकेट देम No, there is no mention in the regulation कि आपको 2 साल के बाद मिलेगा तो 6 महीने में भी छोटा लीव बैलेंस को देना जरूरी है नहीं देता है बंदा लेबर को जा सकता है कंपनी का समस्या हो जाएगा See, all these benefits are given these are all benefits given by the government but we as an employees we as a stakeholder we as a citizens of India whatever we call it we need to be aware of our benefits and the role of chartered accountant is for the betterment of society. Similarly, I as an actuary, we from the institute have the objective that how we can contribute to the society. That's why wherever I make any presentation, I try to give the glimpse of the benefits which are given by the government. Because government have already done their part to give the benefit. Now it is the part of the user to take the benefit. I think this is fine from my side.
Kartikey, I have heard you before also, and I really admire you because at such a young age, such deep knowledge about the subject and the way you explained everyone, it made the topic very interesting. And just the time was the barrier. Otherwise, आप बोलते रहते हम सुनते रहते. So with these few words, I would like to give a hearty vote of thanks from the side of WRC and everyone present. We conclude this and immediately start the next session. We will start the next section of the book time by building the building.
Good evening once again. We move to the last session of this seminar on all the insurance companies and opportunities. The last one, critical aspects of auditing and life insurance companies. And we have Vikas Gupta. So thank you so much for being there. I'll request Uncle Gupta ji to kindly come and please introduce our speaker for the day.
Vikas is the chartered accountant and certified information system auditor. He is a partner in risk advisory services at Haribhakti and Company LLP Chartered Accountants. He brings with him over 18 years of experience in audit of insurance companies, life, general health, mutual funds and AMCs, fund accountants, pension funds, alternate investment funds, AIFs, etc. He has designed and implemented IFCs for major life, general and health insurance companies, asset management companies and NBFCs. With this small introduction, sir, we welcome you all. Welcome you with a huge round of applause. We have request Hemant Jain, Vishal Bhai and myself to give a memento. Sir, I request you, please.
So good evening, everyone. I think first of all, there is some error in the topic which is mentioned over there. So it's not only auditing, it's only IFC. So I thank you, WIRC, and my colleague for introduction. And again, the participants who is staying so long and listen to me. And it's my pleasure and honor to be here and give my views and thoughts to you. But to start with this, we will try to debate this, the summarized version of the IFC, because if we see the guidance note of the regulation, it works into pages and pages. But I have summarized this right as best possible into 21 slides. Because 21 slides will give an overview and what needs to be done specifically for insurance company. Based on the exposure experience which we have for last 1.5 decades in this industry, which we have done. So with your permission, so the contents of the learning objectives which we have today. The brief overview of IFC, a slide on this. Then the approach and methodology. There's the general approach which we follow to all the industries, nothing to insurance or somewhere, it's for all the companies all across. Then this one is critical, the phases in IFC and the critical components of IFC RCN. So which all fields are required, which are mandatory, some are good to have, some are usually required in this. Then the areas to be covered for comprehensive IFC in insurance industry. Because for example, as my colleague Mr. Kandoi said, so actually this down. So IFC won't be complete. So it can't be reached out over there, for example. So all the areas which are covered with the sub areas which we need to cover over there as a whole, so those will be given. So the interest of time I will try to give the critical aspects over there. So once if you are doing this assignment planning of the insurance company, so that can be useful, helpful to you. Then out of these all 25-30 odd areas, we have taken one area, which is a regulatory part also, a critical part. So those we will run through the IFC, the Excel spreadsheet, how the risks are designed, what the components over there, how the controls are defined, and we'll take it ahead. Then again a slide on the ELCs, the active control, the ITGC, then some dashboards. Because once you complete the IFC, there will be some 100 or more or less observations which you have. So presenting all these to management committee will be a challenge. So how to present them? So we are giving some 15-20 and maximum half an hour to manage audit committee. So all the exposure which we are presenting to companies, what they require, how we can do. And to close the session with the challenges and the consultants on the auditor's preparation and prerequisites which are being required to start with the assignment. These are some of the abbreviations which will be used while we discuss. It's better we know about this, so it is okay. I could pass intercontrol over financial reporting. TOD is test of design. We will discuss just to maybe speaking this term, so it's better we know beforehand. TOD is test of control, the operating effectiveness. And IT is information provided by entity. ELC, we have discussed all these are normal things. The references are Companies Act, obviously the ICI guidelines, constitutes, and I exposure over here. So this one slide is trying to summarize the definition of IFC to comply with that provision, what the Companies Act require, what should be done. The second point is on that. So the second part over here, what we say, what needs to be done. So all these slides, the 20 slides, it's an explanation of these. Yeah, how we should prepare IFC for the testing procedure, how to design the IFC and all in detail, we will be discussing those. And thirdly, the responsibility which are defined. So what Companies Act says, IFC is a set of policies and procedures to ensure orderly and efficient conduct of business. Which include administration policies, obviously. The important aspect is safeguarding of the assets of the company. But this, the third point, prevention, detection of frauds and errors. So in general, internal audit is not included, but for IFP, we have to give a view about the frauds and errors which are prevented, detected via policies and other things. So it's a critical point over here. The accuracy and completeness of accounting records, which include authorizations and all the related aspects. The timely preparation of relevant information. So there's the definition, but how one need to implement this? So what is required, what needs to be done and how needs to be done, what is important? So the first point is a demonstrable documentary control framework needs to be there, a risk and control framework. Second, documentation of control to mitigate the risk which have been identified. The fixing of ownership responsibilities over there, the fraud. And the last part, the second stage is testing of design and the operating effectiveness of these controls. And again, just responsibilities, the board responsibility for different provision of companies act, listing agreements and all the boards, the audit committees, the auditors, responsibilities and all. That's the quotation. And again, there are penalty provisions over there. So this is the first slide of the overview. Now this is the approach and methodology, as we said, the general approach for all the areas for any of the company which has to be doing the right thing. So first one will be identification of risk and development of controls. So what can go wrong? So each of the area. If you take any area, for example, investment area over here. So what regulations are required? It's regulation I'm saying because in this industry, it's a highly regulated. So regulation we can't ignore. For example, generally, just a simple example, the policies and all. For example, policy needs to be reviewed. We can't say it needs to be reviewed by in a 3 months or 5 months basis. There is some specific regulation. For example, investment policy SOP. It has to be approved by board or an annual basis. So we should be knowing that. Otherwise, we cannot have it can be maybe on a periodic basis or 3 month basis, 3 year basis. So regulatory things are also very much important. So what can go wrong at the micro level, if you have to design over there, again in the examples. We will be discussing those, or we can frame the risk and frame the controls over there. Secondly, again, the controls and the classification of control. It may be preventive, detective, it's key, non-key, maybe intelligent control or the other personal controls, all those things. The definition of ownership. So considering insurance company, there are so many departments, so many functions. So the ownership, who needs to perform the owner of the control. There is multiple persons, those we need to mention and define over there. This ESA control self-assessment, which is to be conducted by the industry, the company itself, the in-house being done apart from our testing which we do. The control testing strategy, again, we have guys on road, how we will do. And this is control and continuous control monitoring. So which is done on daily basis as such, depending upon the frequency of control. Again, same thing, just the output. If we are getting this project, we are working on this project, so what are the outputs will be here over here? So first one, again, same development of control framework. Review of adequacy of process and policies. So the policy process needs to be reviewed by us before we are designing the control. And about gaps, if something is there, those needs to be given. It's part of review of policies and procedures which they are having. Review of ELC country level controls. Review of financial statement, and material accounts, and what can go wrong over there. This scoping and effectiveness of filing. We need system access control and SODs, all those things over there. Then this part is typical over here. Carrying the binding of management and the state auditor. Because ultimately we will be working in the taxi consultant or maybe internal auditor. So periodic meetings with the management and the statutory out of the company is very important to get their buying. Otherwise, because on the basis of our work, we will be giving confirmation to the auditor's report and the other. We will be doing their sampling, but our will be basically much in depth which we have to do. The meetings and workshops which we need to conduct with the heads. And the last part is regarding perform design effectiveness, the operational effectiveness, and the submission of console report. When the report, basically what we have is one RCM, ICRCM, which presents thousands of risk and controls over there. The second is our recommendation observation from the failure, the control design one, and the third will be operating effectiveness, the 3 parts. So basically, these three are the base documents. On the basis of this, we prepare the report, which is the executive summary for audit committee of management. Now, the third part is to discuss about those that people should have. So these are some of the mandatory things, some of the recommendatory things, some things which will be useful for some of the dashboard presentation. So each critical field, all the things will discuss quickly. I think we have sufficient time, there is no worry. You can be fast, don't hesitate to interrupt me. So the first part will be design of control, as I said. So 2 slides on this. The second part will be test of control. So what is required over here? Let's start with the design of control. So the very first column, the field will be area. So insurance there will be around 25-30 odd areas will be there. And in our views, everything needs to be covered. We can't ignore anything. The depth before, but all the areas, even premium policies, everything should be covered as part of IFC. So earlier we have taken this premium collection, accounting and reconciliation. So these sub-areas, it will be having different sub-areas over there, which may include premium computation, premium accounting, premium banking, all those things. Now this third one is good to have, which is the numbering of the risk. Because once you have many risks, it's better we have a lot more number over there. So nomenclature PR is just premium reconciliation we have given, and R1, R2, R3. Now this part is this description. So all the risks which are potential faced by the industry in that sector, in that process, needs to be mentioned over here. For example, in this area we have the risk of incorrect computation. That's the very first risk which come in mind. There is the incorrect upload of premium matrix in premium computation system, because this is done automatically. There is no manual computation being done over there. Then again, one more we can say short deposit of bank, the collections which are in cash, they are not deposited, or the short deposit, or there is some misappropriation, so those risks have to be covered. So just 3 years given, again it will run into multiple risks and all. Then our guidelines say this assertions and all. So assertions are existence or occurrence, the rights of obligation, disclosure of presentation, completeness, accuracy, valuation. So each of these risks we divide with in maybe one or more of the assertions. For example, the first one, incorrect computation, will be completeness and accuracy. So those positions need to divide this assertion. Second, nature of risk. Again, to each is the nature, operational, financial, regulatory, strategic, we need to give more explanation on this. Classification, high, medium, critical. This is our audit and the understanding of the company and discussion with management. So this was the risk part which we have. And second is control part. So control number on the same line. Then what controls we can have over there? For example, incorrect computation. When insurance industry these are auto computed, it makes a second control. So that's the control, for example, over here. And same way for the others, UATs are being conducted with make a check sign also, and also which we can mention over here. Now this is important because each process, the area which you mentioned over here, premium reconciliation, it may have different departments over there, because new business department, the branches, maybe zonal offices, the accounts team, all will be involved. So who is conducting that sub area, we need to mention over here. It will be helpful afterwards, and after in the time of testing and all. So once we are going to branch, once we do multiple things, premium collection, all those things, then claims will be involved, some other aspects. So we can filter out that, and all those points can be checked at once at the branches and all. So important to have this different department mentioned over here. Now this control, division of this control, as we said, preventive, the latest sign-off, score and principle, detective, periodic reconciliation. So classification of those controls into this preventive, detective, and all those things, and key, non-key which we have. Again, for insurance industry, many of the controls are automated. And again, the manual controls, there is a tendency to transition to automated controls. Even the audit committees before, they want a snapshot of the what are internal, what are manual, how many are automated, how they can move from manual to automated, which is the question we asked by them. So this is the critical thing. So it's better we have this mentioned in our thing too. That again, multiple systems are used. So for that specific sub areas of process which we are doing, and this system is being used or is not being used, so we mention over there. Policy admin system, maybe actuarial system for the specific area, investment system, and we like some doubts. This concept is operating frequency. So the controls are different frequencies are there. This annual, yearly closure, annual, for example, quarterly closure, monthly frequency, weekly reconciliation, and then the daily. For example, yearly premium collection closing, that's the daily control which we have. Many names are there. So forms are being submitted, it's many names are there. And as needed, maybe changes to premium metrics in system, for example. So to define our RCM, the frequency of this control. This frequency is important for testing purpose because samples is for guidance known by LCM, the different samples defined over there. So we have to follow this. Now again, this for large organization, we mentioned the unit office also is much better. The central office owner head of branch classification. So this is the first part which we have on the design of control. I think it's pretty simple and nothing, there's the questions or something is there, we can answer that. So second, we start with the test of controls over here. Again, the sampling technique needs to be mentioned for each of the risk period, the control we have tested. There will be random sampling here to the suggested as per the auditing standards and all. The samples reviewed, number of samples that we mentioned over there. Again, as per ICA guidance now. The testing period may be same period or prior period items. Now, from here our conclusion starts. So the conclusion will be three. First is control design conclusion. Where the control which has been existing in the company is effective or ineffective. If it is ineffective, our recommendation on this is strengthen or. Then second, design is there, but implementation conclusion. This design is not implemented. So that is to be checked whether it's implemented, not implemented, partially implemented. Then other part is operating effectiveness. So whether it's effective, ineffective, or partially effective, maybe 8 out of 10 the samples which we have seen. Now the deficiency needs to be mentioned over there. For example, the ESOP is not in place or absence of data channel control or the thing. And this is the final conclusion, whether the control is passed or it has failed. The activity performed for control review, maybe examination, some observation, inquiries which we have conducted. And control year, tested current year or previous financial year. The IP used for testing, the document which has been verified. Any significant finding issues to be reported. Risk of material misstatement of fraud risk against each control is better to mention to cover this aspect also. Finding observations, if we have noted lumps or recommendation efficiency, those to be included. And the classification of inherent and residual risk, whether it's normal, significant, etc. So this will complete your structure, the framework of the RCM as well. For the areas specific to insurance, which we are saying, which will be helpful in conducting this project. So those are the three broad areas again for RCM sites, which we do. One is entity level control, which we discuss, then process level controls, different processes which we do, and ITGC, information technology, general control, which are we cover. So a couple of slides on this. These are the areas which are required, and these sub areas, in these processes, these sub critical aspects, we need to be touched upon as part of IFC. So if something is missed out, it won't be comprehensive and won't be giving a fair view of the controls in the company as such. YouTube is, for example, you are a customer for the company. So whether there is more two IDs for you, it has to be one person. So review is being conducted. So basis of the PAN or the number. So for Vikas Gupta, there should not be two IDs, two policies as well. So for insurance, the interest is being done. That's the review. So quickly just run through these areas and these sub areas over there. Actuarial process. So as Mr. Kandoi has said, is covered explicitly, but some of the important areas we need to take care of. The controls over solvency margin, claims under litigation, the reserve sign-offs. Again, assumptions which are made are approved by contradiction of the company is important. The preparation of borrows for reinsurance, which is required. So again, legal checker, controls and other things need to be looked at. ALM is important. Asset liability management over here, and the IRDA reporting. So each department IRDA reporting may be there because multiple reports have been submitted which cannot, and these are regulatory submissions, so this cannot be interact or control needs to be mentioned over there.
Again, the same lines we have taken, the flow is from the start, you can say the actual function, then product development and FNU, define the use or using by now the new concept is just now. So again, product ideation, the management and launch, so the controls over there which we have, the product change management, everything which we do. Product pricing, the first step will be the pricing over there. Then again, specific sub areas, we need to cover the sensitivity testing, pricing models, things to be done. Then in the flow, we have the new business processing, the application forms, logins, we should cover the logins, the personal details, review, which we spoke, policy dispatch, time duty, backdating of policy, and some other aspects are there. The premium collection, so these are some of the areas which we need to cover. Again, for regulatory part, there is one section 54 DP, which is the deposit of premium 24 hours. So all those regulatory aspects need to be covered in our otherwise it won't be again a full for a complete argument as such. So insurance area, so one needs to know the regulations too for making this. Specifically for insurance, maybe retail sector as a whole, we can say. Even the same as underwriting process, the refund process, we have different sub areas and the risk controls over there. Anti-money laundering is important for compliances part as such. The commission calculation, again, these huge payout and commission calculations and all, needs to be covered in detail. Again, the master computation, commission only for insured policies, the commission on portability, parent bank account, text over there. So these are the areas which we do. Yeah, clawback. It has been cancelled on the cancellation parameter, so the commission will provision from those. Again, here for regulatory means there are limits defined by the IRDA, so those limits cannot be exceeded. So those points also need to be covered. The reinsurance part, the claims again are major component for insurance industry which we have. The investment again for investment, the front office, mid office and back office which we need to cover. Again, here many regulations are there, which needs to be taken care of. Incentives are the payment which are done. The financial, which is general for all the company, but here we have master circulars by IRDA, so those needs to be taken care of. Otherwise, the area bank reconciliation, arbitrage, the calling of expense, income, those are general for any company. So these just classified into 4 business functions, accounting and finance and other functions. The policies, everything, outsourcing, legal, sufficiency, procurement. So we need to include the depth may vary, but it should be probably. So what we have discussed quickly is just a practical case we will take over here. So one sample area of investment operations we have taken. This field we have discussed before, which needs to be mentioned in the RCMs. Again, these are the sub areas. So sub areas we can say the segregation of duties. Again, this is regulatory requirement. The fund managers in the front office, the background front office is they make the investment decisions and all the purchase of securities, everything which is in the front office. So here segregation is to be by the fund manager dealer. It's a regulatory thing, they can't be same. So those regulations we need to be knowing to incorporate in the IFC. Otherwise, if this is not complying, it won't be correct as such. Then the index notice requisition. Again, for requisition, so how it's being done, whether it's proper authorization is there, mandates are there, so those that's the definition of risk. Then again, classification, rights and obligation or existence and operance. The control which we have over there, the preventing automated all these things. The flow which we have discussed before. Delegation of authority, investment justification, again, this is required as per regulation, but now it has been previously all the reach justification. So that needs to be covered over there. The investment policy, as we said, the periodic review needs to be there, needs to be periodically reviewed by the board and IC investment committee meetings. And system access rights, the price execution, which is important. The system closure, the cutoff procedure, so each and every area which we need to consider. The securities which are required by regulation, whether approved or unapproved. And again, for each area, we should include the BCP part also, because what happens in some of the companies, the BCP is conducted for
maybe one of the application, but the other applications are being ignored or maybe left out. So it's better for each of the area to include the BCP also, BCP, system controls, UATs, the hang-ups over there. For each checklist, we have these parts, so it's much better for our testing also and to ensure all the aspects are being covered. And again, for dealing rules, there are standards set over there, standard means regulatory requirements, so all those need to be mentioned as part of one. So this is example for one area. Again, we need to understand the regulatory environment for the process and then implement just to define the risk over there and the controls which are required. I think this goes in the same way the main crux have given. We go back to our slide. For the ELCs, so these are the entity level controls, the overview. So basically, that's the co-editor. So what is to be covered over here? The fraud as is part of the definition, you have to see the fraud control framework, anti-fraud policies over there. The code of conduct and the ethics which the company has, the whistleblower policy, the board committees formulation, and management control over various departments to be seen, corporate governance, it's a whole internet function, is management function, and communication with regulators. These are the broad areas which got to be covered as part of entity level controls. So which will have that overview. Again, ITGC. So ITGC as such will be a huge area, but IT will be a huge area, but general controls, this 6 to 7 points need to be covered. The IT policies, the adequacy of policy and procedures over there, which may include on incident, change management, ECP, DRP, cyber assurance, cyber security as such. The user management, the logical access, physical access controls over there, the change management, incident management, data backup, ECP, DRP, information privacy, data security. So at least these things should be mentioned as part of ITGC. So with this, once you work on this, the documentation, the IFC would be as such standardized, it will be done for the insurance company and the company. Again, some dashboards as such. So it's better we give a bird's eye view to the management, the audit committees. For bird's eye view, what we said, the number of areas, the process which we have done, the total number of risk and controls, the numerical examples over there, the mention of those, number of areas which we have over there, the number of observations. One part is design, the other part is operational effectiveness, those observations, and the material impact which we have. Then second is the overview of the recommendation which we have given to different processes. Then recommendations is better to classify all the risk into different segmentation as such. For example, there will be key controls which are missing, which we have done. So all those we can classify separately. And one segment can be policy formulation, policy approvals, and all those things. So all policy related points which we have. And good to have controls. Because controls we can't say good, better, or best controls. It's a transition, it's a journey as such. So controls are there, but we are recommending some additional controls over there. So this is the design part, and secondly, operational effectiveness recommendation, strengthening of documentation, the documents, the controls will be existing, but it's not documented because the second time which we have seen in our experience, the controls are there, but these are not documented. Maybe some verbal, for example, bank reconciliation, if the person is there, it's being seen, but there is no document signed off maintained. So those documentation is very important because we have the regulation important in that financial area. But controls are existing before that also. The purpose of this is to have a structured documentation to establish, to demonstrate that these are being done and nothing is missed out. And strengthening operational efficiency for any control which we have. These are just the presentation of key summaries to the management which we can have. These are illustrative, not specific to any industry, we can say. So just the essence of SOP manual, so the existing practice what we have, we just mentioned that to the board, and the recommendations which we have to give, maybe risk the entity level controls, any other, this is just two or three like points on it. Again, some of the experience audit committee wants classification of controls into IT and non-IT. That was required by one of the audit committee. So it's important we present that those also, these are IT controls, the non-IT controls, and there's the transition period which we have, there's the, the plans of the companies to transit from manual to automated control. Now challenges again for this industry, specifically is the regulatory requirements which one need to know before starting this taking the this engagement. Then insurance business, obviously one person understand the business, they can work on this, otherwise it won't be justice to the work which we do. Then again time involvement, because as we have seen for delivering this project, it takes especially around 50% over. The time involvement, the team deployment should be pre-planned, otherwise the effort estimation will be different and difficult for us as such before the. I think if you have covered this thing, if any specific thing is there, I should be glad to answer.
Sir, like the insurance company have risk registers as well. So if they have a detailed risk register having thousands of controls over there and they have not prepared for any IC document. So as an auditor, what should be our view?
No, risk registers are there, and since but the motive of this ISP and all, so we to see over there. So again, there will be replica of which we can say many of the things will be same. This will be same, but this needs to be prepared
Separately.
separately, yeah, which is being done, and I think all the companies are doing. Because the asking risk register won't cover everything over here. What details we have taken, some of it may not be there, so this needs to be covered and separately. Many of the points they will overlap for all. Fine. Yeah.
So, in ISP, process walkthrough, all the test of automated controls by using some data which need to failure of control. So, sir, in that, the client suggests to put the test controls in UAT. Like for investment partners, they have tried to, they were not ready for the live environment because even for teams, which may overlap their limit reports and everything. So, in that case, many times UAT's controls can be different from the live environment control. So, what should we like suggest to the client? Like, it is better to go for live environment testing.
It's better to go for live environment. Example which we have taken, we have done this testing in different functions for numerous assignments. For this purpose, the software which we do. So, there is testing control, for example, the limit exclusion of which we have said. So, the system will show the exclusion of, they will show you whether the controls are implemented over there. But the last leg, the submission of that, so that needs to be done. We cannot input the data over there because we go to the system then. But it is so okay, what controls are there. But doing with the UAT environment, the production environment, we can't have the proper view then. If we are testing on UAT everything, for the non-production environment, and the production environment is different, we can't give a proper views over there. So we need not process that case. Or dummies can be created. Anyway, dummies can be done. For example, in branches for logins and all which we are doing. So dummies, if the dummy policy is being created, and we can verify the full process over there. Actually, majorly the controls will be clear, but for example, one risk, multiple controls. So a complexity control. So over there can be key and non-key control. But majorly what we have delivered out of the 1,000 plus, so majority are key controls. So suppose for any area, we have only one control over there, we can't say non-key control as such. But with multiple controls, we can say that. So even if one is not functioning, so we can't qualify the report as such with a negative opinion. So that's the problem. Fine, so I think I take the report that I use. That's it now. Thank you.
So thank you very much, sir. So all the members for inviting with I have seen all this for this thing. So just to with your permission, I want to answer the one question they have asked related to the risk register maintained by the company. So generally the risk register are maintained by the company, but what happens the IFC is the requirement as per the company then. where you give the comfort to the board of directors. So their specific RP has to be prepared and testing has to be done. Because on that IFC report, you will give a comfort to the board of directors and then board of directors basis that, the statutory auditor will get a comfort. So obviously the risk factor may be a little bar, but specific to the guidelines issued by the institute and all of that, it is a mandatory to have a separate RP to be prepared by the company. So that's about that.
Thank you.
So, yeah, thank you very much for coming here from the and thank you all the members for have a patient listening for knowing about the insurance sector little bit from the insurance expert people. So thank you very much.